well, but not so in a dramatic fashion because we were at about 2 lakh contracts. Now, look at this. We are at 3.2 lakh long contracts as of yesterday's close in terms of index futures. And going into the election result, we were net short 3.5 lakh contracts. So in terms of FII positioning in index futures, we are now at an extreme, and which basically means that you don't have shorts in the system where if the market falls, you cover and you kind of that provides a bit of a buffer, and that's why we say that it provides some comfort, downside protection, because you've got people on both sides of the trade. This is a bit one way now, and that's the reason why, at least in the near term, I think you've got to be a little careful. I'll get to sort of levels, etc. in a bit from now. Now, overnight action has been pretty benign. Nasdaq has been up about 0.3%. Dollar index was down. The 10-year lost about 5 basis points. Yields lost about 5 basis points. That's essentially Wall Street. Oil prices have seen a bit of a leg up. We're at about $86.50 per barrel. You got later today the US core PCE data. As we are speaking, by the way, I don't know if it's still on, but it was on the morning and I was watching the presidential debate between President Biden and ex-President Trump was on. And I think, there'll be a lot of hand-wringing and analysis and what was said, and they've not gotten to the trade aspects and China and tariffs, etc. So, I think markets, at least in the morning and first half, will digest a lot of that. So I just want to straight away come to the levels in terms of what the setup and how you should approach things. So it looks like we will, before anything else, get to the upper Bollinger Bands. It's a level that we've put up at least for the last 3 days, and we've been inching higher and higher towards those levels. That number, as of yesterday's close, now stands at 24,272. That's you should target that logically from here on, given the momentum that we have. But I think at the same time, if you're not already in, and if you're making money, that's great. I mean, you trail some of these hourly moving averages as stops and sort of stay long. And to do that, supports are the 20 hourly. I mean, we're not looking at daily because they're sort of far away because the index has run away. The 20 hourly is 23,820. That's the nearest. And then the 23,722 level, which is the 40 hourly exponential moving average. Fresh long positions. I think you've got to be a little careful. You're going into the weekend, etc. as well. But if you're making money and you're sort of already long, I think, you stay long with these trailing stops. Bank Nifty ended lower yesterday. Will it raise questions about whether momentum is flagging? I don't think so, not yet. Supports here for the Nifty Bank come in at the 40 hourly average, which is 52,179. And I think here, that's the trailing stop that you need to use, which is about 1.5% away from where we left off yesterday. Now, two things I just want to add, and Rima will talk more about this. Telecom tariff hikes have started, right? Jio has taken the lead. So stocks have done extremely well. So it'll be interesting whether, there is more here. I think there perhaps is more here. This is, as many have pointed out, the first of many hikes. Not many, but a phase where you will see tariffs being readjusted higher. So that's one. And the second, of course, is something we've been talking about, which is India bonds. Indian government bonds are going to be part of global benchmark indices. In terms of immediate market impact today, tomorrow, nothing. I think, a lot of pre-positioning, etc. has happened. But this is, on a medium-term basis, good for the cost of capital to go lower, to head lower for everybody, for government, for corporates, etc., because you got another large block of buyers who were not there so far, which is foreigners. So I think, just want to leave this thought there as well. The GIFT Nifty will indicate what the opening is looking like. It's a 100-point higher start. It's just been a great market. But as I said, if you're not already long, take this Friday to just reflect. And you're very convinced about single stocks, and there's lots of action there. I think that's a better way to do, because the markets run up very, very sharply. If you're already in, trail these stops that we mentioned early on. Sonia.
Oh, absolutely. We were just talking about how India played so well yesterday. Just look at the market, right? Look at the bulls and how well they're playing. The July series has gotten off with a bang, and you have the Nifty crossing so many milestones, 24,000, the Sensex crossing 79,000 for the first time ever. And if you map just the last 1 month, right, or the series for that matter, the Nifty is now up 5% in the last 1 month. This series, the Nifty is up almost about 7-odd%, and money has been coming in thick and fast. So just look at that. The FIIs have bought 7,650 crores in the cash markets, and we've had a lot of stocks in focus. A Of course, today telecom stocks will be in focus through the course of the day. It's that first tariff hike that Reliance Jio has come up with after 2.5 years. It was much anticipated. In fact, in the last few days, if you remember, we pointed it out as well that there's large delivery buying that has picked up in Reliance Industries particularly. So will Reliance assume leadership, and then bang comes the, the tariff hike. So definitely this is one stock. Brokerages have raised their earnings estimate and target prices on names like Reliance, especially names like Jefferies that also believe that, stocks like Bharti will move forward now with tariff hike, and they have a buy call there as well. So this is one focus area. For the global markets, it was largely positive, mildly positive actually for the US markets, but there's lots happening there as well, both in terms of the growth numbers, the GDP data, that has been revised higher. Brent crude prices are now above $86 a barrel, so there's plenty to talk about. But for our own markets, it is momentum that has really picked up. And, every sort of wall of worry has been climbed by this market, continue to sit at new highs. But I guess at some point, some caution has to be exercised, especially in the mid and small cap space. So it wouldn't be such a bad thing to kind of maybe take some profits in, names that are running up a lot. But by and large, this is a healthy looking screen.
Oh, absolutely. The mid-cap index, though it paused this week, in the June series, it's outperformed the benchmark indices. In the June series, the mid-cap index is up 7.8%. The small-cap index is up 10.5%. Right? So, it's, this pause that has come through is after a long period of, big outperformance. And, this is the performance of, the Indian markets this week and June. And compare it with the rest of the global markets, and you would see this week, the Indian markets are stark outperformers. And that's helped us outperform even in the month of June. Barring at Taiwan. Taiwan's the only index which has outperformed India in the month of June. And that's courtesy their exposure to semiconductors. But other than that, India has been a rank outperformer this week. Though year to date, India is up close to about 10.5% on the Nifty, 20% on the mid-cap index. But you have an S&P 500, which is up 15% this week. Nasdaq is nearly inching towards a 20% rally this week. Taiwan, Nikkei. So a lot of global markets have outperformed India on a year-to-date basis. But, it's just amazing, right? Just like that, half the year is done. Yeah. When we come back on Monday, it's going to be 1st of July. And I'm not too sure whether, these semi-annual rebalances take place in the portfolio. But that's also something that the street is going to be watching.
Guys, I just want to mention one thing, that Nike overnight has come out with its slowest sales in the last many years and has revised its guidance lower. The stock actually fell almost, I think, about 10-12% or so. Just goes to show that, the order of the day has perhaps changed, right? I mean, in the last decade or so, so many new shoe brands, athleisure brands have come out and overtaken Nike. At one point in time, Nike was like the market leader, right? So it just goes to show that things are, of course, changing.
There's, when you spoke about Nike, Walgreens was down 22%. Yeah. And that's when they slashed their guidance for the full year. Another stock, H&M. Also down close to about 13% yesterday. So consumer, the retail stocks, it underperformed massively yesterday, and that's because of a downbeat assessment.
Correct.
People are saying that you can't charge more for the same value. You have to add more value. So across the board, not just Nike, but even the other consumer retail stocks were under massive pressure. Walgreens 22%, H&M down 13%.
Well, if only Apple could listen to that, right? They charge more every year for the same product. Okay, but let's move on and start with some market views, actually some money market views this morning. As we kickstart a brand new day of trade, Lakshmanan B of Federal Bank says that this week the dollar INR remained quite stable, trading within a narrow 20 paise range. He says the strengthening of the dollar index, which is hovering around 2-month highs, is weighing on all the currencies, resulting in the yen trading at a 38-year low and the yuan at an 8-month low. However, he adds, this month we've seen robust FPI inflows to the tune of $4 billion in equities and bond markets, which lends support to the rupee, and thus he expects the dollar INR pair to trade in a range of 83.30 to 83.65.
Okay, on bonds, we've got V. Lakshmanan, who says that Indian government bond yields inch marginally higher, tracking the rise in US Treasuries ahead of the inclusion of Indian bonds in the JP Morgan EM debt index. He says MPC minutes continue to signal caution on the inflation trajectory. He adds most members considered a wait-and-watch approach given the headroom from Brazilian growth prospects. Lakshmanan says coming session could see the 10-year trade between 6.9 to 7.05%.
And we have lots of stock-specific action to track today, and we'll get to it in our special Top 10 segment. The stocks we're looking at: Reliance, Bharti Airtel, Vodafone Idea, JSW Infra, HCL Tech, Sami Hotels, Star Health and Walkhart. These stocks could open up in the green. On the way down, Navkar Corp and Polycab are likely to open in the red.
Matt Orton is with us. He's U.S. market strategist and chief market strategist at Raymond James Investment. Matt, great to have you with us here. Thank you for your time. I'm sure you were watching the debate. I'm not sure if it's still on. Were you?
I was watching it up till almost the end.
Okay. So who won?
It's really hard to say, Prashant. You know, it was very light on policy, I would say. There was a lot of barbs that were traded back and forth. There was a lot of talking about the key points they wanted to both get across. But I don't think that much substance was actually discussed during the debates, which frankly, from a market perspective, isn't necessarily a bad thing. At some point, we're going to have to focus on tariffs and some fiscal discussions around the deficit and the debt. But really, I think it's going to be status quo for the market, and it's just going to be focused on the fundamentals. We've got core PCE inflation tomorrow, and that's really going to be the big mover because so many investors are focused on whether this very slow drop in inflation is in fact going to be sustainable. So I think that'll be the key thing to watch tomorrow when the U.S. opens.
Just one thing, was there any mention of China at all? Because I watched not all of it, but was China mentioned, tariffs, etc.? Nothing.
Not from what I heard. It was all about domestic policy, and I think Afghanistan was mentioned maybe once or twice along with Ukraine.
Okay.
Matt, hi, good morning. Since we're talking about China, right, let's also get your view on the India versus China debate, because many people do believe that India has run up quite a bit and perhaps now the better place to be is in China. Your thoughts?
Yeah, good morning, Sonia. I absolutely agree. You know, when I was with you all a couple of weeks ago, I think we were talking about the India versus China trade as well. And I continue to believe that China is really just a short-term trade for investors, and India is the long-term investment play. And I think you're starting to see that with behavior from foreign investors. The inclusion in the MB index from a fixed income perspective is huge from an investor sentiment point of view. And what's, I think, most important for India, and I think most exciting about India relative to China, is the growth potential. It's the fact that you have public-private partnerships, you have tangible earnings growth that's supporting the overall economy with a real burgeoning middle class. And all of that comes together to support a very, very dynamic market. And when you look at India, I know you had charts up about Taiwan, the US, and other global markets on a year-to-date basis. What's different about India relative to many of those other global outperformers is the fact that India hasn't just been a narrow market. There's been a number of sectors and single stocks that are all contributing to the gains. There's breadth in India, and that's what a lot of other global markets are lacking. It's been one sector or a handful of stocks that's been largely driving the indices higher. So that's another reason why I encourage investors to continue looking for India and using any sort of downside or sideways movement to maybe make sure that you do have exposure to the country.
In our last conversation, Matt, you spoke about liking L&T, ICICI Bank, and M&M. I think these were three of your preferred stocks in India. Do you still like just the same three names, or have you made any changes, any tweaks to your portfolio on recommendations when it comes to Indian stocks?
So ICICI Bank is still one of my top picks. I just believe the fact that you have quality loan growth in the upper to middle double digits is incredibly important. You've got an expanding private bank plus good return of capital. I think that's one of my top picks in India overall. L&T, I think, is a little bit more of a wait and see. I've lightened positioning a little bit over there, and I've exchanged that a little bit for starting to look at Indian technology as well. It's been an area I've been very hesitant to move into just because indications with respect to global spending haven't been that strong, but you've seen the likes of Infosys. You're seeing a little bit more positivity coming up, and valuations there are still relatively attractive. But another top pick for me stays in the infrastructure theme. Infrastructure overall is, I think, going to dominate over the next 3 to 5 years. And so as an investor, you want to have exposure to that. So Adani Ports still makes a lot of sense. Ambuja Cements, which has exposure to that theme. I think those are all picks that are worth looking at, and particularly if you do get some downside to pick up.
Okay, well, we will thank you on that note, Matt. Have a good one, have a good weekend, and we'll touch base with you again very soon. That's the word coming in on the market, on global markets, on how you should approach India. And ICICI Bank is one of his top picks in India. Well, that stock is at a fresh record high as well. Let's slip into a quick break. On the other side, our list of top 10 stocks is lined up. Stay tuned.
On cement, we generally are positive on the broader infra space, including cement. Obviously, it plays into both the housing and the manufacturing sector. Sequentially, there could be a bit of softness in there because of the construction activity slowing down and the monsoons and all. But I think in general, we still like the sector. Without getting into single names in here, we still like the largest cement player within our coverage in terms of our buy rating. We have a sort of more neutralish rating on the rest of the names. So we do think that with the consolidation going on, the bigger players should benefit, and we are constructive on the stock in particular. But as I said, within the broader sort of building materials and infra space, that's where our pecking order lies.
We had seen that there were difficulties for investment holding companies to be able to delist because of the holding company discount and other related matters. So we have now facilitated that through a scheme of arrangement, they can do selective capital reduction. And what this will mean really is that they will be able to pass on the benefit of the encashment of their holdings to the extent that they are holding liquid shares, listed shares, to their investors. And the requirement is that at least 75% of such companies, their fair value, should be directly in listed companies.
Welcome back. Hope you're having a good Friday of trade. Well, looks like the bulls are having a great Friday. I mean, the GIFT Nifty is suggesting a very strong start, up about 100 points. Our entire team is joining in to help us understand what are the big stocks to watch out for. Of course, all eyes will be on that tariff revision by Reliance Jio. Finally, it's come through, Reema. Something that the street was expecting for a while.
Oh, yes. So let's first, get to the news now. Jio has taken the lead and announced a tariff increase. This is the first tariff increase in 2.5 years. The last one was in December of 2021, and it was also a 20% tariff increase. This time, the tariff increase ranges from 12.5% going up to 25%. But on a blended basis, it's approximately about 20%. Some of the popular plans are up for you on your screen. The base level, the entry level, the minimum plan is now hiked to 189 rupees per day. There are two other popular plans which offer you 1.5 GB of data per day. The first one, which is the 239 plan, gives you for 28 days, basically a 1-month plan. That has been hiked by 25%. So 239 becomes 299, while the 3-month, same 1.5 GB of data per day for 3 months, is now stands at 799, and that's an increase of close to about 20%. But largely on expected lines. But remember, Reliance is up 5% this week, and Bharti is up more than 4% this week. Jefferies has raised the target price to 3,580 on Reliance Industries. Morgan Stanley is overweight on Reliance Industries. For Bharti, because they expect now that peers will follow through with a similar tariff hike. For Bharti, they're now seeing a new floor price of 1,000 to 1,050 following the tariff hike by Reliance Jio. Now, CLSA has put forth an interesting question. Now, we're all saying that Bharti and Vodafone Idea are going to grab this opportunity and immediately hike. But they're saying the key to watch is if Bharti and Vodafone Idea raise tariff over the coming days, which basically means immediately, or will they follow with a lag and perhaps try and gain some of Jio's subscribers, because now Jio's plans are at a premium to that of its peers. But the standard disclaimer is also up for you on your screen. But Reliance is going to be, Reliance and the telecom stocks will be one of the big stories of the day. But moving on to JSW Infra and Navkar Corp. There is an M&A over here. Vivek joins in with the details. Vivek.
Well, good morning. This particular M&A we had flagged off as early as January 18th, and it's a confirmation of our news break. So what is the development that has happened and that the company JSW Infra has announced overnight? JSW Infra is going to go ahead and acquire 70.37% stake from the promoters of Navkar Corporation. this particular deal has been done at a slight discount to last closing price. So the deal has been done at 95.6 rupees a share. Now, given the fact that they will be acquiring a controlling stake in Navkar Corporation, there is a mandatory open offer that JSW Infra has announced. That 26% open offer is at 105.3 rupees a share. So the deal has an implied enterprise value of close to 1,644 crore, and the company says that this particular deal is expected to close by the third quarter of FY25. What are the assets that JSW Infra is getting? It's a slight adjacency to the current line of business that the company is. Number one is the company gets one container freight terminal and a Gati Shakti terminal at Panvel. Along with that, they get 2 CFS at Panvel as well, and also included is Morbi Inland Container Depot. What InCred says is that this particular transaction is done at 0.75 times price to book FY24, EV to EBITDA is 27.3 times FY24. Along with that, JSW Infra has also gone ahead and made another announcement. They have signed a secured almost 35 years Gati Shakti concession at Arakonam in South India, and on back of that, expect JSW Infra to be in the green. Navkar Corp slight discount, so there will be some red on the stock today.
All right, Vivek, thank you very much for that. Important to note. Well, it's a season of blocks and blocks and more blocks. So HCL Tech is first off the block, but there is, first off the block for a block. Abhishek is here with details. Abhishek, morning.
Morning, Prashant. So, HCL Tech, there will be a block over here, but it's less than 0.5%, which is why seller's name has not been disclosed in the term sheet that I have access to. So, floor price is set at about 1,414.9 per share, which is at a discount of 2.75% to yesterday's closing price. The deal size is about 1,756.5 crore, and quantum is about 0.46% of the equity. It's a cleanup trade, and the sole broker to this deal is Citigroup. Back to you.
Thanks a lot for that. So that's on HCL Tech. But Polycab and Sami Hotels are also in focus. Vivek is here to give us more details on that. Vivek, over to you.
Well, good morning. Remember that this is among the last few days of the trading as far as, where promoters can sell, given the fact that July 1st onwards, there will be, the promoters won't be able to sell given the fact that insider rules will come into effect. So today you're seeing quite a few important deals that could take place. First, they're talking about Sami Hotels. Over here, there's a seller called GTI Capital Alpha, that held 6.24% stake. They are looking to sell up to 3% equity, which is the base size, and the upsize option is 5%. The floor price for this particular deal is just at a 1% discount, so I expect the stock to recover at 187 rupees a share. Now the base deal size is 120 crore, upsize option of close to 193 crore. The second stock, I expect this particular stock to react negatively is Polycab. The promoter and promoter entities are looking to sell up to 2% stake in the company. The offer price, the base size indicates that there could be a discount of up to 6.5% to yesterday's closing. The offer size at the lower end of the price band is over 2,000 crore rupees, and remember there is a lockup of 90 days on further sale of shares by the promoter. Expect some, at least at the open, for Polycab to open in the red.
Thank you very much for that. Over now to Abhishek. Star Health held its investor day yesterday. The key takeaways?
Well, Star Health did hold an investor day yesterday, and they said that they are confident of increasing the premiums by 2x, that is to rupees 30,000 crore, and PAT by 3x, that is to about 2,500 crore under IND-AS over FY24 to 28. FY25 combined ratio can improve by 1 percentage point on a YY basis. Medium-term target is about 95%. Now, Star is fully prepared to implement changes that have been mentioned in the recent master circulation by IRDAI and health insurance over there, wherein the impact is broadly manageable by the company. Star does not consider composite licensing a threat to them. They see that agency area in life protection as an expansion prospect for their product diversification. Back to you.
Okay, thanks a lot for that. So that is on Star Health, but you're also tracking Walk Hard this morning. Abhishek, what's the latest there?
Well, Sonia, they'll hold a press conference at 12:30 p.m. Today on WCK-5222. So this WCK-5222 is a part of the company's drug discovery program, which is in global phase 3 clinical studies program is progressing over here in 9 countries and is estimated to be completed by end of FY25. Back to you.
All right, Abhishek, thank you very much for that. So keep an eye out on Walkhard as well, along with all the other names that we mentioned. Well, here's a quick recap of some of the stocks that we are watching today. So stocks with positive news flow up on your screen. It's Reliance, Bharti, of course, Vodafone Idea, the tariff hikes, JSW, Infra, acquisition, HCL Tech, there's a block, Sami Hotels, Star Health, and there is Walkhard as well, the last one that Abhishek mentioned. And stocks with negative news flow, Navkar Corp and Polycab. So lots of blocks, as I was saying, and that continues. Let's welcome in Manisha, who's now joining in with a roundup of what's top of mind as far as commodities are concerned. Manisha, good morning.
Morning, Prashant. Thank you for that. Well, I'll start with crude oil prices, because they are trading at a 2-month high. The U.S. crude is trading above 82 right now. There is escalating conflict in Middle East. Now, Israel and Lebanon have concerns piling up, and Turkey has expressed support on Lebanon against Israel. So there are these mini regional concerns as well, which seem to be adding premium to prices. This is the reason that you also have the gold prices rebounding from a 3-month lows. Also, the U.S. unemployment data has come in on higher side, and the markets are anticipating a rate cut coming in from Bank of England and China in the month of July. That also is keeping spirits high. But that's not the case for the metal prices, which are headed for the month of June in negative. Copper is now trading at a 2.5-month lows. The China industrial profit numbers for the month of May came in 0.7% higher versus 4% of gains on a month-on-month basis. Also, the strength in US dollar seems to be weighing on in case of metals. I want to quickly talk about sugar as well, because overnight we've seen prices gain up between 3 to 4% at 20 cents a pound now. It's a 2-month highs for sugar. Sugar export curbs continuing from India is one of those reasons. And the second is below normal monsoon, not just in India, but heat waves in Thailand, which is also a big producer of sugar. All of that adding in sense of premium for sugar prices.
Okay, thanks a lot, Manisha, for that. So lots of news flow coming in the commodity space. Let's take a short break. On the other side of the break, Siddharth Khemka of Motilal Oswal Financial Services will be with us for some stock talk. Stay tuned.
Entities which are regulated by us, they are now being mandated that they cannot associate with people who do one of two things, either of two things. One is if they are not registered investment advisors or research analysts, and yet they are giving investment advice or research analysis. The second is, irrespective of whether they are registered or unregistered, if they are making claims on performance or in terms of portfolio performance, their service performance, etc., unless it is specifically provided for them to be able to give that information of performance, if they are making claims without that approval, then again they are breaking the law.
Every time something like this, a deal of this sort happens in any sector for that matter, almost every other company from the sector starts to buzz, and that's what is happening with all the other cement companies today as well. And similar to what we are seeing, lined up some potential acquisition targets, mostly in the southern part of the country, because spoken to experts as well that most of the southern companies are currently dealing with financial duress, so could be some potential acquisition targets there. Sagar Cement is the first one. Incidentally, this is the one that had acquired Andhra Cements from insolvency proceedings, currently has a capacity of 10.5 MTPA, clinker capacity of 6.5, has plants in Telangana, Madhya Pradesh, 3 plants in Andhra and a unit in Odisha as well. Been an underperformer so far over the last 12 months, only 16% higher, and trading at an FY25 EV to EBITDA multiple.
Welcome back. Today is a big day. India is all set to join JP Morgan's GBI Emerging Market Index. Starting today, India becomes the 25th country to join this elite list. Lata now joins in to explain the implications of the same on the bond market. Lata.
Well, it's a big day, of course. You enter what is supposed to be a very hallowed ground. All global investors, or many global investors, watch. How many people watch the GBIEM, the index, Global Bond Index Emerging Markets of JPM? At the moment, $300 billion worth of bonds is benchmarked to this, and we are going to get a 10% weightage, which means 30 billion of bonds will be bought in the course of a year. I'm saying in the year because at the moment the weight will be 1% as of today, and each month it increases by 1% till the entire 10% weight becomes effective in March 2025. Now, what dealers tell us is already $10 billion has entered the market in typical front-running fashion. Now, how much of this belongs to those who are benchmarked, or they are active funds which would have come copying the passive funds, we do not know. So the point is, the reason why all of them may not come in a rush is that many of the FPIs who follow these bond indexes in far-flung countries are not registered in India, and they find it a struggle. The registration process initially could take time. So we must not run away with the feeling that this, 10 billion has already come, 2 billion will come every month, and therefore, our bond prices will rise and yields will fall. Yields will continue to be ruled by how the US yields move, by RBI action, and by, of course, the upcoming budget and the fiscal deficit number. So what you can be sure of is the medium-term story. In the medium term, this entire 30 billion comes, and then you know that the Bloomberg index, emerging markets index, has also included India. So it's another 3-4 billion. Maybe some other indexes will also rise. And as the fiscal deficit improves, the fiscal position improves, more demand and less supply, then, there is rating upgrade. So it looks like a great long-term story. For the moment, what should we expect? Not many people are betting that there will be bunched up buying today. But they don't want to give up on that idea either. People are somewhat worried. Yes, there is 2 billion that becomes effective today. So maybe 1 billion comes, maybe 30% of that comes. So some kind of bunching could come today after London opens, after global markets open. So people will watch out for the second part of the day. But Indian banks are sitting so long on the bond market that will be immediately supplied. So no one is expecting that the yield will move from that 6.98, 6.99. No one is even telling me that it is 6.95 at the moment. Again, on the rupee, there can be a very good impact, but there again, there's this huge counterforce called Reserve Bank. So maybe not much movement in the market, but no one is saying definitely. There is still a bit of a doubt.
Okay, thanks a lot for that. So it's a watershed moment for the Indian markets. Thanks, Lata, for explaining that to us. Siddharth Khemka, the head retail research at Motilal Oswal Financial Services, is joining us now this morning to talk about so many things. By the way, the Nifty implied opening is up 100 points. So looks like it's going to be a solid one. Siddharth, good morning. First thoughts on Reliance Industries. Finally, the tariff hike has come through from Reliance Jio. Much awaited, and also a lot of brokerages continue to be bullish on Reliance. There's large delivery buying we've seen in the last few days. At this price, how is the risk reward looking for long-term investors?
Yeah, very good morning, Sonia. And I would first of all congratulate all the viewers on the new highs that Indian markets are making. And on top of it, the momentum continues on back of very strong domestic macros as well as micro earnings. Coming to the telecom space, the entire street, including us, we were expecting a tariff hike after the elections, and it was a surprise that Jio took the first step. And in line with expectation, I would say some of the market expectation was about 10 to 15%. So 20% hike is a good hike, especially from the likes of Jio. So clearly signals the market that the focus is now moved from a market share gain to a profitability, and that bodes well for the other players with the likes of Bharti Airtel and especially Vodafone, which is in much need of tariff hike so that its cash improves. So overall, I think the tariff hike of 20% will lead to a similar hike of about 15-20% by both Vodafone as well as Bharti in the near term, and we expect this as a positive step for the telecom industry and a breather for Vodafone, and improve the financials for both Bharti as well as Reliance Jio. Overall, we believe this is a good step for Reliance Jio. We have increased our estimates by about, so ARPU estimates goes up by 15% because the tariff hike is not across all plans, but nonetheless, that will lead to an increase in EBITDA by 11% for this year and 17% for RGO. Overall, we believe the risk reward for Reliance is a much better place, and we have a target price in upwards of about 3,000 rupees, 3,061. 3,275 is our target price for Reliance. Currently, the stock is at about 3,000. So I think a decent 10% upside from current levels is what we are factoring in for the entire Reliance Industries.
Hi, good morning, Siddharth. What about Polycab? The promoters are looking to sell about 2% stake in the company. Considering the kind of run-up the stock has seen, it's doubled in the last 1 year and so much more over the last 3 years. And even in the month of January, one of the large investors, Capital Group, had also pared down its stake. Would you be, how would you read this development of promoter stake sale? Would you be a bit concerned given the valuations and the stock run-up?
So, Rima, good morning. I would say that we are overall positive on the wires and cable space with a positive view on Polycab. We currently have a target price of 7,850. So fairly decent upside from current levels. In the market, we are seeing a lot of block deals happening, and those are being lapped up by the institutionals, both FIs as well as DIs. So a 2% stake sale may not ring the bells as of now, and I would say that the promoters are cashing in on the market liquidity rush that is there across sectors, across stocks. So this is one more in that name. The overall focus on the housing sector continues to be pretty strong. Real estate is witnessing a very strong demand, and with the government focus on housing in the affordable segment, we think demand for building materials could continue to be strong. So any discount today because of the block deal, I would say that that would be only an opportunity for investors to get into a name like Polycab.
All right. Lots more to discuss it with you. So just coming back, but there was also the Sebi board meet yesterday and a couple of things got approved. Let's quickly wrap up, some of the most important things. Yash is standing by with exactly that. Yash, over to you.
Prashant, to be precise, everything that was on the agenda was taken up by the Board of Market Regulators, Sebi, and got its approval. To start with the most important thing, that is the criteria for the entry and exit of FNO stocks. Now, Sebi's intention has been to weed out stocks which are not liquid, which do not have a very wide or the required kind of market participation, and include stocks which sort of are the right stocks on both those parameters. In this sense, market regulator Sebi has made revision to the criteria on which stocks get selected to enter the FNO segment. There are, of course, three important aspects on which stocks are decided. One is the median square sigma order size. The second one is market-wide position limit. And the third one is average daily value. On both these all these three parameters, the limit which currently exists has been raised between somewhere about 2.8 times to 3.5 times to ensure that stocks which absolutely and appropriately come under the criteria get included in FNO, and stocks which don't are removed. Importantly, when Sebi was asked, Sebi chairperson was asked how many stocks would it affect, then to that she replied that the net addition to the new FNO stocks would be on the upside of just about 5 to 6 stocks. The total churn, which means the total number of stocks going out and the total number of stocks coming in, would be about 24 to 25 stocks. The second important decision came on the delisting regulations. Sebi has approved an alternate to reverse book building process for delisting, which will be in the form of fixed price delisting. Also, importantly, Sebi has reduced the threshold for counter delisting offer to 75% from 90%. So that will be important. There is, of course, regulations which have come on delisting of investment and holding companies, which was awaited since a very long time. These IHCs are permitted to transfer equity shares held by them in other listed companies to its public shareholders appropriately. They are also permitted to make proportionate cash payments to public shareholders against their assets like land, building, unlisted companies. The intention is to give the public shareholders of these IHCs the right intrinsic value at the time of delisting, because generally these IHCs trade at a discount, as compared to the listed subsidiaries. On Finfluencer, Sebi said that any regulated or Sebi registered entity cannot do any profit sharing, referrals, commissions to these Finfluencers against promoting their products, investment services, so on and so forth.
All right. Well, that's a pretty snappy one. Yash, thank you very much for that. So that's a sort of, news set which is going to happen. But as Yash said, on the F&O bid, and will will the numbers change? And what the Sebi chairperson responded to in terms of how many stocks are there in the F&O list, 182 right now. They said perhaps if it were to apply, these criteria were to be applied with what we have, the data that we have, number would go up a little bit, marginally a little bit. So, I mean, I think that's the important thing to remember. There will be a lot of churn, stocks will go out, stocks will come in, but at a net level, at an overall level, the absolute number, the number will go up. Of course, I mean, you can't know how things will change because this will be, of course, applied with what's going to happen from here. But as of what we have, the number perhaps would go up, as she said. Sid is, of course, with us, and we'll have Rajesh Baheti joining us in just a bit from now to take us through some of this. But Sid, just a quick word. I just want to come back to Telecom, as Rima was talking about. Is there a stock one can buy now, or do you think it's already in the price in the telecom space if you don't have exposure?
Yeah, so I think one can buy both Reliance as well as Bharti Airtel. So in pecking order, I would say if someone wants to take a fresh exposure into telecom, so I would suggest getting into Bharti Airtel, which still we believe that is the best of the lots in terms of financials. We currently have a target price of 1640, but I think with the price hike, this would be revised upwards by about 10-15% again.
Okay, that is on Reliance Industries. Got it. But let's see now. It's the first tariff hike that Reliance has announced in the last 2.5 years. Let's see if some of the other, companies follow suit, whether it's Bharti Airtel, whether it's Vodafone. Bharti Airtel, of course, it has a very strong run. So we'll keep an eye out on that. Reliance, by the way, has seen decent amount of delivery-based buying as well in the last few days. And Bharti Airtel, if you look at that, in the last 1 month, the stock is up almost about 8 to 10%. But it's Friday and lots has been happening in the markets, on the cricketing field, and of course, so many things to watch out for. Anuj is here to get us up to speed on everything. Anuj, good morning. Records galore for the Indian markets. How are you feeling about that? And what's the order of the day looking like?
Morning, Sonia. You know what? The market all through this week gave you nice opportunities to buy intraday dips. First 15 minutes, the low of the day was made. I think now we are starting at a point where the risk reward is extremely unfavorable. I'll just present this table. We revisited this yesterday also. Every day, the low has been made in the first 15 minutes and the market's been closing almost 200 points higher than that. The problem is that now, with yesterday's low at 23,805, if that is your trading stop, in that case, if after today's gap up, we open at 24,150, that's 350 points away. So technically, the Nifty can go to 23,900 and still be in an uptrend, still make a higher low. That's the problem for the market. Also, if you look at the F&O data, the rollover of 76% this time around, which is the highest that we have seen. And I think the FI long exposure. We started June series with 13% long position, and we had the biggest, ever rally. And we're starting July series with 82% long positions from FIs, 3.19 lakh long contracts. I mean, if everyone's buying, who's selling? It's just corporates, right? And that's why you're seeing so many block deals, almost 3 or 4 block deals every day. Put call ratio at 1.49 versus 1.31. Again, an indication that this is now an extremely elevated and overheated market. And you don't know where the trigger would come from. But normally when the market's this elevated, normally the trigger comes from somewhere. Coming to levels then, on the Nifty, the first resistance is 24,150 to 24,200 based on weekly options, and then 24,400 to 24,500 based on monthly options. The support comes in at 23,800 to 23,850, yesterday's low and weekly options based, and then 23,650 to 23,750 on the monthly options. I leave you with quote of the day, and this one's of course from the legend, my all-time favorite, Muhammad Ali once again. And this is an interesting one. People run in packs because they don't feel safe alone. I run alone because I don't feel safe in packs.
All right. Well, legend indeed. Anuj, thanks very much for that. So that's a quick look at what the day perhaps may look like. So yeah, I mean, if you're already long, trail stops, but fresh positions, kind of hard with the run-up that we've had already. Rajesh Baheti is now joining in. Yash was telling us about the Sebi, what all Sebi has approved, especially with regards to how stocks perhaps will be made part or excluded from the F&O list. Rajesh Baheti is Managing Director at Crosseys Capital Services. He's with us here, joining us from Singapore this morning. Rajesh, what did you make of it, the changes?
Yeah, so this was floated as a concept paper, and ostensibly SEBI had said that the revision, when it took place, indices were at around 8,000 and we are at around 24,000. So 3x, everything has gone up 3x. The volumes in the markets have gone up 3x. So maybe the criteria should be revised up 3x. I think we can take that point fairly, that some revision needed to be done. But two things I would like to mention. If you're going to link it to the index levels, then why not just automate this whole process in the sense that tomorrow, if the index were to go down by 10-15%, and this criteria remains, I fear that over 50 to 60 stocks will go out of the F&O segment. So I think if you are trying to revise the guidelines upwards based on the levels of the index, maybe put a formula in place that revises it up and down automatically every month or so that you get a new level for all these criteria that Sebi has fixed.
Rajesh, particularly this changes the new criteria for single stock F&O entry and exit. Does it in any way impact Avenue Supermart? Because that's a stock which, everyone's been wondering when will it enter the F&O. Because of some criteria, it wasn't. So will it impact Avenue Supermart or perhaps even a stock like Zomato?
Absolutely. Some of these stocks should have been included in the F&O segment. The regulation states that there is some math and then the list is sent by the exchanges to Sebi and Sebi has to sign off. So one problem I have with that is that once you've made this criteria and all the new criteria, and it's a pretty strict criteria, A, it should be revised up and down with the index levels, and B, there should not be much signing off after that unless there is some regulatory action on the company. So pretty much the introductions now or the exclusion should be automated. So if that were to take place, I think Avenue Supermarts and Zomato's and Paytm should have been in the F&O a long time ago. But somebody obviously didn't sign off on those entries. But now with this new criteria, if they're eligible to come in, I think it should be pretty automatic. And that's my request to Sebi, not to have somebody sitting on a table signing off on these.
Okay. Rajesh, just one more thing. There's been so much talk recently about what's happening in the F&O market and how, the finance minister has spoken about, the RBI governor said something recently. And of course, the question came up in the press conference, if you watched it, and was put to the Sebi chairperson. She said, we'll obviously do everything in a consultative way. They've appointed this committee now to look at, headed by RBI ED. It's got various members. We understand there'll be some market participants who are part of the committee as well. They will study this and then sort of come up with recommendations. She said, outside of it, there is no other. We won't do anything else. This is it. The committee which they've appointed. So just wanted your thoughts there, Rajesh.
So it's like, when we do reporting, I think the first lesson we should learn is to report correctly. For example, if you have $100 and I have 1,000 rupees, it can be reported that I have 10 times more currency than you have. But in terms of money, I don't have more money than you. So the first thing our exchanges do is report nominal turnover and not premium turnover. I think that is a little misleading because if you buy a 5 rupee option on a Bank Nifty contract, I'm trading 5 rupees, but gets reported as 52,000 odd 5 rupees. So I think that needs to change. Secondly, I think we should also look at the open interest levels that we have in our markets versus other markets. For example, last week, the US triple witching had a $5.5 trillion settlement. I don't think we settle more than a few $50 to $100 billion at a time. So our open interest at the end of the day is not so much. Thirdly, I think our margining systems are the very strictest and the very best in the world. We work on 6 sigma margining and we don't work on 3.5 sigma like the US market does. So all said and done, I don't think a lot needs to be done. But if you have a problem with the lowest rung of retail getting into the market and trading, what you can do is set some kind of a liquid net worth criteria. For example, if you have 25 lakhs or XYZ lakhs of financial holdings in your portfolio by way of FDs or stocks or mutual funds, only then can you play the F&O segment. 2, we can also maybe double the lot size from 5 lakhs to 10 lakhs so as to exclude the lowest rung of the people from trading. I think those would go a longer way into preventing the lowest rung of people from entering the markets rather than just trying to, fiddle around with taxes or change expiries as is being reported.
Okay, well, thanks a lot for giving us your take. Have a great day. Let's take a quick break on that note. When we come back, we'll have the pre-opening rates, and Mitesh Thakkar and Shrikant Chauhan will join in to discuss some trading strategies. Stay tuned.
Times. NCL Industries is the other one, where cement is not the only business that it does, but 85% of the company's revenue comes from NCL Industries. 2.7 MTPA capacity, plants in Telangana and Andhra up 24% over the last 12 months and trading at an FY25 EV to EBITDA of 6.2 times. The third one, KCP, and KCP was in focus because of other reasons all through the month almost. 4.3 MTPA capacity, both of its plants are in Andhra Pradesh, and that was the reason why it was in focus. 132% over the last 12 months, most of which has come in the month of June, and trading at an FY25 EV to EBITDA of almost 9 times. And lastly, Orient Cement, we've had conversations with the management. They've categorically said that they are not on the block, but 8.5 MTPA capacity, a clinker capacity of 5.5, presence in 11 states, plants in 3 states. The stock has also doubled in the last 12 months and trading at an FY25 EV to EBITDA of 9.2 times. So 4 potential acquisition targets in focus. Let's see which one comes up next.
You know, it's a big deal, and this happened this morning in the cement space. We at CNBC-TV18 were the first to report that Ultratech has bought over 20% stake in India Cements via the block deal which happened in the block deal window between 8:45 and 9 o'clock. Now, Ultratech in a statement has confirmed this and more. Let me actually get you the details of.
Welcome back. Looks like it's going to be a very good opening, 100 points higher. But does this last? Does this sustain? Time will tell. Shrikant Chauhan and Mitesh Thakkar are with us to debate on that question. Mitesh, hi, good morning. This has been such a dream run for the market. It's, we've got all sorts of good news, right? But at some point, would you start to get cautious? If yes, is that point now? And what do you do for the rest of the day?
Very, very important question, Sonia, from a trading point of view. Markets have had, as you rightly pointed out, a dream run post that election day big decline. And it's been nearly non-stop. So the only worry, and there is a hint of worry over here in the sense that we are extremely overbought on the short-term intraday charts. So I think, that is the worry which I have. The way to tackle this typically is that you will want to now be slightly aggressive in trailing your stop losses and look at, stocks which haven't had run-up but are looking to participate. Play down the stocks which have already had a big move and have led or outperformed the markets, and look for stocks which are turning from underperformers or market performers to outperformers. So look for fresh breakouts, but be slightly aggressive in trailing your stop losses or putting your stop losses.
Okay, so Shrikant Chauhan is also with us. Let me get his view in. Shrikant, at some point, does the risk reward become unfavorable for traders? And is that point now? What's the best way to look at it?
Yeah, good morning, Sonia. I think, no doubt that we are very close to the overbought levels. But at the same time, we cannot forget that we have to follow the trend of the market because we are traders. And the strategy should be to buy on dips, because whenever there is a correction, we are seeing good amount of buying interest in the market. Yes, based on extensions, we need to be careful if there is any gap up opening, because we saw good amount of rally in bank stocks. We saw rally in almost all metal stocks in last, let's say, a few weeks. But IT sector was under a lot of pressure. So if the market is going up, if the trend is intact, and if there is no sign of reversals, then we should look for adding those stocks or sectors where there is still upside momentum. So we could see some activity in IT companies, and I think accordingly, we can trade in this market. So 24,200, 300 should be the resistance level for Nifty. But for the Bank Nifty, I'm expecting Bank Nifty is going to consolidate, because there we saw good amount of price retracement and overall momentum. So there we are seeing some consolidation between the range of 52,000 and 53,500. But for IT index, we are specifically bullish.
Okay, we'll just take a quick break. We'll come back with lots more. On the other side, the pre-opening rates and top stock picks, both from Mitesh and Shrikant. Also, the big focus area of the day, which is Telecom, right? Balaji Subramaniam of IIFL Securities will be with us to discuss the Jio tariff hike. Stay tuned.
teens. So cement major UltraTech, the largest cement company in the country with about a 25% overall market share, is buying into South India-based India Cements. UltraTech has put just under 1,900 crore rupees to work to pick up 23% equity stake in India Cements. Remember, there are two large shareholders. One is the Radhakrishnan Damani and a sort of family, which owns a little over 20%. And then there is, of course, the promoters who own around 28% in the company. Now, this works out, just under 1,900 crore investment works out to 267 rupees per share, which is slightly higher than what the stock closed at yesterday. Remember, yesterday we had a 15% rally in the India Cement stock. So the deal this morning happened at a slightly higher price as opposed to the last closing price. Some more details in terms of the companies themselves. Now, India Cements has an overall cement capacity of 14.45 million tons per annum, and it is majorly present in the southern markets, South India markets. What about valuations of the deal?
Welcome back. We are live from the CNBC-TV18 Motilal Oswal studio. The GIFT Nifty is suggesting a 100-point gap up, and this is over and above the 2.5% rally that we've had so far. Awaiting the pre-opening rates, but Mitesh and Srikanth are still with us now. Mitesh, what would your stock-specific call be for this Friday morning?
In fact, I have all buy calls right now. A couple of mid-cap names featured here. Manappuram had a very strong breakout above these levels of 200, 205. So now I think it should make higher highs and go further in the upside direction. Look for a target of 222 to about 225 and buy here with a stop at 204. IGL is a buy with a stop at 475 for a trading target of 495. And similarly, Dr. Reddy's, that's a buy with a stop at 6195 for a short-term trading target of 6340. After a long time, I have a buy on Idea with a stop at 18 for targets of 19.5.
Okay, all right. Idea is a buy. Interesting. And we have a telecom discussion coming up a little later. Mitesh, you want to maybe hear that as well. Srikanth is with us. Srikanth, your trades?
Good morning, Prashant. Good morning, everyone. I think, we should look for taking bets on some defensives, especially from the IT space. We like Tech Mahindra, which is around 1430, 1440. And there we are seeing higher top, higher bottom series. So the next level to watch out for would be around 1500. Keep a stop loss somewhere close to 1400 on the downside. And the other stock which we like is from the pharmacy space, and that is Biocon. Currently, it is around 345, 347. But the overall formation is suggesting us that the stock is heading for 370, 75. So Biocon is also a buy at current levels with a stop loss close to 334.
Yeah, and actually yesterday, got it, Biocon. And you said Tech Mahindra, right, Srikanth?
Tech Mahindra, correct.
Okay, got it. I mean, IT, of course, earnings are going to be in front of us, the first off the block. And yesterday, Infosys and TCS did very well. Both were up about 2% or so. More on that a little later. But Sid is, of course, with us. Sid, the cement space, the big deal which happened yesterday with UltraTech and India Cements sparked a move in some of the smaller names as well. Anything you like there? And what would you do with UltraTech itself?
Yeah, Prashant, I think that definitely excited the market, especially after what Adani Group has been doing, a lot of consolidation in the mid and small cement names, and UltraTech getting hold of the 23% stake of Mr. Damani in India Cement. That definitely leads to a lot of hopes that going forward they would want to consolidate, especially their presence in South, which is weak, and India Cement being present there. So overall, we believe that UltraTech would likely to maintain its leadership position in the cement industry, both through organic as well as inorganic capacity expansion. Overall, we are expecting the company to be with its healthy operating performance and large scale of operations. The valuation multiple continues to be premium, and that we believe that truly justifies. We have a target price of 13,300, which is almost 14% upside. Apart from that, some of the mid-cap names that we like is a JK Cement and a Dalmia Bharat. So while we have seen that the cement activity was a bit muted in the last quarter, we are expecting that some of the price hikes that have been taken now would be able to help them improve the overall cost dynamics. Volume growth has been pretty strong, but realization has been a cause of worry for the entire cement space. And that is where now we believe that with the new government formation and the upcoming budget, a lot of focus would be there on the infra, construction, housing, and that should lead to improvement in demand. And
Sid, yeah, got it. Sid, stay with us. You know, I just want to, I'm butting in because Bharti also has announced tariff hikes. There you go. We should put that out as breaking news because, you know, Jio kicked it off, tariff increases, and now Bharti's followed up with tariff mobile increases as well. And this is coming through as we start the pre-open session. And I was actually wanting to just take note of the stocks. You got Bharti up 2.6. We should look at the others as well. Look at Reliance Industries and, of course, Idea, Indus Tower, that entire pack. Reliance is flattish. Vodafone Idea, of course, the biggest delta, perhaps 19.3 in pre-open. Indus Tower is up about 3%. You know, so yeah, that's the pack to focus on. But Rima, you know, Bharti also sort of following suit, expected, right?
Absolutely. You know, so Bharti has been very vocal about the fact that ARPUs need to rise. If you remember in the Q4 conference call, the words Gopal Vittal had used is that tariffs are absurdly low in India and they need to rise. While Sunil Mittal long back had articulated that first ARPUs need to hit 200 and then eventually head to 300 rupees for the return ratios, because companies have spent big money in acquiring 3G, 4G and now even 5G spectrum, and they're not making the kind of return commensurate with the investment. So ARPUs needed to rise. ARPUs were the lowest in India compared to the world. And Bharti and Vodafone Idea were both very vocal. It's only Reliance Jio, which in the conference call used to be quite mum about it compared to these two. So this time, the street has taken it as a big positive that Jio took the lead and announced a tariff hike, you know, versus Bharti and Vodafone Idea. You know, we're still awaiting the details, but I suspect that the increase in Bharti Airtel would be similar to what we've seen with, you know, Reliance Jio, which means an increase of close to about 20% plus or minus a little bit given on the pack. Okay, they have ensured an increase of less than 70 paise per day on the entry-level plans. The details are all trickling in, but there is a revision in mobile tariffs. Bharti never calls it a hike. They call it a tariff repair. That's the word Bharti has always maintained. But I think we have Balaji with us now, Vice President at IIFL Securities. He tracks the telecom space very, very closely. Balaji, first come in with your thoughts, what Jio announced yesterday and Bharti immediately in less than 24 hours following with the tariff hike.
Hi, good morning, Rima. Thanks for having me on the show. So yesterday we saw that Jio revised its tariffs upwards by almost 20%. The blended average increase comes to 20%. On some plans it is less than 20%. On some plans it's about 20%. But you know, net it comes close to 20%. Even postpaid plans did see some increase. The only plans which did not see an increase are the Jio phone plans and the Jio Bharat phone plans, and of course the home broadband plans. But net, I think these tariff increases would be largely applicable on about 85% of Jio's revenue base. And that would mean that an effective tariff increase would work out to something like 17%. And assuming some down trading, SIM consolidation, etc., I think we should end up seeing somewhere around 14-15% kind of revenue uplift from these tariff hikes. Net, you know, I would say that the quantum of the tariff increase is very much along expected lines.
Okay, so you're saying there's a 14-15% revenue uptick that you're expecting from these tariff hikes across the board. In pre-opening, actually, no, not across the board, just for Bharti, right? Is what you said?
No, I just said this will be the overall revenue uplift for Jio. As in Bharti's
for Jio, okay.
just came 2 minutes back, so I haven't had an opportunity to study them.
Got it, got it. Okay, so for Jio, you're expecting a 14 to 15% revenue uptake post the tariff hike. So since we're talking about Jio, let's just complete the, the cycle on that. For the Reliance Industries stock, right? I mean, it's already gained about, I think, 17-18% in the last 6 months. It's sitting at above 3,000 rupees now. Do you think the risk reward is still favorable for a long-term investor based on this news flow? Or do you think that a lot of the news is now in the price?
I think at least on the telecom front, a lot of it is in the price. See, I only look at the telecom space, so you will have to ask my colleague who tracks Reliance Industries for the views on Reliance. But I think at least as far as the telecom side of the business is concerned, a lot of the good news is in the price.
Yeah.
Okay, just some details about Bharti's increase. So Bharti's entry-level plan has seen an increase of 11%. From 179, it now stands at 199. That's an increase of 11%, but 199 is still more expensive, a little more expensive than Jio, whose entry-level plan now stands revised to 189. Just comparing some of the more popular, reasonably data-heavy plans. One is the 1.5 GB of data. For Reliance Jio, the price increase for 1 month was approximately 25%, while for Bharti Airtel, it's about 16.7%. But still, Bharti Airtel is slightly at a premium in terms of tariffs for a comparable plan. For the more expensive 1.5 GB of data, but for 3 months, the tariff increase is approximately close to about 20% for Bharti Airtel. So Bharti Airtel's tariff increases, as you can see on your screen, range from 10 to 21%. For Reliance Jio, it was 12.5, going up to 25%. But Bharti's tariffs have always been at a slight premium to Reliance Jio. And I think even after this, they appear to be at a marginal premium. Maybe the extent of premium has come down, but it's reasonably a comparable hike.
Yeah, absolutely. I've always wondered, Reema, obviously we're a price-sensitive market, etc. But I think telecom companies make most of their margins and money on the premium end, right? Postpaid, not the entry level.
Yeah.
And we all talk about how premiumization is happening across sectors, etc. So, why was there so much hesitation? I mean, of course, there was a new player, and they were sort of gaining market share and gaining customers, and there was a strategy. But would we notice? I mean, if I'm saying in terms of if the companies are making money on the premium end, how price sensitive is that customer? If that's the customer which matters.
See, it's not very, very price sensitive, which is why Bharti has managed to retain its premium customers.
Yeah.
Right? They have not ported to Reliance Jio, which offered similar value in terms of data. In fact, even more value. But it was at a cheaper price. But Bharti's largely managed to maintain it because this is not the premium customers, at least the postpaid customers who are willing to spend. They managed to hold on to it. So it's not a very price sensitive, but it's just that in a 3-player market or a 2.5-player market, things can shift. The volumes can shift, right? If there is a big disparity in price.
Yeah. But that's what I'm saying. The volumes in the aggregate don't matter. What matters in the premium end, in the top end. That's where you make most of the money.
But even over there, how much of a difference is acceptable, right?
Correct. No, absolutely.
For a similar value or even more,
sort of pondering that. But anyway, look at the stocks, right? In the pre-open session, look at Bharti, which is up about 4%. And you got 1,540 rupees on Bharti. Look at Idea. We should look at the stocks now. So 3%, 19 rupees plus on Vodafone Idea. So these are not, these are meaningful, decent moves. But remember that you're coming into this. This is essentially news which has been widely expected. Stocks have run up quite a bit. And now you got confirmation, right? So the rumors now being confirmed by the actual news in that sense. So if you're trading in the very short term, you've got to be mindful of that. But I think as everyone has been pointing out, and we've heard as well, that this perhaps is the first of the tariff upward revision that we've seen, and we will see more. But now, of course, it's going to take time over the next 6 months, 8 months, etc. The first adjustment has been made, and I'm assuming that the companies will watch the impact, the implication of this before they decide what else to do. So I think important to sort of keep that in mind. The broader market, maybe just look at Indus Tower as well if you can. Take a quick look at Indus Tower and maybe Bharti Hexacom as well. And Indus is starting about 2.5%. A lot of interest there as well. Again, of course, stock's done very well.
Indus, sorry to interrupt, is also out of F&O ban.
Yeah.
So that's an added trigger for Indus Stars. Of course, it reacts when the health of the telecom players improves, but Indus Stars is out of F&O ban today.
Absolutely. And, we'll look at this more closely. But Mitesh is back with us, 9:10. So just 3 minutes to go for close. It's actually 9:12. Mitesh, you had ideas, a call. Tariff. Bharti has also increased tariffs. Any of the other telecom stocks in focus for you?
We practically have three only, Prashant. So that's Reliance, Idea, and Bharti. I think all the three are looking good. Reliance has had a good breakout in the last few days. Disclaimer, we have some positions over there. So there's Western interest. And I think the stock could possibly head towards 3,300 plus levels in the July expiry. Bharti also is extremely positive, making new highs regularly. So the sector is going through good news flow as well as good technical chart setup. So it should be positive. And for the 9-10 call, I'll choose the Manappuram.
Okay, Manappuram, got it. But in pre-opening, looks like 24,000 is something that's going to hold on the Nifty. So no, no problems over there. Apart from Telecom, you also have a couple of these IT names. HCL Tech is up about 1%. Tech Mahindra is up 0.6%. ICICI Bank has been gaining so much ground lately, so 0.5% higher over there. But let's talk about some more stocks that are in the news. Hormuz is here to tell us about Bandhan Bank and Man Industries. Hormuz, why are you watching out for those?
A couple of them, they're initiating coverages on, have brokerages, and UBS has initiated coverage on Bandhan Bank. They're neutral on the stock. 230 rupees is the price target that they're set. They're saying that they are expecting a limited and gradual decline in high credit costs for its MFI book, is what they're saying. And the new CEO appointment is now going to become a medium-term overhang for more strategic clarity for the bank, is what UBS is saying. And a large part of the expected improvement in credit costs appears to be in the price, is why UBS is neutral, and because of that, they see limited upside potential as well on Bandhan Bank. Now, MK has initiated coverage on Man Industries, and they are expecting a price target of 500 rupees there. And they're saying that the stock has doubled in the recent times because of the back of better business fundamentals and executing the expansion plans that they had announced earlier. What they are also saying is that the stock is yet to factor in the project execution here on, from which is expected to double the group's revenue over the next 3 to 4 years. So that is yet to be factored in. And this transition from potential to delivery is likely to create substantial shareholder value going forward, is what MK believes for Man Industries. And although the stock itself is trading at a higher valuation compared to the sector as a whole, they are finding comfort when it comes to the FY27 price to earnings multiple, which is at 8.2 times. So hence MK is bullish on Man Industries, 500 rupee price target.
Okay, thanks a lot, Hormuz, for that. So we just have about 30 seconds left for the market opening, and looks like it's going to be a good one. Remember, the July series has kicked off on a very strong note. The Nifty has closed above 24,000. The Sensex has closed above 79,000 for the first time. And now, in the June series, by the way, we have a 7% gain under our belt. So looks like these good tidings are something that can continue. Is the risk reward still favorable for traders? Time will tell, because there's definitely some amount of prudence that's needed at this point in time. But the opening bell is indicating a positive start. So let's keep that on our radar. 30 points higher. Nifty well above the 24,000 mark. The mid-cap index is really surging now. And the big moves are coming into the telecom space. Bharti Airtel and Reliance are your big movers, up 1.5%. On both those stocks, Bharti Airtel seeing big volume gains as well this morning. ONGC, HUL, Coal India and HCL Tech are a couple of other stocks that are trending in the green right now. On the downside, you have names like Ultratech Cement, IndusInd Bank, Adani Ports, Grasim and M&M that are trending a tad bit in the red, just preventing the market, from moving higher. But by the way, look at the momentum on the upside. 24,100 is here. It's a 70-point rally just at opening bell. Looking very strong. The Sensex is up 250 points. The Bank Nifty is up 100 points. So there's a lot of momentum. Look at the market breadth. That will give you a true indication of how things are going. 1,400 stocks on the advancing side. Even in the broader markets, plenty of stocks in PSU banks, in PSUs in general, BHEL, PNB, etc. SAIL, all looking very good. By the way, Reliance is now up 2% and making its presence felt. So looking very strong over there.
It's actually, I mean, the market can say a big thank you to Reliance, because that is the one which took a break yesterday because it had a decent move. Actually, it was up yesterday as well, but not as much as the day before. But it's starting about 1.5% higher. The other stocks, I mean, so Ideas got the weakest response. It's up about 0.75%. Maybe that'll change. Bharti is up 1.6%, and Indus Tower is actually up 5%. I was talking about Indus Tower early on. Of course, this, the technical aspect as well. So yeah, the telecom stocks off the block. BHEL is up about 2.5%. There is CDSL, some of the other names outside the telecom space, big volume-led gains. CDSL is up 6.5%. It'll come up for you on your screens. JSW Infra, Vivek was telling us about the acquisition, 3.5% higher there. Texmaco Rail is up 5.5%. These are all the big, broader market volume-led gains. Lots of upgrades on Star Health. 3% this morning on Star Health. That's the largest sort of standalone health insurer, private insurer. Sambhi is up 4%. Again, something we mentioned in our top 10 list with our research team. There is KDDL, Kamla Dials, which is up 7%. Usually doesn't come up with with this much, but it's got volumes. So mentioning that. Ujjivan Small Finance Bank has been a bit weak lately, 3% higher, so a bit of pullback there coming through. And look at 361, the wealth management company. It's had a fantastic week. So 361 is up, I think another 5-6%, and for this week it's up 20%. Friday to right now. So that's the gain that we're seeing on 361 right now. On the downside, Polycab is the big loser. The block has, I think, gone through huge volumes. On your screen, they're actually 2.7% equity changed hands, 4.5% cut there. India Cements is down 2%. Ultratech, after the run-up yesterday, is down about 1.5%. So the two deal stocks are both down 1.5% to 2% respectively. IndusInd Bank is down about 1.25%, and Bank of Baroda is down about 1.25% as well. So that's actually, and maybe if you want to look at one more name which is down meaningfully with volumes, it's Godfrey Phillips. There's a 4% cut on Godfrey Phillips, but it's just starting off. So we'll watch this one and how it goes. Lodha, which is Macrotech Developers, is also down 2%. It's got some volumes in it. But again, this is initial, very, very initial. 65 points on the Nifty. Rima.
Well, some more stocks. Walk hard. There is a media announcement close at about 12:30 p.m. today. So Walk hard is seeing some buying. 5% gain on Walk hard. Man Industries, where MK has initiated coverage with a buy. Target price 500. The stock is at 410. They are saying there are industry tailwinds in the form of demand growth for pipes. So Man Industries is a mover today. GMR Power has a gain of 4%. Its arm has received settlement claims worth 850 crore as a first tranche from NHAI. So positive news flow on that. Navkar Corp is also in the green. The stock is at 115, which is higher than the price at which the promoters, JSW Infra has bought a 70% stake, and even higher than the open offer price of 105 rupees. So Navkar Corp continues to see buying. Brigade is another stock which is on our radar. They've announced some residential project where the value of it could be 1,100 crore rupees. So Brigade Infra also seeing some amount of buying. Polycab is now extending the fall, now down close to about 5%. And a quick word on cement names. India Cement, yesterday's big star, is down nearly 2%. So some retreat seen on India Cements. But on the flip side, Burnpur Cement is seeing a fair amount of buying. At least the last time I checked, Burnpur Cement had a gain of close to about 8-odd%. Intellect Design Arena is higher. Kalyan Jewelers 10%. Is also another stock which is popped up on pretty large volumes.
Suddenly there's lots of new names entering the mix now. So yeah, you're right. Kalyan Jewelers is up 10%, 523. GNFC was not there when I read out from the list, 4% on that one. Big volumes. Policy Bazaar was not in the mix in the morning. It's up 3.5%. So, a very quick pickup and ramp up as far as volumes are concerned, with decent gains as well. So it's a higher start, a steady, very steady start. Idea is down 1.25%. So I just want to mention that. But I guess you'll have to hear now from Idea as well in terms of a tariff increase. Jio's done it, Bharti's done it, and we'll see. And initially, after a very well anticipated kind of news flow like this, there is a little bit of profit booking which kicks in. People who kind of are playing that, just that event will book profits, and I think there'll be that element of price action today. But beyond that, I think if there are more hikes in the offing, the story is good, there'll be a buying which starts to come back in again.
Vodafone
So this is
also
immediately post news reaction. Sorry.
Yeah. No, Vodafone Idea's also moved up. The FPO price was 10, 11 rupees, and that happened just in the month of April.
The government put in money at $10.
At 10.
And
the
it's
FPO
at 19.
It's at 18.5. So you've got a 70-80% return in a span of 2 months. So I guess that also explains the profit booking.
Oh yeah,
okay,
absolutely.
I just wanted to mention a couple of more stocks that are doing really well. PB Fintech is one stock that has hit a fresh high today. at 1420 rupees on PB Fintech. Remember, the issue price of PB Fintech was 980, and since then the stock has come a long way. The stock, I mean, after listing, of course, it had dropped below its IPO price, so we saw all of that. But now PB Fintech is well above its IPO price of 980, fresh highs over there. Couple of other stocks that we're looking at. Reliance is now at a fresh high, by the way, so don't lose sight of that. Tech Mahindra is at a fresh high as well, and many more names actually in the broader markets. Good looking screen here.
Oh, yeah, absolutely. Let's bring in our market master today, Tahir Badshah, CIO at Invesco Mutual Fund. Tahir, good morning. Good to have you with us here. Thank you very much for your time. So on Telecom, what's the view now, Tahir? This is the first of many hikes, and you've got to wait again against, I mean, the news flow and the story, etc., against what you're paying for these stocks now. So how does that look?
Yeah, so I think, this has obviously come after a very long period of time. But at the same time, as you know, this was also in the works, and it was built into the market expectations over the last some time. And some of the performance of the sector in the last some time has been reflective of that as well. But the good part is that, when we tie this up with the fact that, there is not really much in terms of now money being spent on spectrum, and that probably, gives the chance for some of these companies to incrementally improve their balance sheets as well going forward. So I think it's a good situation from a longer term perspective. Part of it is priced in, but I think over a period of time we can probably see profitability improve. These are at some level very high fixed cost businesses, so obviously a lot of it translates into the bottom line, and valuations are not necessarily very demanding. So I think we will probably see some more legs as far as the sector is concerned.
Okay, Tahir, hi, good morning, and thanks for joining in. Overall, for the market, how are you feeling now? I mean, is there any reason to be concerned at all? Because, it's record highs every other day, and at some point, a correction's got to kick in, right? Do you think there are reasons to believe that a correction is coming, or is it just steady state for the market?
So yeah, when you don't see any reasons, and that is a time when you worry the most, as you know. So our job is to worry, both in a bear market as well as in a bull market, and probably now more so in a raging bull market. But I think there are a few things that we have to watch for. I don't know whether they will become worry issues or worry matters. But clearly everything from the budget and its positioning and what it means in terms of whether the budget will be able to kind of broaden the economy, or will it probably mean higher costs, higher fiscal. Those are the things which need to be watched from the budget. We obviously have to contend with the outcome of the monsoons. It's important this year. Forecasts are good, but we have to see the reality. We then contend with some of the other issues like US elections. It matters from a global standpoint. And then, of course, there is a whole discussion about interest rates and inflation, which we have not seen an end to as such, and that will also be debated. So I think there are things which are there on the windscreen, and we have to kind of not necessarily worry, but probably prepare from a portfolio standpoint or from a risk mitigation standpoint. So I think that's what we'll have to kind of keep doing over the next 6 months, as you know.
Okay. Just two more names. It's a vibrant screen, Tahir. So single stocks, you'd agree, right? So much happening. I'm not sure if there's any news flow or buzz around 361, but 10% higher on that wealth management company of the stock. 1,020 now on 361. Moriput Laboratories is up. If you can have these stocks up, please. Yeah, there you go. GE Shipping is up 4.5%. Moriput Laboratories is up 9%. Now, these are newer names which are coming through. And Steel Authority is up 3% with humongous volumes, very large volumes for this point in the day. So keep an eye out on that as well. Newer and newer stocks coming through into the mix. Tahir, heard on the wealth management side, lots of initiations, right, lately. 361 was one of those companies which saw lots of brokers initiating, etc. on. I think appetite is widening. Or maybe people are, because they're so hungry for ideas outside of the top 100 names. Do you sense that? Are you guys also sort of going down the curve or no? Are you climbing back up?
Well, I would say I'm trying to consolidate. I don't really want to kind of go down the curve as much. And some of the moves that we are seeing are obviously baffling, especially in short periods of time when we are seeing those kind of rallies. Some of these stocks, however, are in our ownership for some time. So, okay, we are to some extent even enjoying the fruits. But obviously, it makes life a little more difficult because the thing is that, we've anticipated something which will happen over a 18-month period, and if it happens within less than 3 months, that's something which calls for action once again. So, those kind of challenges, I think some of these merited, but not all of it in such a short period of time. So we try to, so like I was trying to, indicate that this is a year in which you have to probably be a lot more watchful of risk. You are getting a lot of return, but you have to be a lot more cautious in terms of your risk management. Maybe last year you didn't have to do as much, but you have to think a lot more in terms of risk rather than return in 2024, or at least for the second half of 2024.
Yeah, no. As someone jokingly said, but I think it's also true. The worst thing about what is worse than not buying something which went up is to sell something and then watch it go up another 50% or whatever.
Unless you rotated that money into something else, which has also made you money.
Which is also done.
But otherwise, that's painful.
No, but have you had some of those? I mean, if you...
Quite a number of them, yeah. I mean, not as many in 2024. We had a fair bit of them during the COVID period for sure.
Okay. Tahir, I know you don't comment on individual stocks, but I just want to ask you how one should approach a situation like this, right? I'm talking about a name like Polycab. So Polycab, as we speak, is down about 3-odd%. It's come off a bit from the high. Great business, very strong promoters, good moat, etc. But now promoters are looking to sell a bit of their stake. So 2% stake is being sold by the promoters. What do you do at a time like this? Do you keep the faith, considering the business and the momentum is good, and just ignore the fact that promoters are cashing out a bit? I mean, in such a situation, what's the best way to approach it?
So, Sonia, it's obviously it's upon the merits of the individual case. And I think a couple of names that you mentioned along the way have been companies where we have probably seen them grow very aggressively. They have been of the what we call the challenger variety, who are basically trying to, close the gap with the leader in the respective industries, and that's something which has excited us as a proposition. So I think that is where some of the action in some of these names that are showing that kind of a color, that can they grow ahead of the market, can they grow ahead of their own industry and well ahead of the system rate of growth. And I think there have been a number of cases, even in industries which haven't had a lot of tailwind, we've seen those who have executed well and delivered well have been significantly re-rated. And I think that's what is going on in a few of these.
Okay, significant re-rating in many of these. Got it. The other space I wanted to ask you about, I know we've spoken about banks ad nauseum, but is this a time to be taking a fresh bet on many of these private sector banking names? I mean, there's large delivery-based buying happening in names like ICICI Bank, HDFC Bank, Kotak Mahindra Bank. What is happening here, and why have investors suddenly become so bullish?
I think, one by one, the market is broadening, and there is obviously a hunt for ideas and pockets of the market which have not. See, I think there's a peculiar situation where while we know that the market has done well at an aggregate level, that there are some pockets of the market which have not done as well too. And even in our scheme of things, we have looked at some of those areas which have turned relative value, if not absolute value, and try to balance our portfolios accordingly. So I think banks feature in that segment. Maybe tech also, I would say, to some extent, should be a sector which may have those kind of characteristics. We've seen a fair bit of disappointment or lackluster approach as far as that sector is concerned. I think if the discussion around the US economy has now decisively changed from recession to what kind of growth, I think tech sector should not probably be very far behind. So the same in the case of banking as well. Credit growth, etc., has held up well. There is a certain amount of still a little bit of difference as far as the nature of the credit growth is concerned, driven more by personal, unsecured, etc. So that's somewhat coming in the way. But by and large, this is a place where valuations are not exactly a challenge. So I think that's something which can excite the market, especially when many other pockets of the market are drying out in terms of relative value.
Okay, any other pockets where you think valuations are exciting? I mean, one space that I can think of is IT, which has been, a big underperformer lately. Do you think money will start moving to IT as well? That's the only pocket that hasn't done as well as some of its larger cap peers. Any thoughts there?
Absolutely. I mean, I just, like I mentioned a while back, that, this is a sector which I think should kind of see some color. I think much of 2023 we saw business conditions not being as bad, deal wins, etc. If that is an indicator, has held up well. But by and large, the commentaries has been that let's hold back on the execution, because ground level reality for the US economy in general was not as great. But I think that we moved away from that discussion. 2024 onwards, there's probably the recession word has not just come by. So I think, and in fact, it is moving decisively towards how strong can the growth be. And it's therefore not surprising that interest rate cuts have not come through, despite all the expectations in the market. So I think it is probably a quarter away when, commentaries for tech companies get better from a execution or a ramp up standpoint. And I think if what is more like a 3 to 5% growth turns out to be a 7 to 8% growth, I think that should be enough to, drive a fair bit of rally in this sector.
Okay, one last question before we let you go, because it is, the impending event to watch out for, which is the union budget. It's going to be the first, full-blown budget post the government coming into power for the third term. So they may have a lot of, sort of aces up their sleeve, whether it's in manufacturing, whether it's in defense, and a whole host of affordable housing. Which are the spaces that you're going to focus on, where you think that some kind of impetus or incentive could be given in this budget?
Well, obviously, I mean, the ignored pocket of the market is low-end sections of the pyramid, which have actually not done as well. Many estimates seem to suggest that disposable income in the lower to mid parts of the income pyramid are lower than what they used to be pre-COVID. And that's something which is quite alarming at one level. And therefore, it's not surprising to see the kind of dichotomy of trends in growth that we've seen in different parts of the consumption basket. So I think that will be the obvious pocket to address, especially from a political standpoint, as well as an ongoing political standpoint. And it may not necessarily be a bad thing. It will broaden the economy, I would like to think. And, it will also mean some more balancing as far as market valuations are concerned from one part of the market to the other. So clearly, a value consumption, maybe some parts of FMCG, some lower end, pockets, rural-oriented stories. That's a part which market is starting to feel excited about, and that excitement will probably continue to, develop further in the run-up to the budget or after the budget.
Okay, all right. We will let you go on that note. Thank you so much for joining us, Tahir. Appreciate your time here on CNBC TV18. Well, moving on, the market is, by the way, looking very good. So don't lose sight of that. Almost 80 points higher now, 24,100 with ease. The Sensex almost at 80,000, just 500 points away from that magic milestone of 80,000 on the Sensex, and the mid-cap index is up 250 points. But as Tahir said, always better to be prudent, to be a bit cautious, because when you least expect it is when a correction comes through. But for now, there seems to be no problems on the anvil. But TTK Prestige is one stock on our radar today. The company has signed an agreement with a global consultant to develop a 5-year long-term business strategy. And for the same, they will invest 12 crores over the next 6 months. To discuss more on this development, we have Venkatesh Vijay Raghav, who is the MD designate and CEO of TTK Prestige, who joins us now. Venkatesh, thanks a lot for joining in. Can you tell us, what is this agreement that you've signed in for 5 years? What will this investment bring to you in terms of returns? And what are you looking at over, in terms of business development as well?
Yeah, like you would know that we've recently gone through a complete management rejig with a lot of our leaders sort of superannuating, having taken the organization through a very successful journey. A large part of the leadership today is new, and we've sort of had a management change with me coming in as well. The organization, TTK Prestige, has had a huge legacy and a very high success rate in the last couple of decades. And we believe that as we move forward with the changing scenario of the country, and also in terms of the categories and the industry, it would be prudent for us to have a look at how do we sort of reboot and take the next leap. As a part of this exercise, internally, a lot of work has been happening, and we've sort of engaged a strategic partnership with one of the partners. We're in initial stages to explore the possibilities of that partnership, helping us understand where the growths can come from, what sort of challenges that we need to surmount, and therefore how do we sort of prepare ourselves for the next 5-10 years? And this is part of that exercise. This is one of the initiatives that we've looked at across the spectrum, and a lot more that would come in from us as we move forward.
Okay, so, since you've just come on board, and I'm sure there's some fresh vigor with this whole rejig and new energy on board in TTK Prestige, I just wanted to understand what is the strategy of the company now, because demand trends have been slightly on the muted side. Growth has not been as good as perhaps what it was a couple of years ago. So in order to spur growth, spur demand, what kind of change in strategy would you want to adopt?
So, like I've been consistently maintaining, I think one significant strategy that has always held good for the company is innovation. And as a country, India has multiple opportunities across different price segments today. So innovation, I think, is core to the whole exercise, where we see a lot of premiumization happening at one end, a lot of upgradation happening from the mid to the high end, from the low to the mid end. So innovation of products, innovation of existing categories would be a very significant thrust area for us as we move forward. We do believe as the country starts moving up the ladder in terms of economic growth, premiumization is one aspect of the game that we would aggressively pursue. Having said that, there are enough opportunities at the mass premium and the mass market end as well. And that's something that we would pursue together. But to the core of this exercise, I believe innovation and thrust on innovation is going to be the way forward. And this has been the core of the organization for all the success that it's had in the last few years.
So zeroing in particularly on premiumization, Venkatesh, hi, and congratulations on coming on board. What percentage of your portfolio today would be at the premium end, according to your own internal calculations? And since you've taken over, you would have also done an assessment of the entire business. It's a long, old legacy business, which has done very well. Are there any pockets where you think that perhaps, is not suited now for the next 5 or 10 years and the company could veer away from it?
No, I don't think so. I think one of the good things that we as a company have had is we've had a very strong portfolio focused on a few core categories and very strong market shares and strong leadership positions in some of these categories. And these categories also have relevance and a strong growth path as we move forward. Of course, subject to the sort of downturn that's happening today, and we expect that to sort of come back over a period of time. So in my mind, I think the spaces that we operate are very clearly spaces that we believe would continue to grow and have good headroom for us to grow. So to that extent, I think a very sharp focus on some of our core categories is something that we would pursue very strongly, continue to pursue, and maybe add a few categories of scale as we move forward. That's work in progress as I would speak right now.
Venkatesh, hi, good morning. And again, congratulations from me as well. Prashant here. So this is a general management consulting firm, like a McKinsey or some. Would you tell us who this is? Who's been brought on board?
No, I'm not at liberty at this point of time to sort of
okay, fair enough.
Talk about the name right now.
So what have you told them? What do you need to get done? Do you want to cut cost? Do you want to have you told them to do a survey to identify newer markets you can enter? I mean, what are the terms of reference in that sense?
So what I would sort of look at as immediate priority for the organization. If you were to look at our financials, I think we are well placed in terms of financials. It's been a well-run organization with a very strong P&L and cash reserves and cash flows as well. What probably would be the thrust area for us is to get our top-line growth and in line with the opportunities and the headroom available. I think our priority is to get our top-line growth right. And that's one objective that we've sort of kept it central to this entire focus for the next 5 to 10 years. And this partnership probably will help us understand that better and the opportunities in that space better.
And the last, I think in February when we had had you guys on, you'd said that for FY25, you're expecting a reasonably high single-digit growth. That was what that number broadly in terms of not a guidance, but that's what we'll see at least now. And this, of course, will take time to materialize.
So I wouldn't want to talk specifics at this point of time, given the timing of the conversation. But suffice to say that I think the industry still has not sort of come back in trends. I think we're bottoming out now, and maybe in the next few quarters, we would see the industry grow faster, and hopefully that would lead to the growth as we move forward.
So the big thrust, as you said, to bring this on board is going to be top-line growth, right? Over the next 5-10 years, as you said. So how will that happen? Will you enter new product categories? Is there thinking on those lines? completely new sort of product categories? Because you will, of course, try to push in where you're strong in any way. And the other one is acquisition. I mean, we've been hearing for some time that there is an acquisition around the corner, something between 500 and 1,000 crores, but not happened yet. And so just on both those points, yes.
Yeah, so I think there are three parts to this conversation on top line growth. One, of course, we consistently continue to sort of consolidate our position in our core categories, given that the headroom available in these categories is far higher. And I think we are well placed to sort of consolidate our growths there and accelerate them through a combination of innovation and go-to-market. Second, of course, like I said, we pick up a few categories of scale that we believe are relevant to the brand and the company, and we sort of enter into those categories. Acquisitions is something that I wouldn't be able to comment at this point of time. It's a little too early for me to comment. But having said that, we do believe that there are opportunities in the spaces that we operate. If the right value and the right opportunity comes in, we would be open to acquire as well. So it's a combination of organic and inorganic growth that we are looking at.
Combination of organic and inorganic growth. Got it. Can you give us some more numbers in the kitchen and home appliances segment? What has your volume growth been up until now, year to date?
No, so like I said, I think the timing is in such a way that I can't specifically talk about the numbers of these quarters right now. But I think if you were to look at the past trends, it's been a little flattish. We do believe that some parts of the markets have started moving up, and therefore we would believe some of these categories will start growing in the future. That's what would be my reply at this point of time.
So, no, the reason I'm asking is because I want to understand some trends. So, is it double-digit growth that you can do in FY25 in the kitchen and home appliances segment? Or do you think that for a while it could continue to be a single-digit growth? So, any kind of indication that you can give us?
Not at this point of time, please.
Okay. And how has the response been to some of the new launches? I'm sure you would, you would have some indication of how things are shaping up because you've introduced 27 new SKUs in the quarter gone by. How has the response been?
The response has been fairly good. Like I said, I think one part of the business that is very clearly indicating to us that there could be robust growth as we move forward is the adoption of some of the new products. The adoption of the new products and the response to some of the new products have been really good. And we do clearly see that there is a trend of upgradation happening, be it in cookers, be it in cookware, small appliances where we are present in. I think there's been a trend of the urban markets upgrading very strongly. And this upgradation is being facilitated by new product introductions and also some of the existing categories going through category upgrades and going through design upgrades as well. So overall, I think it suits us well to launch new products. The adoption rates are far higher. Like always, I think it's important to keep the relevance of the consumer in mind. And that's something that I think has been quite successful so far. So the new products are seeing good traction as we speak today.
Okay, got that. One final question from my end. Given that there are new products, there is premiumization, there's upgradation from consumers, is there scope for you to take your margins to that 15-16% mark? Currently, you're hovering around 11, 12, 12.5% as of last quarter. But is there scope over the next 1 to 2 years to elevate your margins to 15-16%?
So over a period of time, I do definitely think that's a possibility. But from our perspective, I think, like I said, it's important that we sustain the margins that we have today, build components to that. But of importance would be the top line growth. Because as top line growths come in and as our costs are largely capped and our capacities are available, I do believe that top line growth would directly flow into the bottom line over a period of time. So of more importance for us is to sustain the cost efficiencies that we have today. Capacity is available to be utilized better. And hence, therefore, a very heavy thrust on top line growth across geographies, across channels, across new product innovations like we speak, and premiumization. I think a combination of this would help us get the top line growths robust, and that flows into the profitability as we speak. So that would be a graded journey that I would see happening.
Okay, all right. Thank you very much, and I hope we speak after the first quarter earnings, right? And we'll have that opportunity, and maybe we can talk some specific numbers then. Thank you very much for joining us and giving us a sense of your vision for the company and what you'd like to do. So top line growth, really the thrust area in terms of how they want to drive things from here. and open to acquisitions, but nothing very specific at this stage. As I said, post Q1 numbers, maybe we'll have some more specific details. Stock actually has moved up from the time that we started the conversation. 5 rupees higher, 790. We'll take a break. We are back. We'll have the management of RR Kabel, Rajesh Jain, Chief Financial Officer, joining in to discuss their business outlook. Stay tuned.
Welcome back. Let's talk about RR Kabel now. After registering a strong volume growth in FY24, they're now targeting a 20% volume growth for FY25. To talk about business momentum, how Q1 is shaped, what's the outlook, what are the big triggers to watch out for, Rajesh Jain, the CFO of the company of RR Kabel, is with us on the show now. Rajesh, morning, and thank you very much for joining in. If you could just, first provide a backdrop of the kind of demand environment we are in. How were the last 3 months? Because we had the elections. Did it slow things down in terms of demand? And are you on track to maintain your 20% volume growth for FY24?
So, if you see, we always see our business in the longer horizon of 12 months, and because on quarter to quarter, it becomes very tough to predict things in very shorter point of view. But as India economy is already doing good and it has to develop, since we have targets to make it a developed country, so it seems there will be growth, and we are on track. What we have targeted to achieve 20% volume growth in FY25, it seems it is on the card.
20% volume growth for FY25 is on track. But particularly in the last 3 months, how was demand? Did it slow down on account of the election season? And also, how were, on a blended basis, how did the raw material cost for you fare? Just to understand the impact on margins.
This quarter, we have seen fairly very large kind of price fluctuations in terms of copper and aluminum. But it seems we have seen both the trends, like copper prices have gone up to 11,800 and it has come down to again 9,500 type of levels also. So, but we have to pass on this price change to our consumer, and as per our policy, we keep passing on these prices to our consumers. So there will be not a large impact on our profitability. And if we talk about the volume growth of this quarter, it is fairly flattish kind of quarter it seems, but overall, since there were election environment, so it seems it will be back on the track very soon.
Yeah, no, got that. Yeah, I was actually coming to the margin bit because there was a sharp run-up. We discussed this the last time you were on, Mr. Jain. Good morning, Prashant here. But now things are cooling off, and let's hopefully they stay that way. Your on margins, your guidance was an improvement, I think, of 100 to 125 basis points for the full year. That stays on track over 24?
Sure, yes. Good morning, Prashant. So, as per our earlier predictions also and planning also, we are planning to improve our margins by 100 to 120 basis, and we are on track in that trajectory only.
Can you give us a sense on the fast-growing FMEG segment? What are you seeing there? What have you seen for the quarter gone by? And which segments there are doing the best for you?
So from business growth point of view, again, in FMEG also we are on track, and what we have predicted to achieve a growth of 20 to 25% in this year, and which will be ahead of the industry average. And if you see, segment we are seeing very good demand in fans, particularly looking to the very large and longer summer this season.
Okay, so 20% volume growth for FY25 is what you're targeting, but there are some new product launches in the pipeline as well. Can you take us through that? And particularly from your new products, what kind of growth are you looking at? think there's some issue
just a
with
bad
that
line.
video. It's been actually cracking a bit for the last couple of minutes. So we'll try and just resume our conversation with RR Kabel in a bit. But just look at the markets. It's a century hit on the Nifty already, and it's just getting better by the minute. 110 points higher now on the Nifty, 24,150. And I still don't have a habit of saying 24,000. I mean, it's always like 21,000, 22,000. I mean, 24,000 is this milestone that I honestly didn't think that we would hit so fast.
people are at 22
in 20
something.
sessions, right? Many people are still stuck at 21 and 22. Yeah, I mean, it's remarkable the growth that this market has seen. So all-time highs continue, and 24,150. By the way, we have to get used to seeing 80,000 on the Sensex very soon, right? Just 400 points away from that major milestone on the Sensex. So great tidings for the equity market.
The index is doing well, and we were talking about how forget the index is of course doing well, but now maybe it's run up sharply. That is doing well, but look at the broader market as well, and some more stocks here which are doing very well. MCX is up 4%. If you can highlight these, 4,014, 4,015 on MCX. Bombay Burma is up 12%, holding company. So that has got very large volumes for this point right now. MGL, that is Mahanagar Gas. Now, all these are new names which we didn't discuss in the morning. 4% there. Chennai Petro is up about 3.25%. It'll come up. That's Chennai Petro. Stocks I think is at about 987. And I think tire names. Maybe look at JK Tires, Seat, Apollo Tires. And I think these are all generally doing well. Seat is up 1, but I think the one which is up the most right now is JK. Yeah, 5% there. And we look at the others as well. JB Chemicals, 4.5%, 5% gain there, and very large volumes as well. There is Voltamp. I think there is a new initiation from one of the brokers this morning. Stocks up about 6%. Another holding company, Chola Holdings, 4% higher on that one at this stage. There is the insurance business there as well, and of course it owns I think about 60-65% in Chola Finance. Snowman Logistics is up about 4.5%, and so much stuff, right? I mean, across the board, which is going on. 3:1 is what we have in terms of advances to decline ratio. So it's a pretty good-looking screen.
Okay, well, we also have Rajesh Jain back with us of RR Kabel. Mr. Jain, if my voice is reaching you now, I was asking you about, you've given us a guideline of a 20% volume growth for FY25. But you also have some new products that you're looking to launch. What is the outlook on that? What is the kind of growth that you're looking at, particularly from new products?
So in FMCG, we launched a few products in fan category, and we are expecting growth from there. Almost around 30% revenue is coming from new product launch only. So it is, and even in brand level, we have launched our new category, which is a best-in-class housewife holding wire, which is EV Ferris or LSOH. So we are expecting a good growth from new products.
Okay, all right. Thanks a lot for joining in. Well, for now, the market is looking very good. But Dalal Street has also witnessed a host of block deals over the last few days. Let's connect with V. Jaishankar, the Managing Director and member of the board, Kotak Investment Banking, to talk about these block deals and how he's read into them. Jaishankar, thanks a lot for joining in. It's been a while since we've spoken to you, so thank you for taking the time out and speaking to CNBC-TV18. It's been block deals galore. How does one read into it? And what do you see? I mean, is this a trend that you see that can continue, given the kind of momentum that we have in the markets right now?
Yeah, I would agree. It's raining block deals. And I would say this is a trend that you have seen really gain momentum over the last 2 to 3 years. And the primary reason is the strong DI flows. Last year we had $42 billion of institutional money coming in, split equally between foreign and domestic. This year, in the first 6 months, you already have DIs pumping $26 billion, which is more than what they did the whole of last year. And if this trend continues, you're going to probably see a flow between foreign and domestic of $15 billion plus. So with that kind of money coming into the equity market, obviously it needs some new destinations. And I think in that context, blocks are a great tool because these are overnight trades mostly. And IPOs tend to be a lot more long drawn. So if you look at the first 6 months, very few IPOs. Of course, the next 6 months is pretty heavy, but the block deals have given the kind of conduit for investors to invest in good stocks.
But why, Jaishankar, hi, morning, Prashant here. But why, so local, domestic, of course, are buying. But again, that old question, why are where is the money going? So you must have a sense when you get a lot of this stuff done, you'll have a sense of, so promoters are selling 2%, 3%, 5%. Where is the money going? Is it going to buy, homes, real estate? What's happening? Or is it coming back into the market through family offices?
So, Prashant, the block deals sources are primarily three. One is, of course, the foreign promoters. You have seen Timken, Vodafone, Singtel, and a few others sell. They've been pretty sizable back, for example. And I think the foreign promoters selling this current year is probably in excess of $6 billion. You also have Indian promoters selling. You had Mahindra & Mahindra, Cipla, Tata Sons selling their stakes. So the domestic promoters have also monetized. And the third category are your private equity investors, right? There have been multiple blocks, for example, in Embassy REIT, in Mankind, and so on. So I would say these are three primary sources. And in all the three cases, obviously, because these are all come through an FDI route, primarily, or if it's an Indian promoter, they probably are using for multiple sources. A part of it may come to the market, but the balance there is tough to say. But if a P investor is monetizing, he's still investing through some other funds. So in that sense, FDI is growing.
You said the promoter selling stands at $6 billion this year, which includes domestic, foreign, all of the three categories. 6 billion.
Total blocks this calendar year has been 13 billion. I was telling you the figure just for the foreign promoter selling. The balance $6 to $7 billion are between the Indian promoters and the private equity investors.
This calendar year, right, Jaishankar? 13 total and 6 from foreign promoters.
That's right.
Yeah, no. So so again to that question, Indian promoters selling, just specifically out of the three, Indian promoters when they're selling, should that be in any way used as a signal at all, as a comment on go on. Sorry. And of course, each case is different. I mean, 1-2% sale is very different from a 5-10% sale. But I just wanted your thoughts.
Yeah, see, at the Mahindra and the Cipla sale were just about a couple of percentage points. So it's not really big. Even if you look at Tata Sons selling down in TCS, Tata Sons holds closer to 70% plus. So selling $1 billion in such a large company doesn't dilute their stake much. So promoters, particularly Indian promoters, continue to stay very, very strongly invested into their companies. And there may be multiple reasons why anyone is doing this small monetization.
Okay. Now, let's move away from that to something which was approved yesterday at the Sebi board meeting, Jaishankar. This is the the delisting norms, a fixed price option which has been introduced now, right? Will there be takers for it? The question was put to the Sebi chairperson. She said, well, this was a demand from the industry. But what is your sense? Will companies who want to delist, who were not able to, because maybe there was a small group of shareholders who were holding out and not letting it go through, I mean, would a fixed price get the job done? What are your thoughts?
So we have to see, Prashant, because it's still early days. Obviously, Sebi is trying to facilitate companies to delist. And I think you should wait for the first couple of delistings to be attempted through this route. And maybe if there are any further fine-tuning that's required, I think all of us will find some solution.
But no, I'm not asking you to specifically say whether it'll be a success or not. But is it an improvement over the current book building process?
Yeah, that is true, because the model price leaves the leverage completely in the hands of a few concentrated investors, and often leads to a green mail, and companies are stuck because they just can't delist. And to deal with multiple shareholders is not easy. See, overseas you have something called a forced delisting once you reach a particular threshold. In India, the norms are very different, and the model price is the one that made it very difficult. So in that sense, giving the fixed price option is one of the routes. It should help probably in some of the instances where the promoters are stuck.
Got that. Got that. And as you said, I mean, we'll see how it goes once it is attempted. What about the? Have you looked at the holding company norms again, which has been approved by Sebi yesterday? What do you make of it?
I've not really gone into much of detail on that front, Prashant. So early for me to comment.
Okay, got that.
All right.
Just one before we let you go. Do you have in terms of new issuances, IPOs, Jaishankar? There are a few which have been, there is Ola and there is Swiggy, and I'm talking about the bigger ones, but of course there is a steady stream of some of the smaller ones as well. How much of paper are we expecting through the primary route for the rest of this calendar year at an approximate level?
See, so far in the first half, we have seen about $4 billion plus of IPOs. I would probably guess it should more than double that quantum. So there are a number of IPOs which will try to time the market before the end of the calendar year. And I would say if you look at it a little broader from a 18-month time frame, you probably are going to look at $25 to $30 billion of paper coming in, which is really good, right? End of the day, when there is so much of flows, particularly from the domestic, foreign money also waiting in the wings, you need a lot of paper. I think IPOs will provide a very strong source for deployment.
Okay, we will leave it at that. Thanks a lot for joining in. Well, for now, very good looking screen. So let's get the technical guest on board. The Nifty is up 100 points, the Sensex is up over 300 points, and the party continues on Dalal Street. Mitesh Thakkar is with us. Mitesh, hi, good morning once again. This is a market that is just defying gravity now. I mean, there's no other way to put it. But at some point, do you book your profits or do you take fresh long positions? What's the best way to approach it now?
I think a good way and a disciplined way would be to trail your stop losses. We had a gap up today. So in that sense, let's look at the options data also. There's a good build up around the strike of 24,000 and it's about 140 points lower from this spot. So I think that should be my new trading stop loss, maybe 10 points below that, and hold on to the Nifty. We had a target of 24,100, which has been crossed, and the next target will be close to about 24,450, 460 zones on an extension basis. So maybe we might head towards those levels, but it is overbought. So I think, I would be slightly tracking my stop losses regularly and then see how it goes from there.
By the way, Bharti Airtel has now dipped in the red. So it opened up in the green with a gain of close to about, I think, 2 to 3% at one point of time on Bharti Airtel. But now it's given up all those gains. So perhaps the news is priced in, and maybe Bharti Airtel's tariff increase, which ranges between 10 to 20%, could be lower than what the street was anticipating. Maybe they were hopeful of and blended tariff increase closer to 20%. So that could be one factor. And plus, this month itself, for this week, the stock has seen a rally of close to about 5%. So some profit booking, the news may have been priced in. Bharti Hexacom too sees weakness for the second day in a row. Yesterday, it was down 5%. The stock has more than doubled since its IPO price, since its listing. Jefferies downgraded it yesterday to a hold. We're talking about Bharti Hexacom because they're saying that there is not much upside from current levels given the up move, and today it's down another 4.5%. Mitesh, you want to quickly come in on any of these telecom names, even Vodafone Idea is in the red.
But all these charts are good. Maybe it's just a case of booking some profits in news. But to me, I think Reliance, Idea, and Bharti, I think all remain in an uptrend. A good way to trade here would be to look at Reliance, and in the morning show also I discussed the stock. We have positions there, so there's vested interest. Looking at a target of around 3260, 3300 in the next couple of weeks. So I think that could be a good bet. If somebody wants to buy afresh, then maybe you would want to see some kind of a pullback and then accumulate slowly. 3050, 3060 would be an extremely good range to buy into Reliance if you get those prices, and keep a stop below 3010, and 3260, 3300 should be the target area.
Oh, 3260, 3300 is the target area for Reliance. Okay, big upsides forecasted over there. Got that. But we forgot to ask you about your own stock ideas for the day. So, Mitesh, for the rest of the day, what are you looking at?
So, I would recommend a buy on ONGC with a stop at 266 for targets of 280. And FMCG is showing some good strength today. So, Nestle is a buy. Keep a stop below 2530 and look for targets of 2630.
Okay. Okay, thanks a lot for that. So that's on Nestle India. By the way, if you're wondering what's happening with Polycab, there's a large trade that has happened, as we've been telling you, and the promoters have sold 2% stake. But, I mean, just perhaps looking to cash out in this very high liquidity market, right? So the stock from the highs, I think it hit a high recently of around 7,500 or so. It's come off quite a bit. But the earnings, the fundamentals continue to be very strong, but the street is a bit spooked now that promoters have sold a bit of stake. Let's do one thing. Let's take a quick commercial break. Still very strong tidings for the market. On the other side, some more stocks on the move. Stay tuned.
₹267 per share, Ultratech equity investment is valued at $85 per ton on an enterprise value per ton basis. This indeed is lower than what it would cost if you were to actually go ahead and put a new cement plant. That's essentially lower than the replacement cost. Now, provided that this 23% stake in India Cements is just a stepping stone into future further consolidation of Ultratech's holding in India Cements, what does this do to Ultratech's own capacity? Now, currently, Ultratech has a capacity of 20.5 million tons capacity in southern India. This is, of course, excluding Kesoram Industries and the capacity there. With investments in India Cement and Kesoram combined, Ultratech will more than double its capacity in South India to 45 million tons per annum. In terms of market share, this would translate a 22% regional market share for Ultratech as compared to the 10% before these transactions. Remember that the two top players, essentially Ambuja and Ultratech, between them in the southern markets are expected to control 35% of the total capacity there. Now, just to look ahead, India Cements, apart from the cement capacity which I already outlined, also has large land bank reserves, which indicates optionality, right? Growth optionality if they want to do expansion, etc. India Cements, by the way, also has renewable energy and shipping assets in South India, all of which a player like Ultratech can put to good use. So there you have it. Ultratech, the largest cement player in the country, adding another important stake.
Welcome back. Well, it is, the good part about this market is there's no profit booking up until now. It's steady state, smooth up move, and a lot of individual stocks in focus. So let's get straight to it. JSW Energy is the one we're looking at this morning. Vivek is joining in to tell us why you should be watching that. Vivek, over to you.
Well, the company in focus is JSW Infra and Navkar Corporation. Like we mentioned, JSW Infra actually, along the lines of the CNBC TV18 News break, dated January 18th, JSW Infra has gone ahead and acquired majority stake from the promoters of Navkar Corporation. So JSW Infra is looking to acquire close to 70.4% stake from the Navkar promoters, and this particular deal has been done at a discount to yesterday's closing at 95.6 rupees a share. Now, given the fact that they will be acquiring controlling stake, they've also announced an open offer for another 26% stake in the company, and this particular open offer is at 105.3 rupees a share. So this particular deal, when you're talking about the valuations, the enterprise value of the deal is 1,644 crore, and the deal is expected to be closed by the third quarter of FY25. What is it that JSW Infra is getting from Navkar Corp? One container freight station and a Gati Shakti terminal at Panvel, along with that 2 container freight stations at Ajivali in Panvel, and also an ICD, an inland container depot. So quite a good acquisition as far as JSW Infra is concerned, given the fact that it gives adjacencies in another business as well. Now, talking about the valuations, InCred says that this particular deal has been done at a price to book value of 0.75 times FY24. EV to EBITDA is at 27.3 times FY24 levels, and the proposed transaction implies almost a 13% discount to yesterday's closing. Along with that, JSW Infra also, remember, has secured a 35 years Gati Shakti concession at Arakonam. The construction timeline is 18 months. The details of the revenue share as well as the land license fees that JSW Infra has to pay is still awaited.
Thank you very much for that, Vivek. Get into a break on that note. On the other side is our special segment. It's the economy. Lata will get chatting with Neeraj Gambhir of Axis Bank and Parul Mittal Sinha of Standard Chartered Bank as Indian bonds mark their entry in the JP Morgan Emerging Market Bond Index today.
to its kitty and really moving towards its stated goal of reaching a sort of, a long-term capacity goal of 200 million tons per annum. Back to you.
So markets will be looking forward to the budget in terms of policy making for next 5 years. And as you very correctly mentioned, now for Indian equity market, margin expansion story is over. Valuations, we are already trading at a premium to other countries, other peers. And hence it will be all about governance and earnings growth.
GST had certain advantages of avoiding multiplicity of taxes or tax on tax on the various transactions, the various purchase and sales transactions. GST, I think, has been one of independent India's biggest structural reform since 1947. When GST was introduced in 2017, it was expected that once the system stabilizes, and I'm happy to mention and happy to see that in India, the GST has stabilized much faster than many other countries.
Dr. Saneen, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness? Or do you think it's also a cultural issue where, one of the statistics or reports that I was reading indicated that we just...
Big day on Bond Street. Indian bonds enter the JP Morgan Emerging Market Bond Index today. The Indian government securities have apparently already seen worth inflows of about $8 to $10 billion in this year. Actually, starting September, when it was announced that India will be in the index from June 28th. So some inflows have come, but it's a $30 billion almost that is expected because India has a 10% weight in that index, tracked by about $300 billion worth of bonds. So we should get 30 billion in the fullness of time by March 2025. But what happens today? Are people sitting on the sidelines, and on June 28th, at least 1% comes in, so 1% weightage, which means does 1.5 billion, 2 billion enter today? Are we going to see some fireworks in the bond and currency market? For the immediate and the medium-term questions, Neeraj Gambhir, Group Executive and Head Treasury Markets and Wholesale Banking at Axis, and Parul Mittal Sinha, the Head Financial Markets India and co-head of macro trading South Asia at Standard Chartered. Parul and Neeraj, thank you very much indeed for your time. Parul, what is the screen saying? I found the bond yield flat, but London opens at whatever, 1 o'clock our time. Are we going to see some, 6.95, 6.94, 6.9 today?
So yes, like you said, bond market is opening quite flat. There is quite a lot of excitement, discussions with sales, with clients going on. We are seeing a lot of queries as well by clients, but we don't expect that because of the bond market, like you all know, that we are a very deep and liquid market, and I expect that a lot of participants have already built up a fair bit of positions to offload as and when these purchases come in. Also remember that we have a regular scheduled auction day today, so the market has to absorb that supply as well. So we are excited about the potential inflows. What we expected, if the inflows are to the tune of $500 million to $1 billion, market will remain positive and optimistic of these purchases come in. If, however, we print less than $500 million worth of purchases today, that would mean somewhere market participants are disappointed. We will expect that maybe the pace of inflows that we were expecting to be of 2 billion per month, some expectations will get petered down. We just to remind the viewers, more than $10 billion have already flown in of the 25 to 30 billion of inflows expected. The main question on all our minds is this 10 billion in addition to the 25 to 30 billion dollars? or
Yeah.
part of that
You know, Parul, may I interrupt you? I think you have to set your audio right. There is some bit of a jar in the audio. Coming back to you in 1 minute. Neeraj, what is your sense of the same thing? We know that 10 billion has come, but we don't know whether all that is only by the passive funds. At least nobody is telling me that. Is it possible that people would have registered and will be waiting for today to come? Should we expect something second half?
So, Lata, as far as the exposure by index tracking funds is concerned, they actually have three different ways of taking it. One is by direct investments in the government bonds onshore. Second is that they can also buy some of these rupee-denominated bonds issued by supranational entities. And thirdly, they can invest in derivative instruments. So far, we've seen about $11 billion, which has been the increase of FPI holdings in the local bonds. We don't know how much of that is by index tracking guys and how much of that is by sort of active fund managers who may not be necessarily tracking the index, so hard to say that. Secondly, some amount of investments has also happened through the supranational bonds. So the question is that out of this $25 to $30 billion, how much amount will actually come into India and how much amount will be invested through the supranational bonds? Now, that's what Indian markets will not see. So estimates are somewhere between $1.5 to $2 billion of fresh inflows over the next 10 months, which will basically total up to somewhere between $15 to $20 billion. But that's an estimate. Actuals can vary depending upon market conditions.
Fair point. Well, actually, I have learnt all the jargon over the past few days. Supranational bonds are bonds issued about India, on India by, ADB and institutions like that. So that's one way of taking exposure. There you don't have the tax problem, withholding tax issue. So some people take exposure to India through that. The disadvantage over there is it's not a very deep market. I was told by Kenneth Akintewe of Aberdeen Investments. He was on the show yesterday and he said, yes, Supra is a good idea because we don't pay tax, but it's very difficult to get out of that market, hardly any liquidity. So people like him still believe that the money will come. But Parul, now we have you on a better line. If, let's for argument's sake, assume that people have registered, some people called it a very painful registration process, but they have registered and waiting, and say 500 million or 1 billion comes in post 1 o'clock today. Is it that Indian banks are sitting long, people like you all, and will immediately sell, the PDs or something? Or do you think they make, today there's also RBI auction, no? So they can buy the 10-year over there. Short point, will the 10-year bond yield in the market see any movement today?
So Lata, if the bond yields close lower by 2 basis points today, that is the maximum any of us will be expecting for that to happen. Like you said, a lot of market participants are already sitting long in anticipation of these flows. Also, the auction today needs to be absorbed, and that's in the new 10-year bond as well. So we don't expect a move bigger than 2 basis points. So the range will be, if market is disappointed in terms of flows, if less than $500 million of inflows comes in today, we can expect bond yields to inch higher by 2 basis points. If we see inflows closer to $1.5 billion, then we can expect a 2 to 3 basis points rally. Okay. Even there, I expect the domestic banks to come in and take some profit, because bonds have been really stable in the last few months, really range bound. So we've seen selling on the days of some bond yields moving lower, and purchases by them on days where yields go higher. So that trend will definitely continue.
Fair enough. So at least the yields are capped. There is this big buyer on certain days. Neeraj, what would you say is the structural change over the year? By the time we come to March 2025 or whatever, even June 2025, what can be the advantages or otherwise for the Indian market?
So, Lata, first of all, $1.5 billion to $2 billion of monthly flows is actually very small for the bond market. The daily trading volumes and the amount of bonds that are held by some of the large domestic players, including banks, are actually quite a large. So it's not as if this flow is going to make a very big difference to the market. I think the key change here is that we have a completely new investor class globally, which has so far not been exposed to Indian fixed income market. It will get to have an exposure into India. It'll force some of these investors to actually look at India closely, look at India's macro story closely, and position themselves accordingly. I think it basically effectively exposes India fixed income market to a very large and very deep pool of capital and a set of investors who have all along basically been on the sidelines or may not have invested in India because they really didn't need to because we were not a part of any index. Now that it changes. I think over a period of time it deepens the market, it brings more flows into the market, and it brings a different class of investors.
Okay. Fair. Would you say that corporate bond market will be also getting some kind of legs to run, Neeraj? Because, a large... yeah, go ahead.
So, a direct and indirect benefit. The indirect benefit is that if the government bond yields stay low, it basically makes the corporate bond yields also stay low. So, there is a pricing benefit there. The indirect benefit is that a set of investors who are actually looking at India fixed income market, they may start from government bonds, but over a period of time, they may start looking at some of the other instruments as well. For example, some of the PSU bonds, which are quasi-sovereign, they may also start being interested in buying in them. So it expands the horizon.
Overall cost of capital could fall a bit. Parul, now to the more important question is rupee. I was told again by Kenneth Akintewe that the most attractive part of India is the rupee, the most stable currency. Do you see, appreciation? Just what should we be prepared for in the currency market?
So today in the morning, amid a lot of queries and some inflows also on the dollar rupee side, we saw dollar rupee move lower by 5 to 6 paisa compared to the previous close. And that itself, creates some excitement among the traders because dollar rupee has also been trading extremely stable. We think dollar rupee can head down to 83.30 kind of level because of inflows which may be lined up today. But there again, range trading remains the core proposition for traders. Traders would probably take the chance to go long here and look for an uptick above 50 paisa or so. So not very big moves expected. The point being the size of inflows is much smaller than the normal daily volumes either whenever we look at either bonds or FX. So I'm not expecting sizable moves, but yeah, 5 to 10 paisa movements here and there. That will keep the market excited.
Over the year, like as we go towards December 2024, you think there is a chance of rupee appreciation, 82 something, Parul?
Not expecting it to fall below 83. We still think it will remain stable around 83 levels, mainly because we expect RBI to step in and continue to collect reserves.
Yeah, I was also told that they are looking at even the yuan very closely, or should be looking at the yuan closely, which has been depreciating. So maybe Reserve Bank won't allow the rupee to appreciate. Neeraj, medium-term view for the currency now and up to the end of the year. You think appreciation is possible?
I think to answer your question, Lata, the overall impact of these flows will be approximately $20-odd billion. If you look at a balance of payment situation, I think if you look at surplus of about $50 to $60 billion, the 20 is being contributed by these flows. Had these flows not been there, we would still be having a balance of payment surplus. Now, whenever we have a balance of payment surplus, the direction of rupee is entirely governed by RBI's intervention strategy. And I think they have been very, very focused on keeping rupee as a very stable currency, making sure that there is no undue volatility. So I think that trend will continue. On a broader basis, I think it also depends upon what happens to dollar. It's been very strong. We've seen, dollar index cross 106 and maybe targeting 107. So if the dollar strength continues, I would feel that despite the fact that we will have these flows, we might have a bit of a weakening bias on the currency.
Okay. Very quickly, Neeraj, running out of time, but do you think Indian banks are in a good position? They are the guys who hold all the bonds, some mark-to-market gains or at least not losses?
Well, the move hasn't been very large. I think they're still stuck at around 7%. We're trading about 5 basis points here and there. So I don't think it's making a huge difference to the valuation gains to the banking system. But yes, to the extent it creates more demand in the market, I think the overall demand-supply situation for government bonds looks far more favorable than it did, let's say, last year.
Okay, out of time, but of course this calls for a medium-term discussion rather than a today discussion. But Parul and Neeraj, thank you very much indeed for your time. You're stepping in, we are stepping into global indexes. So today is not the day when there will be fireworks, but clearly it was in 1994 that India stepped into the global equity indexes, just feeling the ground as it were, entering the MSCI index. And now, we have something like $800 billion in Indian equities. So this is the start for the bond market, and perhaps the best times will come over the decade as, India becomes more accepted as a bond instrument investment. Thank you very much for watching this special show. It's time for a break. Chartbusters coming up.
Need to brush more than once a day?
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning, to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth, and the biofilm contains bacteria, especially bacteria like strep mutans, which is what causes cavities. So, and of course, gum disease has different bacteria, but there is a whole bacterial biofilm that happens in the teeth. So if you don't remove that biofilm, then the bacteria will remain there and they will act on the gums and of course on the teeth. And so the gum disease and the dental caries both will be a factor if you don't remove the biofilm. So it's extremely important, especially at night, because when you've just eaten and then you go to sleep and it has time to act.
Is it more of a rural problem? Is it also as prevalent in the urban population?
So I would assume, looking at the stats, that the rural problem would be slightly more because also availability of toothbrushes, toothpastes, and other oral health aids is much less than in the urban areas. But awareness, and as Sunil said, awareness and knowledge has to be imparted so that people will be more, able to do what they have to do.
It's a lot of work, but it's been fun to understand what's going on, especially with AI. But I'll talk to you about that in just a second. This is really the mother market for you, Amit, and you've been here over the last few years running the North American business. What's the sense that you get in terms of business confidence, in terms of a return of discretionary spending capacity, discretionary spending power? Is it looking any different today from the last time that you spoke at the end of the quarter?
I think the overall confidence is quite robust, I would say, Shireen. But in the short term, we're going through an election year. There is fear.
Reliance Jio hikes tariff by an average of about 20%. Airtel too follows suit this morning with hikes across plans. Both stocks trade marginally higher, though Bharti Airtel has seen some profit booking from the top.
A large trade in Polycab sees almost 2.75% equity worth 2,715 crore rupees change hands, with promoters likely to have sold stake. The stock is trading lower by around 4.5%.
JSW Infra rallies as it announces the acquisition of Navkar Corp at a valuation of 1,644 crore rupees. 70% stake will be bought from promoters, while an open offer will follow for additional 26% stake.
Sami Hotels rallies after a big block deal where 1.3 crore shares of 4.7% equity changes hands in a block deal window.
Welcome to Chart Busters. I'm Sonal Bhutra. With me is Hurmaz Patakia. Well, the new July series has started with a bang. The June series ended with a bang. So we have the Nifty, which is doing well, up 100 points. The Sensex up 286 points. It is above that 79,500 mark. The mid caps are participating as well. They are the outperformers today, actually 0.5%. And we have the Bank Nifty as well, which is doing well. And you know, half of this year has passed, Hurmaz. And markets this year for sure, this month for sure, has done really well after that fall that we saw on the 3rd of June, and since then it has been a one-way rally.
It's a one-way rally indeed, and what a start to the new series, what an end to the last series, what an end to the week this is going to be. So you have absolutely no complaints if you are a bull for sure. And as you mentioned, the Nifty now well above 24,100. The Nifty Bank is heading towards that 53,000 mark. It crossed that level yesterday but hasn't managed to hold on to those levels yet. But the broader markets are doing well for themselves. The small cap index is up 0.8%, but leading the charge today are PSU banks, and it's come back after a while now. The PSU bank index is up almost 2% as we speak, so good going there for the PSU bank index. SBI leading the charge, they're almost 2% higher. The pharma index is also doing well, as is the metals. What's sulking though are autos, but let's not talk about those that are sulking today. It's a good day for the market so far.
Okay, so that's the market setup right now. Nifty Metal also surging to the day's high. So we have a lot of moving parts. We have two conversations lined up on the show as well. But before we do that, let's shift focus to our special segment where we'll get you a few ideas for profit from Money Control Pro. Khushbu Rai Gupta of moneycontrol.com joins us now to talk about a stock that she's tracking closely.
Today's idea for profit is Dabur India. Dabur is ahead of the curve as compared to its peers, backed by highest rural coverage and product differentiation in the natural categories. The leading growth in key brands and expanding rural presence are driving the market share across portfolio. If we look at the earnings, the company continues to report better growth in the rural market driven by steady distribution expansion. In terms of category performance, the oral care segment growth was ahead of the market, led by higher penetration and outperformance in the herbal toothpaste category. While if we look at the home care performance, the Otomos reported double-digit growth and 600 basis point jump in the market share. We believe that better crop harvest, normal monsoon and favorable budget outcome will aid consumption growth in the coming quarters. The company's growth guidance of mid-single digit will be driven by continued rural penetration and summer-centric portfolio. If we look at the valuation, the stock is currently trading at a PE multiple of 47 times FY26 earnings. Investors with a long-term view can accumulate the stock at current levels and can add on declines.
All right, Khushbu, thank you so much for joining us with all those details. That's about Dabur. Quickly taking a look at the market set again. PSU Banking Index, that is the top sectoral gainer today, 2.3% higher, which is followed by the CPSE Index. So PSU is definitely the flavor of the day today. And if we talk otherwise as well, not a lot of losing sectors, so to say. Nifty Realty absolutely flat with some negative buyers, and Nifty Auto, as Hurmaz was pointing out earlier. But those losses are not major. We are seeing more gains than losses in today's trading session. But you know, there are a lot of IPOs and there's a lot happening in the primary market, a lot of action there. For instance, today we had Stanley Lifestyles, which listed at a premium of around 32%. So let's just talk about that company in detail, and in just a bit we'll go across to the management as well. There you go, 33% higher there. And it's a luxury furniture store operator, Stanley Lifestyles, that saw a debut on the exchanges, listing with gains of about 32% to its issue price. Sunil Suresh, the MD at Stanley Lifestyle, is now joining us to tell us more about the company's post-listing strategy. Mr. Suresh, good morning. Thank you so much for joining us today. And finally, you are listed on the bourses, and congratulations on that. You know, I wanted to talk about your future plans now, because now you will be able to speak about them with greater clarity. The assumptions that the street has made is that FY25 could end with revenues of around 600 crore rupees, 50 crores PAT and 120 crores EBITDA. Is this something which is possible? What is your take here?
Yeah, thank you very much for having us here. First of all, I'd like to really thank the entire investing fraternity that has trusted in us. We have been a long waiting kind of a company. It's taken us more than 2 decades to build the brand. I have personally seen hundreds of quarters go by, and of course, I know that I have a larger and bigger responsibility now, and make sure that our investors are well taken care in terms of the returns. Yes, we are focused. We keep, we are actually thriving in the tailwind of the residential industry or the housing market. So there seems to be some delays in inventory handover to the markets. We have seen a sluggish period in the last 3 quarters, but hopefully there was elections that came in now, and hopefully things are going to get better. We are very much prepared. We continue to very organically grow, and we are here for the long term.
Mr. Suresh, good morning. Thank you for joining in. Congratulations on the listing first up. And since you mentioned that you now have a bigger responsibility towards your investors, I'm sure you're at the liberty to share some numbers now. And I want to ask you first about the B2B business of your company, which is currently contributing around 20% to your overall top line. Do you see that number going forward, say towards 25-30% over the years now, in the next 2 to 3 years?
I think we will be hovering around the same kind of ratio in terms of going forward. We would like to continue doing 80-20 because our focus continues to be more on the B2C, because we see a lot of opportunity to grow in the Indian market. There are a lot of challenges out there to get the right retail space. In the segment where we actually participate, there is not much of issue with online as competition. It's mostly physical stores. So to kind of get the right locations is always a challenge. B2B, I think, is also looking for a good opportunity, because I think in terms of a lot of inquiries coming from American companies who are planning to move from China, China plus one or China plus two kind of a strategy. And since we have all the required norms, and we are truly an international kind of a manufacturing setup with all the required license and permissions, they approach us. So we are carefully growing both the businesses, and that's how we'd like to go going forward.
Okay, Mr. Suresh, you have to give us some numbers now, because I think you will be able to do that now, and the growth prospects are something that the investors would like to know. First up, just revisiting the first question that I had asked you, the estimates that the street had is in terms of growth this year: revenue 600 crore rupees, EBITDA 120 and PAT 50 crore rupees. Is this something that you are working with as well? And when you say B2B and B2C growth both doing well, what kind of growth levels are you looking at in both the segments?
So as I mentioned to you, I think we have organically grown at about 20% CAGR, and that's our target even this year, from where we are. And I think we are traction-wise, we have, like I mentioned, we had last 3 quarters were slow, but we see a pickup. So we still continue to target our numbers, what we have projected. But it also depends on the inventory that the housing has to offer in the various markets we are present. So we are continuing to, target those numbers and keep our, promise to the market.
Mr. Suresh, the last time we spoke, you mentioned that 1,000 crore revenue target over the next 2 to 3 years is very much possible. You mentioned that. And so if that does happen, say you reach 1,000 crores, what does that do to your EBITDA and subsequently to your bottom line as well?
So I think we have really created a brand that has been accepted, and we see a lot of margin expansion going forward, because we are also getting scale. And we will continue to target the 1,000 crore revenues in the next 3 to 4 years. That's been what we are always saying. And I think that the margins will improve drastically, because with scale we are able to save a lot. We get more efficiency in terms of manufacturing, sourcing, localization. So I think our margins will expand. My target is to reach about 15 to 16% PAT as we start growing our business from the single digit 8 to 9% what we have demonstrated in the last 10 years.
All right, take that point. So expansion plans are something which will improve profitability going forward. What about return on equity, return on capital employed? You are in the expansion mode. What kind of asset turn you get on the invested capital, and what is the payback period on this investment?
See, basically from a retail format, I can discuss with you that, our stores usually break even in about 18 to 24 months. And I think our ROCE and everything is quite healthy. We continue to do this. We have been a debt-free company. We want to kind of organically grow, and that's how we project our numbers going forward. But as I mentioned in my previous statement that, with scale, we are able to get higher profitability, and that's what we are going to target.
You're looking to add 10 to 15 stores every year, Mr. Suresh. Is that plan on track for FY25 as well? That you had mentioned about the geographies that you're looking to expand as well, but you mentioned that real estate, finding the right real estate remains a challenge. So is that the reason why you are sticking to a conservative sort of a number of 10 to 15 stores, or are there, do you plan on increasing that number if the opportunity presents itself?
No, I think I've realized that, being around for so many years and doing the retail expansion, it's always better to kind of go a bit slow and measured. We are not in any tearing rush, because also as we see and follow RERA, the residential inventory or the premium residential and luxury residential inventory that is scheduled to come into the Indian market is also scattered over the next 10-year period. So there is no point being in a market early or late. So we are timing ourselves. We also, like I said, take a lot of trouble to identify the right locations, the right rentals, high visibility, catchment area. And so 10 to 15 stores we have demonstrated over the last 3-4 years that is what we have grown at. And that's the continuity what we want to keep.
Okay, let's talk about the supply side now. You import around 60 to 70% of your raw materials via imports. What's the plan here? Will that continue to be the strategy? Which are the raw materials that you import, and from which geographies do you do that?
Yeah, so since we follow very strict international norms in terms of our quality, we are compelled to be a bit import dependent right now, because India does not offer us the kind of raw material that we want to cater to the luxury segment. So we import the timber. For example, we have a forestry certification. We don't use any non-forestry timber. So we are compelled to import timber from North America, from Canada, from Romania. And we also import a lot of leather, because leather, again, high quality upholstered leather. Since we compete with European brands, we need to deliver very high quality leather. So we import a lot of leather from Europe. But that we have already started the localization. As I've always been mentioning, I think the localization is something that we will take time, because to get a very high quality raw material in India still remains a challenge, but we're working on that. There are a lot of now, foreign companies who want to come and establish here because they understand the market is growing. And with our scale, we are able to give them better volume. So that is happening on the side. But idea is to localize. Currently, we are at about 30% localized and 70% import. Idea is to get to the 70% localization, 30% import in the next 5 years. That's the target we have.
And are you confident that you would get there?
Yeah, that's the whole idea, because basically in terms of, like I said, with scale, we get an opportunity to get, investments so people can come and set up their bases here and start supply. It's not possible that in some cases the raw material still has to be imported, even in case of, for example, leather, genuine leather. We have to depend on European cow hides and hides that actually give a fantastic finish for the leather. We don't have the local sourcing here. So we will continue to be dependent, but the value addition will happen mostly in India going forward.
Okay, all right. Localization, that's been the buzzword of late anyway, right? Mr. Suresh, thank you so much for joining us today and giving us all those details and the outlook for the business going forward. That's the word coming in from Stanley Lifestyles. New kid on the block, up 33% right now, and the management says they will be able to improve their profit margins to 15 to 16% once scale picks up. Let's slip into a break now. Up next, the management of EMS will be joining in to discuss the recent order wins. Stay tuned for that conversation.
Tailwinds that we have from good employment rates, good consumer demand, but there are also sense of headwinds with government spending, with inflation, with interest rate environment. So I think while the demand is holding up and businesses' top line is quite strong, they are still taking a cautious approach, investing, but being measured.
And when you say investing, is it incremental investment, or is it really redeploying capital from one area to the next?
I would say the latter. So AI is very, very real, and it's everyone wants to invest in that.
So where are they pulling money out of and putting it into AI?
And the AI has both an applicability on the growth side, but also on efficiency and cost side. So at the near term, you can deploy the technology in business as usual activities and fund your innovation and growth cycles from there.
So pause for now, you believe at least through 2024 till the US elections are out of the way, which is November. So it pretty much takes care of this calendar year.
Yeah.
Back with us here on Chartbusters. 24,150 is where the Nifty is headed towards. And the Sensex, mind you, is very close to 80,000 right now as we speak. 79,600 is where the Sensex is at. So we'll keep an eye out on that landmark for 80,000. Pull up some movers in the broader markets, and CDSL is the top gainer on the Nifty small cap index, 10% higher now on the stock, and that is because they informed the exchanges last night that they are going to consider a bonus issue at its board meeting on the 2nd of July. So 10% higher on CDSL, 2206 on the stock. What's also doing well is MGL, that's up 5%. Fertilizer stocks are making a bit of a comeback. GNFC is trading with gains of around 4% as well. So good going there for some of the broader market names. SAIL is the top gainer on the mid-cap index. Remember, the stock is out of the FNO band today since it's the start of a new series. So that stock is leading the charge within the metal space, 5.5% higher for SAIL as well. So is PB Fintech, 4.5% higher among the other top gainers on the Nifty mid-cap index. But let's get in our second guest on the show now. EMS is the stock in focus after it won an order under the Namami Gange program worth 116 crore rupees. To learn more about the order and get an outlook for the business going forward, we are now being joined by Ashish Tomar, the founder and managing director at EMS Limited. Ashish, good morning. Thank you for joining in. I'd like to talk more about the order first up. What is your share in the order? I'm guessing it's 26%. Correct me if I'm wrong. Who are your other partners in this order? When do you expect it to be executed by? And what are the kind of margins that you are likely to enjoy on this order?
Yeah. In this order, we have partnered with an Italian company, Emit Group, which is specializing in construction of sewage treatment plants. And we had to go with a partnership with that firm due to qualification as required by the Namami Gange project. And this project would be completed in a time frame of around 2 years.
Okay. And will the margins be similar to your current margin profile, or will it be better?
I think margins would remain in the similar range.
Okay. So, earlier you had spoken to us and told us that you have bid for orders worth 4,000 crore rupees. Are such similar orders in the pipeline, or you will see better margin projects? If you can just give us details about what kind of projects do you have bid for, what are in the pipeline right now?
Yeah, currently we have bid for projects majorly in the sewerage sector, but also there is a big project related to construction of road in Ayodhya that we have bid for, and we are waiting for the outcome.
Are you confident that you are likely to get that project? Can you share some more details on that? What is the order value of that project that you have bid for in Ayodhya?
That order value would be somewhere around 900 crores, and we are keeping our fingers crossed.
Is that also, you've bid that in a consortium as well, or you are the sole bidder for that?
No, it's a 50-50 partnership with a local player.
So can you quantify the order pipeline now currently, since you had mentioned that you had bid for 4,000 crores, but are there more projects where you are already L1 and that you're likely to get the letter of award anytime soon?
Yeah, currently we have been declared L1 in around 3 projects. One is a project in Dehradun worth around 450 crores. Other is an electrification project in Dehradun of around 140 crores, and one is a small project in Firozabad.
Okay. So just wanted to get your sense on margins as well. How do you expect margins to move on from here? Quarter 4 was strong in terms of margin performance at around 27% mark. What are the levers for margin expansion from here? Or are you seeing more competitive intensity and that's why maybe margins could come in at lower levels?
No, we bid for projects considering our margins, and we are pretty confident that the margins would remain in similar ranges going forward also.
So 27% margins for FY25, and the top line you had indicated 1,000 crores. Is that a number you'll be watching out for in FY25?
Yes, we are positive.
Okay, both the numbers.
Yes.
Okay.
You had mentioned, Ashish, that your current unexecuted order book stands currently at around 1625 crores. What is the total order book size, if you could share that with us? And I'm assuming that this 1625 crore or unexecuted order book that you have is likely to get executed in the next 2 to 3 years?
Yes, sir. Our total order book size is around 6,300 crores. No, sorry, it was 2,200 crores. Yeah, sorry for that. And unexecuted order is 1,625 odd crores.
Okay. All right. Ashish, last question before we let you go. There are these new RBI draft financing norms. Do they impact infra companies like yourself? What is the balance sheet looking like right now? What is the split in terms of short-term and long-term debt for you, or you're debt-free?
Yeah, currently we are more debt-free. The only debt we currently have on our book is somewhere around in excess of 50 crores. And that too is for a HAM project that we have executed in Mirzapur in Ghazipur. Other than that, we do not have any debt on our book.
All right, Ashish, we leave it at that. Thanks a lot for joining in, sharing with us your views on the road ahead. Wish you good luck for the rest of the year. That was Ashish Tomar there of EMS, winning an order under the Namami Gange project. The stock currently trading with gains of around 1%. It's been an outperformer over the last month, 41% in the last 1 month for EMS. Time for a short break here on Chartbusters. More on the markets and specific stocks on the other side. Stay tuned, we'll be right back.
We are going to see spending, but there's going to be a dislocation of spend. And it's going to be, in certain ways, self-funding, at least for now.
Service by way of hostel accommodation is presently not exempt, which are being provided for students if they are outside of educational institutions. Am I right? If they are within an educational institution, they are already exempt. Now, hostels which are for students but outside of an educational institutions are also getting exempt. The measure of relief for students and working professionals, Council has recommended to exempt accommodation services having a value of supply up to 20,000 per person per month. The condition, of course, is those provided these services are supplied for a minimum continuous period of 90 days.
The valuation is just the score, is the way we call it. So we are all about playing the game. And our game is accelerated computing and building a platform. So for us, generative AI is the killer application among other applications for accelerated computing. And so, you know, we've been doing deep learning since 2000. Yeah.
Welcome back. You're still tuned into Chartbusters on CNBC-TV18. Well, busting the charts today, a lot of stocks from the broader markets and metal index, that's doing well, right? So we do have a lot of metal names in the broader markets doing well. For instance, pull up a Vedanta. That stock is up 3.5% right now. We also had Tata Steel from the Nifty pack, which is up around 1.5%. It's all about metals today. Quite steely moves is what we are seeing. Hindalco is up 1.3%. We have The other names like Coal India also doing well, 1.3% higher. So the PSU basket also is contributing to the gains that we are seeing today. For instance, GAIL is up 2%. It's 2-day running that the stock has done well. Remember, there was a lot of chatter about gas getting into GST that would have been beneficial for GAIL, but there was no discussion on that at all. So the stock was quite consolidated at these levels. Now it's trying to make an up move from those levels, so 2.5% higher on that one. We have Petronet LNG as well. Petronet LNG, by the way, this year has done very well, 47% higher in last 6 months. Today as well, the stock is at the day's high, moving up to that 326 mark. So this is about the PSU and also the metal space. But Bandhan Bank and Man Industries, they are in focus on the back of brokerage notes. Harmas, tell us, what are these brokerages saying?
Well, it's an initiation on both of them actually, and UBS has initiated on Bandhan Bank. They are neutral on the lender. It's a 230 rupee price target that they have given, and it's a pretty cautious commentary that UBS has shared on Bandhan Bank. Now, they're saying that they are expecting a limited and gradual decline when it comes to the higher credit costs that Bandhan Bank has in its MFI book. So that is one thing that UBS has had to say. There has been a lot of chatter around the new CEO for Bandhan Bank after Chandrasekhar Ghosh retires on the 9th of July, and UBS is saying that this appointment of the new CEO will remain an overhang for some more strategic clarity on the medium term for Bandhan Bank. And they also say that the large part of this expected improvement in credit costs is already priced in at current valuations for Bandhan Bank, and as a result of which they see very limited upside potential, and hence they are neutral on Bandhan Bank with a price target of 230 rupees. But on the complete flip side, MK has come out with a very bullish note on Man Industries, and they have a buy recommendation there. They've initiated coverage and a price target of 500 rupees. What they're saying is that the stock has already doubled in recent times, and that is on the back of better business fundamentals and also executing the expansion plans that they had announced earlier. And this, the street is yet to factor in the execution, the project execution from here on, which is likely to double the group's revenue over the next 3 to 4 year period. And the transition that Man Industries has seen from potential to delivery is likely to create meaningful shareholder value going forward. And despite the stock trading at a valuation which is higher than industry, MK is saying that they are finding some comfort on the FY27 earnings multiple, which is around 8.3 times. So positive commentary there on Man Industries from MK, initiating coverage and with a price target of 500 rupees. Also pull up the stock and see how it's doing in today's trading session. Most of the broader market stocks have done well there. You can see almost 6% higher is Man Industries, 420 on the stock, price target of 500 rupees.
Okay, all right. Thank you so much, Harmas. So those are two stocks in focus on the back of brokerage updates. With that, it's a wrap on Chartbusters. But stay tuned. Trading Hour comes up next with all the market action.
Jensen, presented to OpenAI the first DGX in 2016. So that's a very, very long and deep involvement with all of the ecosystem associated with generative AI.
So no overnight success, which is what people sort of suddenly, like, where did NVIDIA come from? To the layperson, I mean, it's just a phenomenal story that's taken shape in the public perception over the last few years. But there's a lot of work that's gone in over the past 2 decades in building it out to be what it is today.
Yeah, I mean, we've been working on this for many years. We always work with all of the developers and all the research laboratories and universities, all of the startups, small startups as well as mid-size and large startups, and all of the, global research centers, global capability centers, and major ISVs. It takes a long time to build a market.
It does take a long time to build a market. Umesh, let's talk about what is faster, leaner, better now at Uniphore, since we're talking about what generative AI can potentially do. I mean, how has life changed for you at Uniphore?
Well, first of all, great to have you back in Silicon Valley, Shireen. Much like you were talking to Shankar about these things are not overnight success. I founded the company, hard to believe, 16 years ago. We've been at this for 16 years, and sometimes I meet customers who think AI was born after the GPD moment.
Right.
But some of us have been at this for a decade and a half and more. But what's truly shifted in the last couple of years, which has been truly profound, we today serve some of the biggest companies, not just in North America, but around the world. These are large banks, large telecom companies, large retail companies who've been using AI, but now with Gen AI, what's profound is AI is now a boardroom topic. It's being discussed in every board meeting in a publicly traded company.
Yeah.
Wall Street is measuring companies on their AI strategy, and the stock prices are being shifted up or down, depending on what companies announce. And for that reason, CEOs and CIOs are now singularly responsible. A lot of the customers that we've been dealing with, prior to GPT, AI was being bought as part of a software as a service application. Something in marketing, something in contact center, something for sales. Now AI is an infrastructure that no company can ignore not having within itself. And for the last couple of years, we've seen tremendous traction. Matter of fact, we grew our top line a little over 60% last year, which was an acceleration from the previous year, and we're seeing the same trend continue now. So I'm seeing an insatiable desire at the C-suite around the world about how do we become AI natives? How do we keep our sovereignty when it comes to AI? How do we not share our data with somebody else? And what kind of internal tools and technologies do we need to make this all happen?
Speaking of startups and high tech, the Wall Street Journal has a front page today on comparing what you did with Cisco and what's happening at NVIDIA today.
Yes.
And Cisco.
Good morning. Welcome to Trading Hour. I'm Reema Tendulkar. With me is Sonia Shenoy. It's a Friday morning. It's the fifth day of gains for our markets, and what a breathless up move it's been this week. The Nifty is now surpassed 24,000, comfortably above it with a 100-point gain. The Sensex continues to climb on and now within striking distance of that 80,000 mark. Mid-caps too are participating. Mid-caps lagged a bit earlier this week, but today you are seeing a good up move in the mid-cap space. Sonia, hi. Week to date now, the Nifty is up 2.7% and the mid-cap index is now up close to about 0.6%. What a week it's been. It's literally been a breakout week.
It has been a breakout week. It's been a breakout month. It's been a breakout year, right, for the market. I mean,
and this was the year where everyone thought it's going to be a quiet, flat, a consolidation kind of year, but the first half doesn't seem to suggest that.
So as I was saying, right, who would have thought that the market would take just 20 sessions, 25 sessions to go from 23,000 to 24,000? I mean, it's been remarkable, the kind of momentum that we've seen. And I think more than anything, Reema, it is the influx of money that has come in from the domestic institutions, the kind of confidence that people have had post the government coming into power for the third term. All eyes are on the union budget. It's a fabulous Friday of trade, no two ways about that, and just gaining more ground. The best part about the markets today is that there's been no sign of volatility, there's been no sign of profit taking, and we're only enjoying the fruits of what has been a really strong ride for the market. But the big story that we're focusing on this morning is that Reliance Jio has hiked their tariffs after 2.5 years by an average of around 20%. Bharti Airtel has also followed suit this morning, hiking across plans. Of course, Bharti is coming in for some profit taking right now, but Reliance is really the star of the show in the last couple of days. Reema, what are the finer details? I know this was expected, but what are brokerages saying right now?
Well, for starters, as consumers, we need to get ready to pay more for our mobile bills because Reliance Jio yesterday announced a tariff hike for the first time in 2.5 years, and less than 24 hours later, Bharti in the morning has followed it up with a price increase. Now, Jio's tariff increase ranges from 12 to 25%. For Bharti Airtel, the tariff increase is between 10 to 20%. Yes, in terms of timings, much anticipated on expected lines, but for Bharti Airtel, I think it's slightly lower than what the street was anticipating. They would have hoped for a tariff increase, which is closer to that of Reliance Jio, a blended price increase of about 20%. So maybe that explains why Bharti Airtel is also a bit soft in today's trade. But you still have 5 days before this becomes effective because both these tariff increases are effective 3rd of July. Now, Jio taking the lead is read positively by the industry. Now, Kotak in its notes says the last 2 rounds of tariff increase were led by Vodafone Idea in December of 2019 and Bharti in December of 2021. But this time, it's Reliance Jio which is taking the lead. And unlike Bharti and Vodafone Idea, who've been very vocal about the need for an industry tariff repair, Reliance Jio has not been upfront about the need for an industry-wide tariff hike. So therefore, Reliance Jio taking the lead on raising tariffs is a sentiment positive for the entire industry. Now let's get to the numbers, right? How expensive are your bills going to be? Now the entry-level plan, which is for the most price-sensitive customer, has seen a price increase of 22% for Reliance Jio, and for Bharti Airtel, it's an increase of 11%. So Bharti Airtel's minimum plan now stands at $199. For Reliance Jio, it's $189. But for some of the popular plans, and here we are using that 1.5 GB of data per day plan for illustrative purposes because telcos have so many plans. So for this 1.5 GB of data per day, Jio has hiked tariffs between 20 and 25%, while for Airtel, it's a hike of between 16 to 20%. But that said, Airtel plans are still at a premium to Reliance Jio. Whether it's the entry-level plan, where Airtel is at $199 and Jio is at $189, or for that 1.5 GB of data plan per day, Airtel is at $349, Reliance Jio is at $299. For a 3-month plan, Bharti Airtel is at $859 and Reliance Jio is at $799. There is also an increase in the post-paid plans for Bharti Airtel. Now you can expect an improvement in the ARPUs, and that ARPU improvement will play out over the next 2 quarters. Just to put the numbers, now Jio's ARPUs have been stagnant for the last many quarters, hovering around 182 because there hasn't been that meaningful tariff increase. There you have it. For Bharti Airtel, the tariffs have been slowly inching up, but at 209, they're still short of their goal of hitting 300 rupees. In fact, the company has spoken about 300 rupee ARPU to ensure a financially healthy business model for telcos in India. So while hiking, tariffs, Bharti Airtel in its press release said that we've maintained that the ARPUs need to be upwards of 300 rupees to enable a financially healthy business model for telcos in India. Now the stocks have done well. Bharti is up 45%. Bharti Hexacom is under pressure today, but significantly above its FPO price. Indus Stars has gotten re-rated. The stock is up, 90% since the beginning of the year, but brokerages are still bullish. Jefferies, post the tariff increase, has upped the target price on Reliance Industries to 3,580. Reliance Industries has an overweight call. Now, what next? All eyes will be on Vodafone Idea for a tariff increase, but I suspect they're not going to wait too long, right? Why wait when the 2 other players in the market have already gone ahead and announced?
Absolutely. It's just a matter of time, right, before Vodafone Idea goes ahead and hikes tariffs as well. So get ready, guys, to pay more for your phone bills after the move that has happened in the last 24 to 48 hours. But we spoke to a lot of experts to understand what this means for telecom stocks. Is the risk reward still favorable? Is there more to go on the upside in terms of earnings? Here's Invesco Mutual Funds Tahir Bacha and IIFL Securities Balaji Subramaniam on what they had to say on the tariff hike and the impact that they see going forward. Take a look.
This has obviously come after a very long period of time, but at the same time, as you know, this was also in the works, and it was built into the market expectations over the last some time, and some of the performance of the sector in the last some time has been reflective of that as well. But the good part is that when we tie this up with the fact that there is not really much in terms of now money being spent on spectrum, and that probably gives the chance for some of these companies to incrementally improve their balance sheets as well.
I think these tariff increases would be largely applicable on about 85% of Jio's revenue base, and that would mean that an effective tariff increase would work out to something like 17%. And assuming some down trading, SIM consolidation, etc., I think we should end up seeing somewhere around 14-15% kind of revenue uplift from these tariff hikes. I think at least as far as the telecom side of the business is concerned, a lot of the good news is in the price.
Okay, a lot of the good news is in the price, perhaps. That's the cautionary word coming in from IIFL Securities. By the way, just wanted to mention a couple of stocks that are flying away. Just look at the move on Trent. Trent is at a fresh record high today. The stock is up 3% today, but it's up 80% this year. That's the power of, some of these brands that we're seeing, especially from, in the retail space, right? So Trent has had a huge run in the last 1 year or so, now at a fresh high. Let's take a look at what the market cap of Trent, almost 2 lakh crores now. now in terms of a market cap on trend. Phenomenal move over there. Let's do one thing. Let's slip into a short break. Up next, we'll put the focus on some more buzzing stocks. Stay with us.
The most valued company in the world on the back of the big transition that we saw then with the internet. And that's what we're seeing happen with NVIDIA becoming the most valued company. As people draw these comparisons, what's going through your mind?
Well, first of all, it shows you that technology moved from something that the techies did to impacting every one of our lives. So with the internet, changing the way you work, live, learn, and play, when I said that in '93, most people said, no, it's techies talking. It clearly did. As you watch, there's new generations of leaders about every 10 or 20 years. And I think it's very healthy. So it's Cisco for the internet, then about 4 or 5 players for the cloud, and now NVIDIA is clearly leading in terms of AI. And they're kind of like the indication of the infrastructure of AI. If you want to know how AI is doing, look at how fast NVIDIA is growing. And it is growing great. What is it, 540% in the last 2 years. Today, if you're not into AI and if you haven't got a good AI strategy well in implementation, investors won't invest in your company, even if you're a manufacturing company or a semiconductor company, etc. The pace of investing.
Welcome back. Well, it looks like it's really, strong going for the market, but plenty of stocks are in focus. So I was telling you before the break that names like Trent are at a record high right now. Godrej Properties is at a record high, is at a fresh 52-week high. So keep an eye out on that one. Divi's Labs at a fresh 52-week high as well. And something like a Polycab is under pressure after the promoter sold stake of around 2% Promoters perhaps cashing in on market liquidity, selling 2% of their holdings, which is perfectly fine in a in a high in a market growth like this. But just remember, the fundamentals of the company are strong. Revenue growth for Polycab has been very good. In the quarter gone by, it was about 30%. So is this a time to buy the dip? Time will tell, but for now, promoter selling is something that has caused a bit of trepidation there. But JSW Infra also has been gaining after the company announced the acquisition of a majority stake in Navkar Corporation through its wholly owned subsidiary. Vivek joins in to give us more details on all of that. Vivek, over to you.
Well, that's right. Like we had intimated you on January of 2024, JSW Infra has gone ahead and acquired a majority stake from the promoters of Navkar Corporation. A little over 70% stake is what JSW Infra will be acquiring from the promoters of Navkar Corporation. Given the fact that there will be a change as far as the control of the management of Navkar Corporation is concerned, JSW Infra has also gone ahead and given an open offer to acquire an additional 26% stake, and this particular acquisition will be done by the open offer route. So what is the valuation that this particular, or what is the value at which they are acquiring the stake from Navkar Corp promoters? That particular pricing comes to 95.6 rupees a share. The open offer has been given at a much better value compared to that at 105.3 rupees a share. Remember, both of them are a discount to both yesterday's closing as well as the current market price at which Navkar Corporation is currently trading at. The deal has an implied enterprise value of close to 1,644 crore, and the company says, JSW Infra says, that they expect to close it by third quarter of FY25. What are the assets that includes, one CFS terminal, one Gati Shakti terminal at Panvel, and 2 additional CFS terminals at Ajweli in Panvel, and 1 container freight station and an ICD, that is an inland container depot at Morbi. So, adjacency as far as JSW Infra is concerned, and they will be entering a slightly newer line of business. Now, what InCred says is that the price to book value of the proposed acquisition is at 0.75 times FY24. They are saying the EV to EBITDA is 27.3 times FY24 values. The other piece of development information that is coming for JSW Infra, again, slightly important, the company has secured a 35-year Gati Shakti concession at Arakonam. This is for port development activities. Construction timeline is 18 months. The details of the revenue share bid as well as the land license fee is something that's still awaited.
Thank you very much for that. Let's move on now to Bandhan Bank. UBS has initiated coverage in the stock with a neutral rating. Man Industries is also surging after MK initiates coverage with a buy call. Hormus is now joining in with the details on these two. Hormus.
It's an initiation on both of these stocks, as you just mentioned, but UBS is neutral on Bandhan Bank. They have a price target of 230 rupees, which is slightly higher than where Bandhan Bank is currently trading at, which is just above 200 rupees. What UBS is saying is that they are expecting a limited and a gradual decline in the high costs, high credit costs that Bandhan Bank has in its MFI book. So they're expecting a gradual decline there. And the new CEO appointment, which has been the talk of the town ever since news of Chandrasekhar Ghosh retiring on the 9th of July has come up, and they say that this will continue to remain an overhang for the medium-term strategic clarity on the lender, and that is why they are neutral. And they also say that the large part of this expected credit cost improvement for Bandhan Bank is mostly in the price for the stock, and hence they see very limited upside on the stock, which is why they have initiated coverage with a neutral rating. But on the flip side, MK has come out with a note. They have initiated coverage on Man Industries, and they have with a buy recommendation, a price target of 500 rupees, which is still substantially higher from the current levels as well. The stock, they say, has doubled in the recent times. That is on the back of better business fundamentals and executing their expansion plans that they had highlighted earlier. And it is this project execution going forward which the street, according to MK, is not factoring in currently, and this execution is likely to double the group's revenue over the next 3 to 4 years. And they also say that this transition that the company has made from potential to delivering on what their potential is likely to create meaningful shareholder value going forward. And even though the stock is trading at a higher than sector valuations, what is giving MK comfort is the FY27 earnings multiple, which is just around 8 times, and that is why they are bullish on the stock with a price target of 500 rupees. The stock up and about in today's session.
Okay, thanks a lot for that. So that is Man Industries. But let's slip into a quick break. When we return, we'll discuss the market technicals. Is there more to go on this market? Mitesh Thakkar will join in and discuss his top trading bets. Stay tuned.
It's about 10 times faster and can be 10 times bigger than what we saw just a few decades ago.
You know, you've been a big champion and a big believer in the India story, but there's a long distance still to go to fully realize the potential of this partnership and this relationship. Where do you believe it's being constrained today?
As the largest democracy, watching your elections just occurred, and congratulations to Prime Minister Modi. It was a smooth election. There was no issues in the market, and I think that's a model for the rest of the world's democracy to follow. And now you're seeing the country lead in innovation. My challenge is don't be satisfied with just what we're doing. We've got to dream bigger in terms of the overall approach. So this is what I really think about in terms of where we are today. I think we've got to look at where we go. I do think it will be the century for India. I think it will be also the decade for India.
The latest challenge that you're up against is the US government looking at whether, again, there is a violation of policy and whether there are sort of fees that are being collected without consent or, you know, explicit consent and so on and so forth. I mean, how do you deal with something like that?
Well, you first go back to the principles and the facts, and the reality is that it was the government's case is misguided, and so we will fight it and we'll refute it in court. I think if you take a step back and you think about what Adobe has pioneered, the subscription economy and the digital economy is everywhere. I think when I try and read your content, it's probably going to be available through a paywall as a subscription. We have open and flexible policies where some people can pay for it up front and get a discount, and others pay for it on a month-to-month. So having flexibility makes sense. But, you know, it's something that we will address, but we certainly believe that we have been flexible. You know, we offer customer choice and we're completely transparent about this. You know, when you subscribe to the plan, it says annual bill monthly. And it's an annual plan. And so, but at the end of the day, for us, what really motivates us is the fact that we're impacting and innovating. And I think if people didn't feel like we were innovating, they wouldn't be subscribing to our services. And that's what we have to keep focusing on. Well, first, I'm really proud of what our team has done. When you think about the content.
Welcome back. PSU Banks is the best performing sectoral index today. It's got a gain of about 2%. The largest bank in India, State Bank of India, has an up move of 1.7%. Even PNB Bank is up close to about 4%. So PSU banks don't contribute too much to the Nifty Bank. The Nifty Bank is still trading absolutely flat, but PSU basket in it is riding high. Mitesh is now with us for a technical check on the markets. Mitesh, morning. Thank you for joining in once again. Your thoughts on the morning so far? What are the key trends, your takeaways, and what would your stock calls be?
So, good morning. I think one of the key trends is that, there's some sectoral rotation happening. FMCG is coming back into picture. But that apart, I think the Nifty after strong opening has been sideways. So it's not a very bad thing. The Bank Nifty is also not looking negative. But between the two indices, I think, just looking at the overbought situation, if I get a dip in Bank Nifty, that would be the more interesting index for me to look at. Closer to about 52,500, 52,550 zones is where I think buying can be initiated with a stop below 52,350. So we'll take a 200 point kind of a stop and take it from there. And the rest, I think, trading is more of stock specific for me. That's the way we are approaching it.
Okay, so since trading is more stock specific, want to understand from you what are the individual stocks that you're looking at this morning and where are the buy calls showing up?
See, I talked about FMCG and I think related segment. I think that is definitely a very interesting part. So I have a buy on Hind Unilever. I think that after a few days of correction is trying to come back into some kind of an action on the upside. So buy here with the day's low as the stop loss, 24.63, and look for a target of around 25.30, 25.35 to begin with. And Dr. Reddy is something which is moved up. I would want to buy it slightly lower. There's a good price volume breakout in place. So let's see if you get a mild intraday dip, closer to about 63.70, 63.75. Buy with a 40-point stop loss, 63.30, and look for target of around 6,500 plus.
Thank you very much for that. Let's get back to stock-specific action. Shares of Star Health are surging today. They had an investor meet yesterday. Yash joins in with the key details from that. Yash.
Well, Reema, as you rightly pointed out, Star Health Insurance had an investor meet on Investor Day, Star Health Investor Day yesterday. The guidance which has come from Star Health Insurance is what is driving the stock move today. It's a very strong guidance. What Star in its investor meet, the important part of it, what it has said is that today, that is end of FY24, it stands at about a gross written premium of 15,251 crore rupees and a PAT of about 845 crore rupees. 4 years down the line, that is by FY28, it expects the gross written premium to reach 30,000 crore rupees, which is a 2x jump from the current point, and also a PAT to reach at about 2,500 crore rupees, which is a 3x jump from the current point. It also expects to maintain a market share of 35% in the general insurance industry. What Star has said is that the growth drivers which it sees for itself going forward would be the agency distribution, the bancassurance distribution, and corporate as well as the digital platform sales coming from that particular end. On the back of this strong guidance given by Star, MK has also upgraded its recommendation of on the stock to a buy rating from a reduced rating. Target price has been revised to 650 rupees from 525 earlier. Another important point which is derived from the investor presentation which Star made is that it says prima facie composite insurance license, through which Star Health Insurance will be able to do life insurance business as well. The company finds that opportunity really attractive. In fact, it said that there are various ways in which it will be able to scale up that business. There is a potential to innovate and integrate products on both health and life insurance, and of course customer need adjacency, which is someone is buying a health insurance policy from Star. There's a very high possibility that it would want life insurance policy also to come from Star. So that also works in company's favor. So those are the two reasons why the stock is gaining in today's trading session.
Okay, thanks a lot for that. Well, let's take a short break on that note. Up next, we'll discuss the market fundamentals with Devang Mehta of Spark Private Wealth Management. Stay tuned.
initiative, something that we pioneered. Over 3,000 companies have now signed up with it. While people understand that AI has all this power, I think it's fair to say there's some heightened sensitivity around what does this mean to me? And so, that I wouldn't call it a trust deficit as much as questions about what that is. And a company like Adobe has a leadership role that we need to play, not just for ourselves with our customers, but for the industry at large about our terms of use. I think there were some questions, and legally everybody who looked at that understood that the content belongs to them. We're not training our models based on that. But I think perhaps in English we could have done a simpler job of clarifying it. So, which we have. And so, we've rolled it out. We are creator friendly. I think the product innovation that we're delivering, Shireen, it always, warms your heart when you look at the amount of innovation that we're delivering. And I think we've talked about this in the past. AI is going to be this incredibly enabling technology that allows us to, target a broader set of customers. And so I guess it's the era of AI. Now we can create campaigns, we can create content, we can address the content supply chain. So I'm completely convinced that AI, while I acknowledge it'll be disruptive, at the end of the day, it's going to be a massive enabler and a tailwind.
We have got majority of lender approval. We are in the process. NCLT take time and go through a whole process, which process will take place, and then it will be merged.
Okay. So by the end of this fiscal year,
Welcome back to Trading Hour on CNBC-TV18. Today will be an important day for India's bond markets, for rupee, for interest rates and the economy. Starting today, Indian government bonds have entered JP Morgan's Global Bond Index for emerging markets. What are the implications for rates, rupee and the economy? Lata is standing by the wall with a detailed explainer. Lata, over to you.
The name is bond, and I'll tell you why. June 28 is an important day for India's bond markets, for rupee, interest rates and indeed the Indian economy. Starting June 28, Indian government bonds enter JPM's Global Bond Index for Emerging Markets, or GBI-EM as it's called. Indian bonds are to have a weight of 10% in this index. The inclusion, however, will be phased, with 1% of the weight getting added every month till the full weight of 10% is reached in March 2025. Now, why are bond indexes important? The bond index is much like stock indexes, like Nifty and Sensex. Every pension fund and mutual fund around the world can't track bonds issued by every government all over the world and their macros, so they merely follow these global bond indexes. Now, what does inclusion in the JPM GBI-EM index mean for India? Well, the total market value of bonds following the GBI-EM index is about $300 billion. And so, inclusion in this index with a weight of 10% means that funds will purchase at least 30 billion of Indian bonds by March next year. That's the understanding. Typically, funds front run or come ahead of the inclusion. And dealers in India estimate that perhaps about $10 billion have already entered the country and are parked with various banks who could have warehoused bonds for these funds. Now, here's the month-wise flow of dollars into Indian government bonds. As you can see, from September, it's been increasing. That's when JPM announced the India inclusion. About 1 to 2 billion has been coming every month. As a result, foreign ownership of Indian bonds, which was as low as 1.9% of total bonds outstanding in September 23, has now reached 2.6% and is expected to hit about 5% by March 25. It's important to note that all bonds issued by the Indian government don't qualify to enter the GBI-EM index. Only those bonds characterized as FAR, or fully accessible route bonds, are part of the GBI index. Earlier, in India, foreign funds were allowed to own only 5% of any bond. But in February of 2020, 4 years ago, the budget enacted a rule that foreign funds will be allowed to buy some bonds without any limits. These bonds are the FAR, fully accessible route bonds. This enactment was an important step in getting India into the global indexes. As of today, about $400 billion worth of Indian bonds are classified under the FAR. Now, what's the advantage of foreigners buying Indian bonds? The advantage of index inclusion clearly is that there is one more big buyer buying Indian bonds, and therefore yields are likely to fall, thus lowering the cost of government borrowing. And this in turn may reduce the cost of capital for corporates as well. Dealers estimate that since 10 billion has already flowed, in coming months, at least $2 billion of bond buying will happen in each month, every month until March. Additionally, in March this year, that is March 24, Bloomberg included Indian bonds in its emerging market local currency index. This inclusion is expected to take effect from January of 25, and the estimates are it will bring in another $3 to $4 billion into Indian bonds. Now, will such a huge flow of dollars lead to the rupee appreciating? Well, Standard Chartered sees the rupee rising towards 80 to 70 per dollar by the end of the current year. However, the Reserve Bank may well buy up a good part of the forex flows to keep the domestic industry competitive. Now, with falling yields and a stable rupee, India's growth story can get even stronger. So, not surprising, India's equity indexes have been hitting new highs for the past many weeks.
Thank you very much for that explainer. Devang Mehta from Spark Private Wealth Management is now with us to discuss the market fundamentals. Devang, thank you very much for joining in. You know, the big story is Telecom today, so I want to straight away get to that. Now, the question is, with the tariff hike was seen as a big catalyst for the stock price. And stocks have the news is out. The stocks had already run up in anticipation of a tariff hike. This week we've seen, a 4-5% up move for all the players which are involved. So what next? Do you think all the news is in the price? Because in terms of catalysts now, there isn't too much to look forward to which can drive returns.
Thanks, Rima, for having me on the show. Always a pleasure to be on CNBC-TV18. Yes, so I think the news, I think the street was widely anticipating a sort of a tariff hike. It was long overdue. I think the last hikes happened in 2021, and before that, if my memory serves me right, in 2019. So I think after around 3.5-4 years, this type of hike has come to the fore. And mostly what's happening is, you know that Sunil Mittal has been on record talking about the ARPUs being at 200 rupees stagnant for a long time. It took a lot of time to reach 200 rupees, and now from there on, to take it to 300 rupees to make this companies more sustainable and invest in future growth and future technology. So the sense one gets here is this market has sort of become oligopolistic, right? There are only 3 players, basically Bharti Airtel, Jio, both are in terms market leaders, and maybe a third distant Vodafone Idea. So the sense one gets here is that part of it is in the price, but this improves their balance sheet. This also improves their operational efficiencies, and also this industry has a bit of tailwind after a lot of headwind. So the sense one gets here is that this is a positive, though the prices might have not reacted. But while we have seen the return of FIIs into large caps, there has been good buying seen across companies like Reliance, companies like Bharti. Yes, I think this seems a positive set of news, and probably stocks will react over time more on the positive side rather than on the negative side.
Okay, got that. So if stocks will react on the positive side rather than the negative side, Devang, if someone has missed out on the rally in Telecom, is it still worth getting into it now, or do you think that a large part of the juice is already out of the of the stocks?
I think just for the sake of tariff hike, if somebody is wanting to take up exposure, I wouldn't advise that. But yes, on the strength of the business, on the merit of the business, on the future outlook, yes, Telecom seems to be changing. The sense also is that the debt-laden balance sheets of a lot of these companies are also sort of coming down. The investments have happened. There are not further larger investments which look to be on the anvil. And as I said, the balance sheets are more or less now clean. So I think for a long-term perspective, maybe a 1 to 2.5 year perspective, Reliance on the merit of other businesses as well. Apart from Jio, the retail business doing well, even the traditional business has come back to the fore. So it seems like an interesting play. Even Bharti, as such, over the last few months have seen a bit of sort of upgrades in terms of earnings as well. So I think both these businesses look interesting if somebody is a long-term investor.
Okay, so what's the fresh idea, Devang, from Spark Private Wealth? You know, so many brokerages are coming up with new ideas, initiating coverages on stocks. Today you have MK on Man Industries. Earlier you had even Goldman Sachs coming out with many of these, travel plays, etc. What's new from Spark?
Yeah, so the work that we do over a period, yes, those main of stocks or sectors which I can talk about are more or less capex intensive. We have been talking very vocal about a lot of companies, a lot of the sectors, a lot of subsectors, themes. To make it specific, yes, we have been bullish on the energy efficiency theme. A company like Hitachi Energy, in capital goods companies like Siemens. There is a company in stamping and lamination company called Pitti Engineering. These are the portfolio stocks. Of course, if you refer to, these are the stocks that we hold for our clients. These are no recommendations I'm not trying to make, but some of the companies that we still like are more or less into the capital goods, artificial intelligence. There are also companies, I can give certain new examples like air compressor or air solutions as a space. The complete market cap of this space, there are 3 companies which are listed, like Kirloskar Pneumatic, LG Equipment, and Ingersoll Rand. The collective market cap is roughly around 45,000 crore. Most of these companies have ROE, ROC exceeding 30-35%. And the business is growing at 17-18% revenues, and the PAT is growing at around 25-30%. So these are interesting spaces which are proxy plays. If you start anything to do with a warehouse or anything to set up a plant or an EMS or a foreign direct investment which is going to come to India as a manufacturing proxy, you need to be into energy efficiency. You need to be into this air solutions type of companies. Motion management is another sector which we are looking at. People call it bearings, but we call it more a motion management sector, where it's a very niche type of work. They make bearings, and they also have technology to how to lubricate these bearings as well, and how to monitor and track that.
I want to ask you your view on Polycab, because we've had this discussion through the day, right? It has been a huge wealth creator. I was looking at the last 5-year chart of Polycab. It's gone from 600 to almost 7,000. I mean, that's been a remarkable journey. Now the promoters selling part of their stake, just 2% of their stake, and they still own about over 60%. Do you think this is a reason to be concerned, or do you think it's just par for the course, promoters selling when liquidity is high? And would you continue to be bullish here?
Thanks for mentioning this. And on an ongoing basis, we have been generally bullish on this space, be it home improvement, be it FMEG, fast-moving electrical goods companies like Kabel's Polycab has been on the top of our hunting list since long, and we have seen a lot of our clients' money sort of become 7x, 8x, 10x as well. But you made the relevant point that at this levels there will be some profit booking, right? The company had a fabulous quarter. Last quarter was a fabulous quarter, and the management commentary was also good. But it's appropriate that when you make 7, 8x, 10x profits, even the promoters would sort out some, shave out some of the money that such a wealth has got created. Yes, so we also have sort of partially reduced our exposure in the past couple of months, but we still stay bullish on this space.
Okay, stay bullish on Polycab. Got that. I mean, look at the move there, right? This year itself, in the last 12 months, the stock has doubled. So you're saying that stay bullish on this stock, but you've reduced a little bit of your exposure over there. Okay, got that. Just wanted one final thought from your end on, a couple of these names in the banking space that have been big movers, right, lately. This week, I think if you look at the weekly move, we've had all your large movers are in the banking space. ICICI Bank is up 5% this week. You've had a couple like Axis Bank up about 5%. Is there still more to go on names like ICICI Bank?
I think, Sonia, this is a sector or a subsector, private banks particularly, which was a complete laggard over the last 2-3 years. If you take out any business like an HDFC Bank or an ICICI Bank, there was nothing wrong with the business. But the valuation catch-up that happened from PSU banks to private banks, or rather private banks to PSU banks, that was a catch-up that happened. Now, typically, if I can say that if FIIs have started to return, the foreign portfolio investors have started to return, and most importantly, when they return, they are going to come into this top 10, 15, 20 large cap businesses. I think there is going to be a plethora of money which will come here. Also, the valuations which they used to command earlier, they have come down. And I think this is a right time that a lot of sectors are coming back to the fore. A lot of underperforming sectors have come back. So I think banking will be no different. Companies like HDFC Bank, ICICI Bank probably should see a good rally over the next couple of years.
Thank you very much, Devang, for joining in. We need to slip into a very short break on that note. We'll come back with more on the market. Stay tuned.
The unit separated, 6 listed entities of the Vedanta Group?
I think so, because certain things are in my hand, certain things are not in my hand.
Okay.
It is in the hand of NCLT. NCLT normally take 3-4 months time, but sometimes they can take 1 or 2 months more also.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emission testing.
Welcome back. Market regulator Sebi has introduced a new criteria for inclusion and exclusion of stocks in F&O trading. A new fixed price mechanism for voluntary delisting is also introduced. Yash joins in with the key takeaways from the Sebi meet last evening. Yash.
Well, Rima, as you rightly pointed out, all the points which were on the agenda for SEBI's board to consider, all of them have been approved by the market regulator. Importantly, there are 3 major agenda points which have received SEBI board's approval. First one is with respect to the new entry criteria when it comes to, selecting stocks for the F&O category. Second one is with respect to delisting regulations, and under which we'll also have delisting regulations for investment and holding companies. And third one is with respect to regulations on financial influencers of influencers. To start with, the new entry criteria for the F&O category, market regulators' intention was very clear. There are many stocks currently under the F&O category which do not attract a lot of volume, market-wide participation. The intention was to weed them out and to include stocks which actually, come on those criteria of having a good volume and participation. In this towards this particular move, what market regulator SEBI has done is that it has increased the limit on 3 important parameters which are the key criteria points for selecting stocks for F&O. First one is the median quarter sigma order size. The order size has been increased here, which means stocks which have a higher order size will now get eligible to enter the F&O category. The second one is market-wide position limit. That limit has also been increased here, and average daily volume is the third aspect which has been increased. Now, all these three aspects, the value
on these have been increased anywhere between 2.5 to 3.5 times. When Sebi was asked how will it impact the current set of FNO norms, the answer was that the net addition to the current FNO list would be about 5 to 6 stocks, and in terms of total churn, which means stocks going out and coming in, about 24 to 25 stocks will be the total churn as far as the current FNO list is concerned. The second one, as I said, delisting of investment and holding companies. Market regulator Sebi has permitted to transfer the equity shares held by the investment and holding company in other listed companies proportionately to the public shareholders in case of delisting. And second one, Sebi has permitted the IHC to make proportionate cash payments to public shareholders in case these investment and holding companies have other assets like shares in unlisted companies, real estate, so on and so forth. The intention is to give the right intrinsic value to shareholders on delisting of these investment and holding companies, since these companies trade at a discount to their subsidiaries. The third one is regulations on influencers. Market regulator Sebi has said that any registered or regulated entity cannot have any sort of association with unregistered financial influencers through profit sharing, commission, referral, so on and so forth, for any kind of promotion of their products, investment tips or unsolicited stock advices.
Okay, thanks a lot for that. Well, Sebi chairperson Madhavi Puribuch also announced a new criteria for entry of a stock into the FNO market. The regulator has also restricted registered entities from using unregulated entities, including finfluencers, to market their products. Listen in.
We had seen that there were difficulties for investment holding companies to be able to delist because of the holding company discount and other related matters. So we have now facilitated that through a scheme of arrangement, they can do selective capital reduction. And what this will mean really is that they will be able to pass on the benefit of the encashment of their holdings to the extent that they are holding liquid shares, listed shares, to their investors. And the requirement is that at least 75% of such companies, their fair value, should be directly in listed companies. Entities which are regulated by us, they are now being mandated that they cannot associate with people who do one of two things, either of two things. One is if they are not registered investment advisors or research analysts, and yet they are giving investment advice or research analysis. The second is, irrespective of whether they are registered or unregistered, if they are making claims on performance or in terms of portfolio performance, their service performance, etc., unless it is specifically provided for them to be able to give that information of performance, if they are making claims without that approval, then again they are breaking the law.
Okay, before we head into a very short break, here is something interesting. Can a small company become a big player in India's clean energy boom? See how an SME startup went from biogas to leading the green fuel movement as SMB Champion Award celebrates the journey of Indian SMEs. Here's GPS Renewables' inspiring story, powering India's future with green energy.
on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived.
"25 years of excellence and unparalleled growth."
CNBC-TV18, embarking on a quarter-century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable.
Welcome back. We now bring you our special segment, Fin Street. This time my colleague Abhishek Kothari has put the focus on the non-bank lenders. Take a look.
Well, it has been a good quarter for the non-bank lenders. The NI growth has been healthy, led by the fact that AUM growth was healthy for them as well. Now, earnings have largely been led by lower provisions as well. So, improvement in asset quality continued. Outlook remains healthy, despite the fact that some pockets are witnessing asset quality issues. So, for housing finance companies, the AUM growth was about 7.7% YOY and about 3.7% sequentially. In this, if you remove LIC HF AUM growth, the overall AUM growth in housing finance companies was strong at 17% YOY and more than 7% sequentially. NI growth was healthy as well, so the NI improved by 12.5% YOY and about 5.3% sequentially, leading to the fact that calculations showed net interest margin expanded both YOY and quarter-on-quarter to 3.58%. Now, OPEX was high due to rise in other expenses. Operating profit growth was healthy despite the rise in OPEX. So, operating profit growth was 20.8% YOY and nearly 6.5% sequentially. Provisions declined by more than 14% quarter-on-quarter, leading to PAT growth for housing finance companies at 8% YOY and 4.8% sequentially. Asset quality that continued to improve. Value-wise, gross NPA was down 15.8% YOY and net NPA was down more than 37.5% sequentially. Gross NPA ratio as a result declined to 2.73% versus 3.37% in the previous quarter, and net NPA ratio came in below the 1% mark when compared to 1.6% in the previous quarter. So for NBFCs, the AUM growth in Q4 FY24 was strong at 20.75% YOY and about 5% sequentially. NI growth was healthy as well. Q4 showed that the overall NI growth was about 24.3% YOY and more than 5% sequentially. So the calculation shows that net interest margin expanded both YOY and quarter-on-quarter to 6.57%. OPEX was high due to the fact that employee expenses increased for them. Employee expenses were up 35.7% quarter-on-quarter. Provisions were up 36.9% YOY, but it declined by more than 14% on a sequential basis, which resulted in PAT growth of 28.7% YOY and about 38% sequentially. Now, PAT of NBFCs was largely led by Piramal Finance, which reported a net profit of 138 crore in Q4 FY24 when compared to loss in Q4 FY23 and a loss that they reported in Q3 FY24 as well. Asset quality improved, so gross NPA ratio was at 11.5% when compared to 11.95% in the previous quarter. Net NPA ratio declined as well to 4.35% versus 4.5% in the previous quarter. Now, managements have said that microfinance book has come under some pain in the H2 FY24 that we we saw. Asset quality deterioration was seen over here in H2 FY24, where lenders have seen their gross NPA rise by more than 32% in H2 alone. Now, with decline in unsecured loans growth, loan growth can actually come under some pressure for some of the lenders who are focused over there. RBI has been asking lenders to diversify their borrowing mix. This can impact the growth rate as well. Now, low base effect has played out. Inflation and high rates can impact growth in the near term for some of them as well. Affordable housing boost that came in from government actually provides opportunities for housing finance companies to grow at a healthy rate for the next couple of quarters.
Abhishek, thank you very much for that exhaustive, comprehensive analysis of the housing finance sector. But let's get you some grim weather updates now. At least one person was killed and 6 were injured after a portion of the roof of Delhi's Airport Terminal 1 collapsed on cars amid heavy rains this morning. Shivani is now joining in to bring us in more details. Shivani.
Well, Rima, absolutely. It's an unfortunate incident that has happened in the wee hours of today. At around 5 a.m. is what we are getting to understand that a portion of the canopy roof in the departure area of Terminal 1 at the Indira Gandhi International Airport caved. It collapsed onto the parked cars, which were mostly taxis in the departure area, and it has led to the unfortunate incident where one person has lost his life and 5 more are injured. The injured are being treated at Gurgaon's Medanta Hospital. Some time back, the Civil Aviation Minister Ram Mohan Naidu also visited the spot, the Terminal 1, and he has announced a 20 lakh rupees compensation package for the deceased and 3 lakh rupees each for the people who are injured in the incident. Now, meanwhile, the Delhi International Airport Limited has said that all departures and arrivals at the Terminal 1, which by the way is a very busy terminal for domestic airlines, at least have been halted for the moment. At least till 2 p.m. is what we are getting to understand, that no departures will take place from Terminal 1. The check-in facilities have also been stopped at Terminal 1 to ensure passenger safety. Now, the biggest airlines that do ferry passengers from this Terminal 1 are SpiceJet and Indigo, Indigo being the biggest. They have said, Indigo has at least said in a statement that they are trying to accommodate all their passengers on other flights that are departing from Terminal 1 and Terminal 2 and Terminal 3, but it will lead to some cancellations and delays as far as right now we are concerned. As I told you, Civil Aviation Minister has also visited the injured people who are in the Medanta Hospital. The Delhi International Airport, as I told you, has temporarily suspended all operations at Delhi Terminal 1. What happens after this, we will get to know at 2 p.m. because till 2 p.m. all departures and arrivals have been stopped at Terminal 1. The cause of the collapse is what we are given to understand was the incessant rains that battered the national capital region in the wee hours of today, and that is what we are given to understand, that is how this roof collapsed. Not just the roof, but the support beams also collapsed, and that is what led to the injuries and the unfortunate death of that one person. So this is all we have right now, but this is a developing story. We'll get to know what happens to the flight plans in some time as the day progresses. Back to you, Rima.
Okay, very, very unfortunate incident over there, and let's see what the way forward is, but completely avoidable and completely unfortunate in terms of that incident there. But let's do one thing. We've actually run out of time on the show. We leave you with the market actually flattening out a little bit with a gain of around 70 odd points. The Bank Nifty has actually moved into the red. So when we come back, halftime report will take the action forward.
More than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC TV18 has...
Stocks trade in the green, pushing into uncharted territory. Oil and gas and metals are the big gainers, even as industrials and auto trade soft. Mid-caps outperform. Bank Nifty is off the highs of the day.
Reliance Jio kicks off the long-pending tariff repair in the telecom sector with a 12 to 20% hike after 2.5 years. Bharti Airtel follows suit with a lesser revision. All eyes are now on Vodafone Idea.
HCL Technologies, Polycab India and Sami Hotels star in the block deals list today. Kotak Investment Banking tells CNBC TV18 that the deal tally has already topped $13 billion in the first half of 2024.
Sebi revises FNO inclusion norms, offers another option for delisting, permits holding companies to distribute their listed equity among shareholders. It also bars regulated entities from dealing with finfluencers.
Hello and welcome to Halftime Report. I'm Sonal Bhutra. With me is Harmaz Patakia. Well, you know, we started the day with a bang for sure. The Nifty higher about around 100 points at a point in time. We have come off from those levels. So we are around 60 points off the day's high. Still above the 24,100 mark and comfortably there right now, Harmaz. But banks are the one which have not been participating. And since the time it crossed that 53,000 mark, it hasn't been able to come back to those levels. So right now, absolutely flat on the Bank Nifty, but with some negative bias. So this has been one pain point. Mid caps are supporting. They are participating in the rally that we are seeing. But it's a fresh new day, a fresh new series as well that we are starting, and a lot of cues for this particular series.
Historically, the July series has been pretty good for the index, and even the last series, last year, the July series, the Nifty was up almost 4%, and in the month of June was the best series that the market had in the last 6 months. At least it was the best series for the year, because it's the best series since December of last year. So the Nifty slightly off the highs of the day, but you must be remembering the fact that the last 2 days, the outperformance of the Nifty has come despite support from the banks, because all through last week and the better part of this week, it was the banks that was taking the market higher. But yesterday it was Reliance Industries, and even today it's Reliance Industries that is lending that support to the market and ensuring that the Nifty manages to hold on to that 24,100 market. Pull up Reliance Industries as well. That stock is now above 3,100 as we speak. Market cap crossing 21 lakh crore, and the last 1 lakh crore added in the span of just 4 months. So February was that month when Reliance had hit 20 lakh crore. So now we are at 21 lakh crore. The big boy putting its hand up and putting the Nifty higher.
And you know, these periods when we move from one level to the other have been so short. For Nifty going from 23,000 to 24,000, it was just in a matter of around 24 days. So that's what's happening with the markets. And of course, 11% higher on the Nifty, almost 12% this month. We're halfway through the year again. But of course, let's talk about the big story this morning. Reliance Jio hikes tariff by an average of around 20%. Bharti Airtel also follows suit this morning with hikes across plans. Rima is here to give us the finer details and what brokerages have to say.
Thanks so much for that. So just get ready to pay more for your mobile bill. So whether you're Reliance Jio or you're a Bharti Airtel, yesterday in the evening it was Reliance Jio who announced a tariff hike, the first one in 2.5 years, and less than 24 hours later in the morning, Bharti too has announced a tariff increase. This is what the numbers look like. So for Reliance Jio, it's an increase in the range of 12 to about 25%. For Bharti Airtel, it's between 10 to 20%. For Bharti Airtel, you would say it's slightly lower than what the street was anticipating. But you know what the street likes is that this is the first time that Reliance Jio has taken the lead in hiking tariffs. So in December of 2019, it was Vodafone Idea which took the lead in hiking. Then in December of 2021, which was the last hike 2.5 years ago, it was Airtel who hiked tariffs. But this time it's Reliance Jio who hiked tariff. And Reliance Jio, unlike say a Vodafone Idea or a Bharti Airtel, has not been very vocal about the fact that tariffs need to go up. If you remember, Gopal Vittal in his last conference call for Bharti Airtel spoke about how tariffs are absurdly low. So therefore, the fact that Reliance Jio has taken the first step to hiking the tariffs, is seen as a big sentiment positive by the industry. Now let's get to the numbers. The entry-level plan has been hiked. So for Reliance Jio, it's gone up by 22%. It stands at 189 rupees per month. For Bharti Airtel, it's an increase of 11%. Moving on to some of the other plans, and here just for the sake of illustration, because there are so many telecom plans, we've picked up the 1.5 GB of data plan per day. And there the price increase for Reliance Jio stands between 20 to 25%, while for Bharti Airtel it ranges from about 16 to 20%. But as you can see that even after the increase, Airtel's plans are still at a premium. Whether it's for the entry-level plan where Airtel is at 199 and Jio is at 189, or even for the other plans. So for instance, that 1.5 GB plan per day for a month that I was earlier referring to, Airtel is at 349, Jio is at 299, and even for the 3-month plan, Airtel is at almost 860 and Jio is at 800 rupees. Remember, there is an increase in the price for the postpaid plans. Now, what does this mean for the financials? Expect an improvement in the ARPUs, and this plays out over the next 2 quarters. For Jio, ARPUs have been stagnant at 182 rupees for the last couple of quarters due to the absence of tariff hike. For Airtel, tariffs have been slowly inching up. But you remember, the goal for Airtel has been to hit ARPU levels of about 300 rupees because they've always said that for a financially healthy business model, for the correct return ratios, 300 rupee ARPU plus is what the industry needs. Now, stocks have done very well. It's Airtel is up 45%, Vodafone Idea significantly up from its FPO in August. Indus Stars has gotten re-rated, but brokerages are still fairly bullish. So Jefferies increased the target price on Reliance Industries to 3,580, overweight call on Reliance Industries. The question is, how much of it is in the price, and when is Vodafone Idea going to go ahead and announce the tariff increase? Back to you.
All eyes on Vodafone Idea indeed. Reema, thanks a lot for that update. The big news coming in from the telecom space, a sector that has been buzzing through and through the month of June. Let us also listen into what Invesco MF's Tahir Badshah and IIFL Securities' Balaji Subramanian had to say on the tariff hikes and the subsequent impact.
This has obviously come after a very long period of time, but at the same time, as you know, this was also in the works, and it was built into the market expectations over the last some time, and some of the performance of the sector in the last some time has been reflective of that as well. But the good part is that when we tie this up with the fact that there is not really much in terms of now money being spent on spectrum, and that probably gives the chance for some of these companies to incrementally improve their balance sheets as well.
I think these tariff increases would be largely applicable on about 85% of Jio's revenue base, and that would mean that an effective tariff increase would work out to something like 17%. And assuming some down trading, SIM consolidation, etc., I think we should end up seeing somewhere around 14-15% kind of revenue uplift from these tariff hikes. I think at least as far as the telecom side of the business is concerned, a lot of the good news is in the price.
And you can also catch the special show on this tariff hike, as we just mentioned. This show will take place at 2 p.m. this afternoon. We'll be joined by Sanjay Kapoor and Omkar Tangsale. So tune in to CNBC TV18. And among the other stock movers in today's session is Aether Industries, and that is surging today after the company has signed a strategic supply agreement with Baker Hughes. Sonal, what are the details here?
Well, yes, the stock is higher on the back of this news. In the morning, the company informed the exchanges that they will go ahead, sign a strategic supply agreement with Baker Hughes. Remember, Baker Hughes is an American energy company based in Houston, Texas, and has a lot of fields in terms of refining and drilling as well. The effective date of the agreement is 25th June 2024, and the initial term is 5 years, extendable by 3 additional one-year terms, and thereafter extendable on yearly basis as well. They have not given the size of this particular agreement, but they say that they will be including 6 products in this particular agreement for contract manufacturing. Now remember, contract manufacturing is a smaller part of their business, but it's the higher margin business for the company. All 6 products will be manufactured by Aether Industries for the first time in the country. Most products will be manufactured by their wholly owned subsidiary, where they already have the setup ready in terms of assets, the manufacturing plant. That is Aether Specialty Chemicals Limited. So that is something that the street likes. But do remember, in last couple of quarters, the company has not been able to see the growth that they had seen earlier. That's largely because of what we've been seeing in the chemical sector. We'll have to see how they execute this particular contract, and most importantly, what is the amount that they'll be getting from this. Margins for sure will be higher because it's a contract manufacturing agreement.
Interesting. 4% higher is Aether Industries, now at 930. The stock doing well for itself. It has done well in the last 1 month as well. Almost 15.5% higher is the stock. There is Aether Industries buzzing in today's trading session. Time for a short break. Up next, we get you a conversation on the key takeaways from the Sebi board meeting. Sriram Velayudhan of IIFL Securities and Abhishek Dadu of Khaitan and Company will join us to talk about the new norms for Sebi for the FNO and delisting. Stay tuned. Back on the other side.
The remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have
$10,000.
Back with us here on Halftime Report. Now, market regulator Sebi has introduced a new criteria for inclusion and exclusion of stocks in FNO trading. A new fixed price mechanism for voluntary delisting is also introduced. Yash is now joining in with the key takeaways from the Sebi meet last evening. Yash, what were some of the important takeaways?
Well, Hormaz, everything that was on the agenda for Sebi to consider and approve has been approved by the board of the market regulator. And as you said, there were three most important things that received Sebi's go-ahead as far as regulations are concerned. The first one was the new criteria for selection of stocks into the F&O category. The second one was delisting norms for investment holding companies and otherwise, and the third one were the regulations for financial influencers or finfluencers. To start with the most important one, the new criteria for selection of stocks in the F&O category, what Sebi's intention was to essentially weed out the stocks which don't attract a lot of market participation. There's not a lot of volume in those stocks, to weed them out and include the stocks which actually satisfy these both conditions. Here what market regulator Sebi has done is that on three important parameters which are used for selection of stocks in F&O category, it has made an upward revision. What are these three conditions? The first one is the median quarter sigma order size, and upward revision to that has been done. The second one is market-wide position limit, and the third one is average daily volume. Now, of course, when you make an upward revision to all these three parameters, it indicates that stocks which either have a larger median quarter sigma size or market-wide position limit or average daily volume will get included in the F&O category, and stocks which do not satisfy these three conditions will move out. As far as the input from Sebi is concerned, the net change in the current F&O list, which currently has about 182 stocks, would change on the upward by about 4 to 5 stocks. The total churn in that category would be about 24 to 25 stocks. The second point was, the voluntary delisting. Here, market regulator Sebi has introduced the concept of fixed price delisting as as an alternate to the reverse book building process. What Sebi has done is that on the counter offer for a delisting, Sebi said that the threshold, which is currently 90%, can be reduced to 75%, but with the caveat that out of the 75%, 50% will have to be public shareholding. In terms of delisting of investment holding companies, Sebi has permitted these investment holding companies to transfer equity shares held by them in other listed companies to public shareholders proportionately. They've also permitted them to make proportionate cash payments to public shareholders against their assets like land and, of course, shares in unlisted companies. On finfluencers, market regulator Sebi said that no registered or regulated entity can have any association with unregistered entities like financial influencers for promoting any sort of investment products or investment advice.
Okay, all right, Yash, thank you so much for bringing us all those details. That's, of course, an important story and a big update that has come by. Let's now listen into Sebi chairperson Madhabi Puri Booch on the announcements.
We had seen that there were difficulties for investment holding companies to be able to delist because of the holding company discount and other related matters. So we have now facilitated that through a scheme of arrangement, they can do selective capital reduction. And what this will mean really is that they will be able to pass on the benefit of the encashment of their holdings to the extent that they are holding liquid shares, listed shares, to their investors. And the requirement is that at least 75% of such companies, their fair value, should be directly in listed companies. Entities which are regulated by us, they are now being mandated that they cannot associate with people who do one of two things, either of two things. One is if they are not registered investment advisors or research analysts and yet they are giving investment advice or research analysis. The second is, irrespective of whether they are registered or unregistered, if they are making claims on performance or in terms of portfolio performance, their service performance, etc., unless it is specifically provided for them to be able to give that information of performance, if they are making claims without that approval, then again they are breaking the law.
Okay, all right. Let's take this discussion forward and understand what the impact could be. First up, whatever changes have been announced on the F&O side. Sriram Velayudan, Vice President, Alternative Research, IIFL Securities, is joining us on the phone line. Sriram, good afternoon. Thank you so much for joining us. Well, first up on the F&O changes, are they in line with what was expected earlier? And what kind of impact do you see in terms of F&O additions or deletions, if any?
Yeah, hi, good afternoon. So, yesterday late evening, Sebi released the much-awaited revised F&O eligibility framework. The broad contours of the new rules remain the same. Contours in the sense, in terms of the criteria like liquidity, quarter sigma, market-wide position limit, deliverable value and all, the criteria haven't changed. But the threshold for inclusion and exclusion has undergone significant change. In terms of quarter sigma, it has been raised from 25 lakhs to 75 lakhs. Market-wide position limit from 500 crores to 1,500 rupees, 1,500 crores, and deliverable value from 10 crores to 35 crores. Additionally, one more criteria which is usually used for testing the liquidity of the index derivatives has been incorporated for stock derivatives as well. This is called the PSF framework. So basically, the liquidity will be checked across futures and options, as well as the open interest structure will be checked, assessing whether that stock after the introduction in futures and option is liquid or not. Overall, looking at the revised framework, the objective is here to rationalize the framework in the sense over a period of time, basis the liquidity, whether the stock sustains or not in the F&O space.
Sriram, good afternoon. Thank you for joining in. One of the objectives here is that the fact that this revision that has been made is to prevent manipulation and to ensure a lower risk to the system. But could you elaborate more on this as to how will this ensure that there is a lesser risk to manipulation simply because there is a criteria revision? Would that lead to a lesser risk of manipulation?
No, but in terms of manipulation, I think the criteria like quarter sigma, deliverable value, and all takes care of these elements. Because the very fact that, as you mentioned, the concept of if there is manipulation comes into picture. The threshold of raising the factors like quarter sigma and deliverable value should address these issues. At the same time, the very concept of market-wide position limit is a part of free float has to be there in the specific name at the end of the specific month. I think somewhere down the line, these factors are already getting addressed in terms of selecting the stocks. Post additions, a lot depend on what the price action in the stock is. But if you look at the eligibility criteria, somewhere in an inherent manner, these factors are getting addressed.
Okay, all right. I was going to ask you, as I asked you earlier as well, any big names which are expected after these changes to be in the F&O and subsequently in the September Nifty review, do you expect them to come there as well? Or these new norms would change what you had assumed earlier?
Sure. So, basis the revised criteria, we did some analysis. So, at this juncture, the way it works is in terms of the eligible candidates, it depends on the discretion of the concerned authorities. In terms of stocks that will get deleted from the futures and options, there is a fixed framework. Let's say if a specific stock is not fulfilling the criteria for 3 consecutive months, it should move out of F&O. So when we implemented the revised criteria on the existing universe, we found 64 to 66 names have potential to get introduced in F&O over a period of time, and roughly 24 to 30 names might get deleted if they don't improve in terms of the criteria that has been mentioned. Now, coming to your question of Nifty eligibility, as I said, introducing a specific name in an F&O has an element of subjectivity. Those stocks like Zomato, Jio Finance and all, in terms of the eligibility criteria, are right up there. across all the criteria in terms of liquidity, quarter sigma, market-wide position limit, deliverable value, and all. So let's say currently the street is, we have two schools of thoughts in the sense, currently the street expectation for Nifty September semi-annual review is Trent and Bharat Electronics in place of DVs and LTI. Let's say in an hypothetical scenario, Zomato and Jio Financial Services get introduced in FNO, these set of expectations can undergo significant change. Like in that case, Jio Finance, Zomato and Trent will become eligible in place of DV's, LTI Mindtree and Eicher Motors. So a lot depends on the stocks that get introduced in FNO. As I said, it's totally subjective.
All right, Sriram, we'll leave it at that. Thanks a lot for joining in, sharing with us your views on these important changes announced at the Sebi board meet yesterday. By the way, the market has cooled off substantially from the highs of the day. Now the Nifty has slipped into the red as we speak, now around the fighting to hold on to levels of 24,000 now on the downside. But moving on, Sebi has also permitted holding companies to distribute their listed equity among shareholders. It has also barred regulated entities from dealing with finfluencers. To discuss more on these developments, let's now connect with Abhishek Dadu, who's partner at Khaitan and Company, who is joining us now. Abhishek, good afternoon. Thank you for joining in. What do you make of these moves? I'll start off with the holding companies first, because the holding companies were spoken about a lot last week, considering these revision in the norms that were in the offing. What do you make of this decision from the market regulator?
Thank you for having me. I think it's an excellent decision. It's something which has been brewing for a while, and I think it's about time it came to the forefront. This will really ease the process for a lot of these companies to go private. I know a lot of them have been raring to consider a delisting, but the current regulatory regime just doesn't permit it. So with this new permission, effectively what the regulator has done has said that, look, you go through a scheme of arrangement. We will allow a capital reduction for the public shareholders. And the method that they've prescribed is a fairly transparent method, which is to say that if the listed entity holds a listed stock of other companies, you can effectively directly pass them through or directly transfer those shares on a proportionate basis to the public shareholders. And at the same time, if it holds real asset, for example, land, building, unlisted stock, then you can pay out a cash value in lieu of those holdings. So this enables a lot of these companies to go for a scheme where once they've managed to eradicate the entire public shareholding, they can automatically deem the company to have been taken private.
Okay, all right. Take that point. That's on the holding company and the changes there. With respect to delisting, Abhishek, you know, earlier there was reverse book building. Now it's a fixed price process. Fixed price shall be 15% above the floor price. And there are other contours to this particular topic as well. Is it better? How does it become better than what was there earlier? I just wanted to understand that, because the Sebi chief also said that they have taken a lot of consideration, a lot of feedback from the industry, and this is what was suggested. Can you explain how is it better for maybe the company or the investors?
Yeah, no, it's an absolute game changer. I mean, this will change the entire landscape of delistings in India. So maybe I'll briefly explain. The way it would work earlier is that any company looking to go private or to delist would have to go to the market, tell the market that I want to take this company private and I want you to offer your shares to me. So the public comes and they tender their shares. The tendering price is not fixed. So there's a bare minimum price. Let's assume it's 100. Now the public can come and tender at 100, 110, 150, 500, 1,000. There is no cap. In fact, in some of the cases that we worked on, the price on the market is around 250 and people have quoted at 1 lakh. So the absurdity sometimes is quite up there. Now, of course, the threshold to go private is that you need to hit a 90% of the total share capital. So if you hit 90% based on public tendering, then you can successfully take the company private, but the discovered price will effectively be the price based on which the public has tendered their shares. So let's say 100 rupees share, and because of public tendering, your final discovered price to take the company private is 500. I mean, that results in a slightly absurd scenario because the promoter may not have 500 rupees to pay you, right? So that renders the entire transaction commercially unviable. And while you've made a delisting offer, you effectively walk away empty-handed. Now, this also has an impact on the market because the market has now been turned on its head, right? For that particular stock, there was an expectation the price might have gone up. If they don't go ahead with the delisting, the stock will crash again. So to cure these evils, Sebi has come out with an excellent proposal. The proposal is effectively there is a regulatory minimum floor price. Let's again take the example of 100 rupees. And they said that you apply a minimum premium of 15%. And that, to my mind, is a very reasonable premium. I mean, if you think about it, anytime you buy further control or you're taking a company private, you will offer a certain degree of premium. And 15%, to my mind, is a fair premium that a lot of promoters would be willing to offer. So as long as you apply the 15% premium, and here you propose 115 rupees in our example, which is a 15% premium to 100, then it's left to the public to decide whether they want to tender or not. So it's a binary decision. You say yes or no. If you think 115 is fair, please come and tender. If you think it's not fair, don't tender. So that makes the entire process a lot easier. If they manage to get 90% at 115, they take the company private, otherwise they don't.
Interesting, because there has been plenty of back and forth around delisting of companies. You've seen multiple attempts being made by companies and they have failed because the price discovery could not be happening at that fair price. But Abhishek, I wanted to touch on the point of influencers as well. Now, the regulator has barred regulated entities from engaging with influencers, but that does not end the problem in its entirety, right? Because there are plenty of smaller investors who still follow a lot of these influencers, and a lot of them also write about analyzing the fundamentals of the company and so on and so forth, but do not specifically give a buy or a sell recommendation. So part one of my question is, does this not end the problem in its entirety because they still continue to exist? And part two of the question is, does this writing articles and not giving a buy or a sell recommendation fall under this Sebi regulation now?
Yeah, so on the first one, I mean, you're right. Look, it doesn't entirely solve the problem. The regulator's role is to try and make people aware. As they say, if some people have to fall for trickery, they will fall for trickery, right? So, I mean, all the regulator can do is try harder, increase information, spreading information, sort of awareness about people to be smarter. We will still see a lot of missteps, I'm sure. I mean, every day we read about people losing money because they assumed that they could trade in options and make a sudden windfall, but that doesn't really happen most of the times. I think the law still needs a bit of evolution in time to come. It will be a slow process. We can't fix this on day one. You can't sit and regulate every single individual who goes and talks about the market, because there is also a fine line between education versus the recommendation, and I think some will try to take advantage of that. So we'll have to see how the enforcement of this really takes place. But you're right. I mean, it's not perfect, but it's definitely a good step in the right direction.
There have been many steps taken in this direction, but this still goes on. But of course, I think there could be a detailed notification which could follow here, because it's still a lot of grey area, right? But thank you so much for joining us today and explaining those changes that have been announced by Sebi. It was a pleasure speaking with you today. Well, time for a break now. Manish Hatiramani of Deen Dayal Investments will join in with some trading strategies on the other side. Stay tuned.
Nifty hit a record high.
The Nifty rallying to a record high. We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube.
On cement, we generally are positive on the broader infra space, including cement. Obviously, it plays into both the housing and the manufacturing sector. Sequentially, there could be a bit of softness in there because of the construction activity slowing down and the monsoons and all. But I think in general, we still like the sector. Without getting into single names in here, we still like the largest cement player within our coverage in terms of our buy rating. We have sort of more neutralish rating on the rest of the names. So we do think that with the consolidation going on, the bigger players should benefit, and we are constructive on the stock in particular. But as I said, within the broader sort of building materials and infra space, that's where our pecking order lies.
Well, just a while back, we were talking about how Nifty has made new highs. It did come off from the highs of the day, and now there's another fall. So 47 points from, more than that actually. Nifty is at the day's low right now. Absolutely flat, but it's a sharp fall that we have seen from the highs, courtesy Bank Nifty, which is now down 0.5%. So a bigger fall is led by Bank Nifty, and that is something which is causing Nifty to follow pace as well at the day's low again. And mid caps, they are in the green, but again the advance decline ratio in the favor of advances right now, but it's again something that we'll be tracking closely because we've seen an all-round fall in a lot of these names, and yeah, those lines could converge very soon, so that band has narrowed when it comes to the advance decline ratio as well. Manish Hatirumani, a proprietary trader and technical analyst at Deen Dayal Investments, is joining us now. Manish, what are the charts suggesting now? Do you think we could see some volatility today, or we could see some follow-on selling from these levels?
Good afternoon to you and to all our viewers. Well, I feel as we keep moving higher, we will have to play it by ear. And the best way forward, because of being in uncharted territory, is really to track resistance and support levels, because that is where you'll be able to trail your stop losses as well and look forward to forward targets. At this point in time, 24,150 to be precise is a resistance level. If you look at today's high, we kind of crossed there, but we couldn't really keep over there. If we are able to cross 24,150, at least you know that the next level to look out to will be 24,300, and the support currently is at 23,900. So like I said, we'll have to keep updating this 150 to 200 point targets and keep updating the stop losses as we move forward.
What about specific stocks then, Manish? Because all of them have run up to such an extent, do you still have any buy recommendations on your radar, or you suggest booking some profits now?
Actually, I do have a couple of buy picks, but they're not from the frontline Nifty, simply because I'm not really getting any signals to go long over there. So the two buy calls are actually coming from the mid-cap space, because I feel there is a possibility of some additional steam there, along with a favorable risk is to reward ratio. The first buy is on Apollo Hospitals for a target of 6305, stop loss of 6125. In the recent correction, the stock has taken support around the 6050 to 6100 levels, which also happened with good volumes, and we have seen further consolidation before we moved up. The second buy is on a Lupin, which is for a target of 1720, stop loss of 1540. We have a good base building exercise that has happened around 1540, 1580 levels. This has also been backed with active volumes.
Okay, thank you, Manish, for joining us today and giving us those technical bets. A lot of these big banking names are at the day's low, be it ICICI Bank, IndusInd Bank, Kotak Mahindra Bank, HDFC Bank, Axis Bank. So this is something which is causing that big fall that we are seeing for the Bank Nifty as well at the day's low again. And these heavyweights are contributing to the losses that we are seeing right now. We'll slip into a break now. When we come back, we'll get you more on markets and stock-specific action on the other side. Stay tuned for that.
We had seen that there were difficulties for investment holding companies to be able to delist because of the holding company discount and other related matters. So we have now facilitated that through a scheme of arrangement, they can do selective capital reduction. And what this will mean really is that they will be able to pass on the benefit of the encashment of their holdings to the extent that they are holding liquid shares, listed shares, to their investors. And the requirement is that at least 75% of such companies, their fair value, should be directly in listed companies. Entities which are regulated by us, they are now being mandated that they cannot associate with people who do one of two things, either of two things. One is if they are not registered investment advisors or research analysts and yet they are giving investment advice or research analysis. The second is, irrespective of whether they are registered or unregistered, if they are making claims on performance or in terms of portfolio performance, their service performance, etc., unless it is specifically provided for them to be able to give that information of performance, if they are making claims without that approval, then again they are breaking the law.
Every time something like this, a deal of this sort happens in any sector for that matter, almost every other company from the sector starts to buzz, and that's what is happening with all the other cement companies today as well. And similar to what we are seeing, lined up some potential acquisition targets, mostly in the southern part of the country, because spoken to experts as well that most of the southern companies are currently dealing with financial duress. So could be some potential acquisition targets there. Sagar Cement is the first one. Incidentally, this is the Welcome back, and even as the market is significantly off the highs of the day, there are some pockets that continue to buzz in today's session, one of which is tires, and within the tire space, JK Tyre is buzzing in trade on the back of a bullish note, and that comes from MK. Sonia is joining in with more details. Sonia, what does the note have?
Well, thanks a lot for that. So the stock is up almost 6.5% right now, and MK has put out a very interesting note where they have done some channel checks on the tire industry. Now, what they say in this is that the trucking industry, to which companies like JK Tyres contribute tires, they're saying that the fundamentals and the sentiments are very healthy at the moment. The commercial vehicle industry is expected to enter an upcycle from FY26. And the Indian tire companies continue to close the gap with the multinational companies. Now, they're seeing an improving demand, improving premiumization, which will mean better margins for these tire companies. The risk reward is very strong because a stock like JK Tyres trades at 8 times FY26 PE, which is still cheaper compared to its peers. So, MK has reiterated a buy. They have a target price of 700 rupees on the stock, which is a big upside to the current market price. And hence, you're seeing that big surge in trade today. Yes, almost double from current levels, right? 6.5% higher. Thank you so much, Sonia, for bringing us all those details. That's the commentary on JK Tyre. But let's now focus on new listing on the block. Stanley Lifestyles, the luxury furniture store operator, made a strong debut with a premium of 33% to its issue price. Earlier today, we spoke to Sunil Suresh, MD at Stanley Lifestyle, to discuss the company's post-listing strategy. Listen in.
I think that the margins will improve drastically because with scale we are able to save a lot. We get more efficiency in terms of manufacturing, sourcing, localization. So I think our margins will expand. My target is to reach about 15 to 16% PAT as we start growing our business from the single digit 8 to 9% what we have demonstrated in the last 10 years. I think we have organically grown at about 20% CAGR, and that's our target even this year from where we are. We import the timber. For example, we have a forestry certification. We don't use any non-forestry timber. So we are compelled to import timber from North America, from Canada, from Romania. And we also import a lot of leather because leather, again, high quality upholstered leather. Since we compete with European brands, we need to deliver very high quality leather. So we import a lot of leather from Europe. But that we have already started the localization. As I've always been mentioning, I think the localization is something that we will take time because to get a very high quality raw material in India still remains a challenge, but we're working on that. There are a lot of now, foreign companies who want to come and establish here because they understand the market is growing. And with our scale, we are able to give them better volume. So that is happening on the side. But idea is to localize. Currently, we are at about 30% localized and 70% import. idea is to get to the 70% localization, 30% import in the next 5 years.
Stanley Lifestyle is their good debut on the street, almost 30% higher from its IPO price. Time for a short break here on Halftime Report. Bring you more on the markets, but the Indian bonds are making their entry in the JP Morgan Emerging Market Bond Index today. More on that on the other side. Stay tuned. Andhra Cements from insolvency proceedings currently has a capacity of 10.5 MTPA, clinker capacity of 6.5, has plants in Telangana, Madhya Pradesh, 3 plants in Andhra and a unit in Odisha as well. Been an underperformer so far over the last 12 months, only 16% higher and trading at an FY25 EV to EBITDA multiple of 9.2 times. NCL Industries is the other one, where cement is not the only business that it does, but 85% of the company's revenue comes from NCL Industries. 2.7 MTPA capacity, plants in Telangana and Andhra, up 24% over the last 12 months and trading at an FY25 EV to EBITDA of 6.2 times. The third one, KCP, and KCP was in focus because of other reasons all through the month almost. 4.3 MTPA capacity, both of its plants are in Andhra Pradesh, and that was the reason why it was in focus. 132% over the last 12 months, most of which has come in the month of June, and trading at an FY25 EV to EBITDA of almost 9 times. And lastly, Orient Cement, we've had conversations with the management. They've categorically said that they are not on the block, but 8.5 MTPA capacity, a clinker capacity of 5.5, presence in 11 states, plants in 3 states. The stock has also doubled in the last 12 months and trading at an FY25 EV to EBITDA of 9.2 times. So 4 potential acquisition targets in focus. Let's see which one comes up next.
You know, it's a big deal, and this happened this morning in the cement space. We at CNBC-TV18 were the first to report that Ultratech has bought over 20% stake in India Cements via the block deal which happened in the block deal window between 8:45 and 9 o'clock. Now, Ultratech in a statement has confirmed this and more. Let me actually get you the details of what this actually all means. So, cement major Ultratech, the largest cement company in the country with about a 25% overall market share, is buying into South India-based India Cements. Ultratech has put just under 1,900 crore rupees to work to pick up 23% stake.
Welcome back. You're still tuned into Halftime Report on CNBC-TV18. Well, today will be an important day for India's bond markets, for rupee, interest rates and the economy as well. Starting today, Indian government bonds have entered GPM's Global Bond Index for emerging markets. What are its implications for rates, rupee and the economy? Lata is standing by the wall with a detailed explainer. Over to you, Lata.
The name is bond, and I'll tell you why. June 28 is an important day for India's bond markets, for rupee, interest rates and indeed the Indian economy. Starting June 28, Indian government bonds enter JPM's Global Bond Index for Emerging Markets, or GBI-EM as it's called. Indian bonds are to have a weight of 10% in this index. The inclusion, however, will be phased, with 1% of the weight getting added every month till the full weight of 10% is reached in March 2025. Now, why are bond indexes important? The bond index is much like stock indexes, like Nifty and Sensex. Every pension fund and mutual fund around the world can't track bonds issued by every government all over the world and their macros, so they merely follow these global bond indexes. Now, what does inclusion in the JPM GBI-EM index mean for India? Well, the total market value of bonds following the GBI-EM index is about $300 billion. And so, inclusion in this index with a weight of 10% means that funds will purchase at least 30 billion of Indian bonds by March next year. That's the understanding. Typically, funds front run or come ahead of the inclusion. And dealers in India estimate that perhaps about $10 billion have already entered the country and are parked with various banks who could have warehoused bonds for these funds. Now, here's the month-wise flow of dollars into Indian government bonds. As you can see, from September, it's been increasing. That's when JPM announced the India inclusion. About 1 to 2 billion has been coming every month. As a result, foreign ownership of Indian bonds, which was as low as 1.9% of total bonds outstanding in September 23, has now reached 2.6% and is expected to hit about 5% by March 25. It's important to note that all bonds issued by the Indian government don't qualify to enter the GBIEM index. Only those bonds characterized as FAR or fully accessible route bonds are part of the GBI index. Earlier, in India, foreign funds were allowed to own only 5% of any bond. But in February of 2020, 4 years ago, the budget enacted a rule that foreign funds will be allowed to buy some bonds without any limits. These bonds are the FAR, fully accessible route bonds. This enactment was an important step in getting India into the global indexes. As of today, about $400 billion worth of Indian bonds are classified under the FAR. Now, what's the advantage of foreigners buying Indian bonds? The advantage of index inclusion clearly is that there is one more big buyer buying Indian bonds, and therefore yields are likely to fall, thus lowering the cost of government borrowing. And this in turn may reduce the cost of capital for corporates as well. Dealers estimate that since 10 billion has already flowed, in coming months, at least $2 billion of bond buying will happen in each month, every month until March. Additionally, in March this year, that is March 24, Bloomberg included Indian bonds in its emerging market local currency index. This inclusion is expected to take effect from January of 25, and the estimates are it will bring in another $3 to $4 billion into Indian bonds. Now, will such a huge flow of dollars lead to the rupee appreciating? Well, Standard Chartered sees the rupee rising towards 82.70 per dollar by the end of the current year. However, the Reserve Bank may well buy up a good part of the forex flows to keep the domestic industry competitive. Now, with falling yields and a stable rupee, India's growth story can get even stronger. So, not surprising, India's equity indexes have been hitting new highs for the past many weeks.
Lata, thanks a lot for that detailed explainer. All eyes on the Indian bonds. But time for a short break. On halftime report on the other side, put the spotlight on the insurance sector. Stay tuned.
In India Cements. Remember, there are two large shareholders. One is the Radhakrishnan Damani and a sort of family, which owns a little over 20%. And then there is, of course, the promoters who own around 28% in the company. Now, this works out, this just under 1,900 crore investment works out to 267 rupees per share, which is slightly higher than what the stock closed at yesterday. Remember, yesterday we had a 15% rally in the India Cement stock. So the deal this morning happened at a slightly higher price as opposed to the last closing price. Some more details in terms of the companies themselves. Now, India Cements has an overall cement capacity of 14.45 million tons per annum, and it is majorly present in the South India markets. What about valuations of the deal? So at 267 rupees per share, UltraTech equity investment is valued at $85 per ton on an enterprise value per ton basis. This indeed is lower than what it would cost if you were to actually go ahead and put a new cement plant. That's essentially lower than the replacement cost. Now, provided that this 23% stake in India Cements is just a stepping stone into future further consolidation of UltraTech's holding in India Cements, what does this do to UltraTech's own capacity? Now, currently UltraTech has a capacity of 20.5 million tons capacity in southern India. This is, of course, excluding Kesoram Industries and the capacity there. With investments in India Cement and Kesoram combined, UltraTech will more than double its capacity in South India to 45 million tons per annum.
Welcome back. So the pressure on Nifty continues. It's a 23-point cut that we're seeing. At least it's stabilizing at those levels, still above the 24,000 mark, but at the day's low as we speak. But the broader markets, they continue to do well, and a couple of names which are surging in how. CDSL, for instance, is up 15%. A bonus issue is what the company has planned, and on the back of that excitement. Solara Active up 10%, possibility of a block deal here. There's 361 WAM. This particular stock has been surging in last couple of trading sessions. We'll have to figure out what's happening here, but this week itself, the stock has done well, up around 15% Praj Industries is the other one that continues its up move, and City Gas distribution companies. No fresh news updates, but Mahanagar Gas, IGL, all of them up anywhere between 6 to 7%. But that is something we can say for a lot of stocks.
A lot of stocks, yes, indeed. And that's the sector that has been in focus as well, right? With Mahanagar Gas, of course, the City Gas distributors, with the gas coming under the GST ambit as well. The speculations around that. But some other movers that I'm spotting, mid-cap IT has seen a bit of a perk up in today's session in the last few minutes. KPIT Tech is one that has now become the top gainer on the mid-cap index, and that is now up almost 6% as we speak, almost at the highs of the day, slightly off the day's high, but 1650 now on KPIT Tech. That is up on almost 6%. Persistent Systems is the other one. That is up 3.5% as well. So despite the IT index not doing well, there are specific stocks within the sector that continue to do well. Persistent Systems, they're almost 3.5% at the highs of the day. But what is also off the highs of the day though is SAIL. The stock was up almost 5.5% earlier in the day. Remember, the stock is out of the F&O ban, as the stock is now, it's the start of a new series, but 3.5% higher still for SAIL. And lastly, NHPC, that is the one, some flashes were on your screen earlier, and they've signed some agreement as well with the Gujarat Urja Vidyut Nigam Limited, and some news developments there as well. The stock now above the mark of 100, 2.5% higher is NHPC. But before we wrap on the show, let's talk about the National Insurance Awareness Day, which is observed every year, which is today, the 28th of June. This occasion serves as a reminder of the crucial role that insurance plays in securing our financial futures. Here are some words of wisdom from industry leaders and veterans on why one needs insurance. Listen in to Business Lunch. We will follow after that.
We haven't wasted a good pandemic, wherein no longer are people generally asking, why do I need term, which they used to ask earlier. Now they are moving to your second question, that how much do I need? I don't know which variant. And so let me differ because I don't know. But they're no longer largely asking, why do I need? And that's a good place to be in. Now coming to how much do I need? There are various methods of doing it. But I would tell people, let us not, over-intellectualize. Get something more than nothing. Get something more than 10 times cover that today only a savings policy will give you. Let's move beyond that. The vehicle of getting there is not so important. It could be through at least cover your liabilities, so your loved ones are not left with a loan in case you're not there. Definitely have through your employer. Add if your employer is allowing you to top it up. Then take baby steps in term. If you like the concept of return of premium, because you think kuch to paisa aayega wapas, buy return of premium.
My suggestion to everyone would be that, buy the standard product first. The riders also actually are relatively simple to understand if you really want to, but I think there's no need to engage with them. The basic product, if you buy, you are in great shape. And I personally feel that right now all companies are offering a plain vanilla term product, and that is widely available.
GDP is going up, per capita income is increasing. After the basic needs of roti, kapda, makan, as we say, they get satisfied. The next need is of insurance. And when do you buy insurance? Once you come up to that level, when you can save after spending on roti, kapda, makan. Insurance for all is not just something which is not possible. It is definitely possible, it is doable, and everybody in the sector, all stakeholders have to join hands, right from the government, to see that this is achieved. I am personally of a view that 100% claims should be the target for every insurance company for settlement on or before due date.
Most of the insurance products are seen as an expense item. These are not seen as a risk mitigation tool. So most of us think that either I don't need it, or I'll buy it when I need it. Right. Now, both the approaches are extremely faulty. We do spend on our gym, we do spend on our diets, we do spend on ensuring that we stay healthy. Why? Because as human beings, we are trying to minimize the uncertainty, we are trying to minimize the ambiguity. Insurance exactly does this.
In terms of market share, this would translate a 22% regional market share for Ultratech as compared to the 10% before these transactions. Remember that the two top players, essentially Ambuja and Ultratech, between them in the southern markets are expected to control 35% of the total capacity there. Now, just to look ahead, India Cements, apart from the cement capacity which I already outlined, also has large land bank reserves, which indicates optionality, right? Growth optionality if they want to do expansion, etc. India Cements, by the way, also has renewable energy and shipping assets in South India, all of which a player like Ultratech can put to good use. So there you have it. Ultratech, the largest cement player in the country, adding another important asset to its kitty and really moving towards its stated goal of reaching a long-term capacity goal of 200 million tons per annum. Back to you.
So markets will be looking forward to the budget in terms of policy making for next 5 years. And as you very correctly mentioned, now for Indian equity market, margin expansion story is over. Valuations, we are already trading at a premium to other countries, other peers. And hence it will be all about governance and earnings growth.
GST had certain advantages of avoiding multiplicity of taxes or tax on the various transactions, the various purchase and sales transactions. GST, I think, has been one of independent India's biggest structural reform since 1947. When GST was introduced in 2017, it was expected that once the system stabilizes, and I'm happy to mention and happy to see that in India, the GST has stabilized much faster than many other countries.
Stocks slip into the red after hitting record highs intraday today. Private banks lead the fall while oil and gas, healthcare as well as PSU banks support, mid-caps outperform.
Reliance Jio kicks off the long-pending tariff repair in the telecom sector with a 12 to 20% hike after 2.5 years. Bharti Airtel follows with a lesser revision. All eyes are now on Vodafone Idea.
HCL Technologies, Polycab India and Shami Hotels star in the block deals list today. Kotak Investment Banking tells CNBC-TV18 that the deal tally has already topped $13 billion in the first half of 2024.
And Sebi revises F&O inclusion norms, offers another option for delisting and permits holding companies to distribute their listed equity among shareholders. It also bars regulated entities from dealing with finfluencers.
Hello and welcome. You tuned into Business Lunch on this Friday afternoon. I'm Nisha and with me as always is Sonia. So Sonia, today market has been quite eventful actually. But even though Nifty 50 is on the flat line at the moment and of course fallen quite a bit from the high point of the day, but the good news is that it's holding on to the 24,000 above levels still, but tentatively and absolutely flat with a negative bias when we talk about Nifty 50. Sensex too losing just about 80 odd points. Bank Nifty, that's where the real action is. It's led the charge for a weaker market today, over 0.5% down in trade at the moment. But the mid-cap, that is a more resilient pace today, 0.4% up in trade mid-cap index, an advanced decline ratio because of the broader market participation, and that doing much better than the key indices is keeping it still in favor of the advances, but by a very small margin. On my screen, the pharma company Dr. Reddy's, as well as PSU ONGC from the Motors Pack, Tata Motors, and big boy Reliance Industries. What a strong move on Reliance Industries after Jio has called for a tariff hike after 2.5 years. So that is what the picture is really looking like at the moment, Sonia.
Oh, absolutely. I mean, it's a good market, no two ways about that. Just that it's quieting down a little bit at the moment, which is par for the course, right? There is going to be some volatility now that the market has seen record highs day after day. At some point, some correction, minor correction, pullback has to kick in. That's just the order of the markets and how market cycles are. So at this point in time, little bit of profit taking is what you're seeing. But the big story this afternoon, Reliance Jio has hiked tariffs by an average of around 20%. Bharti Airtel too followed suit this morning with hikes across plans. Reema gives us the finer details and what brokerages have to say. Reema, over to you.
Thanks so much for that. So just get ready to pay more for your mobile bill. So whether you're Reliance Jio or you're a Bharti Airtel, yesterday in the evening it was Reliance Jio who announced a tariff hike, the first one in 2.5 years, and less than 24 hours later in the morning, Bharti too has announced a tariff increase. This is what the numbers look like. So for Reliance Jio, it's an increase in the range of 12 to about 25%. For Bharti Airtel, it's between 10 to 20%. For Bharti Airtel, you would say it's slightly lower than what the street was anticipating. But you know what the street likes is that this is the first time that Reliance Jio has taken the lead in hiking tariffs. So in December of 2019, it was Vodafone Idea which took the lead in hiking. Then in December of 2021, which was the last hike 2.5 years ago, it was Airtel who hiked tariffs. But this time it's Reliance Jio who hiked tariff. And Reliance Jio, unlike say a Vodafone Idea or a Bharti Airtel, has not been very vocal about the fact that tariffs need to go up. If you remember, Gopal Vittal in his last conference call for Bharti Airtel spoke about how tariffs are absurdly low. So therefore, the fact that Reliance Jio has taken the first step to hiking the tariffs, is seen as a big sentiment positive by the industry. Now let's get to the numbers. The entry-level plan has been hiked. So for Reliance Jio, it's gone up by 22%. It stands at 189 rupees per month. For Bharti Airtel, it's an increase of 11%. Moving on to some of the other plans, and here just for the sake of illustration, because there are so many telecom plans, we've picked up the 1.5 GB of data plan per day. And there the price increase for Reliance Jio stands between 20 to 25%, while for Bharti Airtel it ranges from about 16 to 20%. But as you can see that even after the increase, Airtel's plans are still at a premium. Whether it's for the entry-level plan where Airtel is at 199 and Jio is at 189, or even for the other plan. So for instance, that 1.5 GB plan per day for a month that I was earlier referring to, Airtel is at 349, Jio is at 299, and even for the 3-month plan, Airtel is at almost 860 and Jio is at 800 rupees. Remember, there is an increase in the price for the postpaid plans. Now, what does this mean for the financials? Expect an improvement in the ARPUs, and this plays out over the next 2 quarters. For Jio, ARPUs have been stagnant at 182 rupees for the last couple of quarters due to the absence of tariff hike. For Airtel, tariffs have been slowly inching up. But you remember, the goal for Airtel has been to hit ARPU levels of about 300 rupees because they've always said that for a financially healthy business model, for the correct return ratios, 300 rupee ARPU plus is what the industry needs. Now, stocks have done very well. It's Airtel is up 45%, Vodafone Idea significantly up from its FPO in August. Indus Stars has gotten re-rated, but brokerages are still fairly bullish. So Jefferies increased the target price on Reliance Industries to 3,580, overweight call on Reliance Industries. The question is, how much of it is in the price, and when is Vodafone Idea going to go ahead and announce the tariff increase? Back to you.
Thanks so much, Rima, for giving an exhaustive really analysis on the big telecom tariff hike in the country after 2.5 years. But you know what, Sonia? Vodafone Idea is in the waiting, and their investors had really invested 18,000 crore rupees through the FPO, mammoth amount for Vodafone Idea, on the back of the expectation of the tariff hike. So that's like something which is in the waiting. But I would like to make one more point about Reliance Industries. It's seen a huge surge, even though market had baked in a large part of the telecom tariff hike, also because of the anticipation of Jio Platforms IPO. And you know, a lot of investors who had invested in this particular company want a value unlocking and appreciation through the IPO, and it at least paves the path and at least is a very critical milestone for the telecom sector for that big IPO coming in.
And you know, that's an important point you make, because a lot of the experts that we spoke to believe that perhaps a lot of the good news is in the price, both for Reliance and for Bharti Airtel. So if you're looking to buy these stocks purely based on the tariff hikes, then perhaps that's not such a great idea, because a lot of the run-up has already happened in the last 12 to 18 months. But let's listen in to what Invesco MF's Tahir Badshah and IIFL Securities Balaji Subramanian had to say on the tariff hikes and the impact.
You know, this has obviously come after a very long period of time, but at the same time, as you know, this was also in the works, and it was built into the market expectations over the last some time, and some of the performance of the sector in the last some time has been reflective of that as well. But the good part is that, you know, when we tie this up with the fact that, you know, there is not really much in terms of now money being spent on spectrum, and that probably, you know, gives the chance for some of these companies to incrementally improve their balance sheets as well.
I think these tariff increases would be largely applicable on about 85% of Jio's revenue base, and that would mean that an effective tariff increase would work out to something like 17%. And assuming some down trading, SIM consolidation, etc., I think we should end up seeing somewhere around 14-15% kind of revenue uplift from these tariff hikes. I think at least as far as the telecom side of the business is concerned, a lot of the good news is in the price.
All right, a lot of good news is in the price when it comes to the telecom story today. Now to a CNBC TV18 exclusive, and sources are telling us that Nazara Technologies is likely to pick up and stake the residual 49% stake in gamified learning app Kidopia. And Rachna, our colleague, is right here with all those exclusive details. Tell us, Rachna.
Right. What we are picking up from our sources is that Nazara is likely to buy 49% of stake in Kidopia, which is a gamified learning app. Currently, Nazara owns about 51% already in Kidopia, and will further now move to buy 49% for about 300 crores. Nazara had initially bought 51% in the year 2020 for about 80 crores. This 49% stake will be purchased from the founders of Kidopia, which are Anshu and Anupam Dhanuka. Now, Kidopia had recorded about 2.5 lakh subscribers as of the end of FY24, with a revenue of about 220 crore rupees and an EBITDA of 55 crore rupees. This, of course, comes in at a time when Nazara has been going big on mergers and acquisitions.
Okay, thanks a lot for that. So that's some news flow coming in over there. Let's slip into a short break. On the other side, the RBI remains upbeat on the financial system, but warns of stress in retail loans. More on this story after a short break. Stay tuned.
Dr. Sanin, you know, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness? Or do you think it's also a cultural issue where, you know, one of the statistics that, or reports that I was reading indicated that we just don't feel the need to brush more than once a day?
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning, to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth, and the biofilm contains bacteria, especially bacteria like strep mutans, which is what causes cavities. So, and of course, gum disease has different bacteria, but there is a whole bacterial biofilm that happens in the teeth. So if you don't remove that biofilm, then the bacteria will remain there and they will act on the gums and of course on the teeth. And so the gum disease and the dental caries both will be a factor if you don't remove the biofilm. So it's extremely important, especially at night, because when you've just eaten and then you go to sleep and it has time to rest.
Welcome back. You're watching Business Lunch on CNBC-TV18. Well, market regulator Sebi has introduced new criteria for inclusion and exclusion of stocks in F&O trading. A new fixed price mechanism for voluntary delisting is also introduced. Yash joins in now with the key takeaways from the Sebi meet last evening. Yash, over to you.
Well, Sonia, everything that was on Sebi's agenda for discussion has been approved by the board. Three most important things that have been approved. The first one is the new criteria, the new mechanism for the calculation and selection of stocks into the F&O category. The second one is with respect to voluntary delisting regulations, and under which delisting regulations for the investment and holding companies as well. And finally, the third one is with respect to regulations on financial influencers or finfluencers. To start with the first one, that is the new mechanism or the new criteria for selection of stocks in the F&O category. The intention from market regulator Sebi was always to sort of weed out the stocks which do not have a wide market participation or which do not have enough liquidity, and to include stocks which sort of satisfy both those conditions. Here, market regulator Sebi has essentially increased the limits on three important criteria points which come in use for selection of stocks under the F&O category. First one is the median quarter sigma order size. Here also the limit has been increased. The second one is with respect to market-wide position limit. Again, the limit has been increased here. And finally, average daily value. All these three aspects, the limits have been increased by anywhere between 2.5 to 3 times, with of course the intention that the stocks which sort of satisfy higher of all these three conditions come into the F&O category, and the stocks which don't move out of this particular category. Sebi has also said that this particular change in mechanism would mean about a net addition of about 4 to 5 stocks in the F&O category. The total churn out of the 182 F&O stocks right now would be around 24 to 25 stocks on the back of this new mechanism. The second one is voluntary delisting regulations. Market regulator Sebi has approved an alternate to the reverse book building process, which is the only process available right now, with a fixed price delisting. Also, what Sebi said that the fixed price shall be 15% premium over the floor price, and in case of counter offer when it comes to any delisting proposal, there will be a cool-off period of 6 months between two delisting proposals, and the counter offer will only be allowed to made if 75% of the shares have been tendered in the first offer. This was 90% previously. One caveat: in this 75% under the new regulations, 50% will have to come from the public shareholders. Delisting of investment holding companies has also been approved by market regulator Sebi under the same thing. And on financial influencers, Sebi has said no registered or regulated entity will have any association with financial influencers or unregistered entities for any sort of profit sharing, referrals or commissions for promotion of investment advices.
All right, thanks so much, Yash. Some very important changes there coming in from the market regulator, especially on F&O inclusion, as well as delisting norms, which, remember, is a pain point for the industry, that the exit has to be smooth. So that's on path to that. Now, the health of India's financial system is robust even under a severe stress scenario, according to the RBI's Financial Stability Report. Now, the report, which was released last evening, also warns about the risk from a build-up in retail loan and a potential rise in bad loans across the non-banking financial companies. Our colleague Ritu Singh is here with all the details of that important report. Ritu.
It's a mixed picture that RBI is painting in the latest financial stability report, even though it emphasizes that the financial system overall is stronger than before and both banks and NBFCs do have enough capital buffers to withstand macroeconomic shocks. However, in this stable environment, RBI says it remains watchful of any emerging risks. Now, banks' gross NPAs are at a 12-year low thanks to both lower new bad loan addition and also high write-offs. And sectorally, RBI finds agriculture has both the highest gross NPA ratio and the overall contribution to bad loans for banks. Now, RBI's macro stress test results show overall, gross NPAs could fall further to 2.5% in the baseline scenario and remain at 2.8% in the medium stress scenario, but they could rise to 3.4% in the case of severe stress by March next year. In the worst case scenario, public banks could see gross NPAs rising to 4.1% and private banks 2.8%. The stress test also finds that capital adequacy of banks could fall even in the baseline scenario, but then this is not so unexpected. Now, importantly, RBI has raised a red flag on retail loans, saying that for private sector banks, the share of slippages from retail loans, excluding housing loans, in overall fresh accretion to NPAs is increasing, with retail NPAs forming 40% of fresh NPA addition in FY24 and the share of these loans in total advances at more than 21%. In the case of NBFCs, the stress test results show that even in the base case, bad loans could rise from 2.7% to 3.5% by next year, and capital adequacy could also fall, with as many as 8 NBFCs failing to meet the minimum capital requirement in case of rise in stress. But keep in mind, these test results are not meant to be a forecast, but just to measure resilience under a hypothetical stress scenario.
All right. Thanks so much, Ritu, for all those details. Let's focus on one stock which is gaining in trade, and especially after a small acquisition that has been done. We are talking about Healthcare Global HCG, which is up 3% in trade and is in focus because of acquiring Vizag Hospital at a 207 crore rupees amount, and this is for 51%, and the rest of the stake will be later also bought out. One significance of this particular transaction, even though the amount is small, is that HCG was number 2 in cancer care, and it has acquired the largest cancer care hospital, Vizag Hospital, and becomes number 1 in cancer care. So this is the significance. And the second important significance for this particular transaction is that HCG is in a sale process, is in talks with several participants, which we have been talking about. Several private equity as well as strategic players are in the fray, and this particular acquisition right at the time of deal making is going to also increase the valuation and the multiples, as well as the interest coming in from the bidders for this large transaction of the sale of HCG, Sonia.
Okay, well, that's on HCG, but let's do one thing. By the way, Reliance Industries has found itself a fresh set of wings, now up almost about 2% at the highest point of trade. In the last half an hour to 1 hour is when Reliance has picked up further steam. So let's see, it's really supporting the market and making sure that it holds above the 24,000 mark. When we come back from the break, a detailed glance into the accident at Delhi's Indira Gandhi Airport that happened today. Stay tuned for more on that.
For rural problem, is it also as prevalent in the urban population?
So I would assume, looking at the stats, that the rural problem would be slightly more, because also availability of toothbrushes, toothpastes and other oral health aids is much less than in the urban areas. But awareness, and as Sunil said, awareness and knowledge has to be imparted so that people will be more able to do what they have to do.
It's a lot of work, but it's been fun to understand what's going on, especially with AI. But I'll talk to you about that in just a second. This is really the mother market for you, Amit, and you've been here over the last few years running the North American business. What's the sense that you get in terms of business confidence, in terms of a return of discretionary spending capacity, discretionary spending power? Is it looking any different today from the last time that you spoke at the end of the quarter?
think the overall confidence is quite robust, I would say, Shireen. But in the short term, we're going through an election year. There is fair amount of tailwinds that we have from good employment rates, good consumer demand, but there are also sense of headwinds with government spending, with inflation, with interest rate environment. So I think while the demand is holding up and businesses' top line is quite strong, they are still taking a cautious approach, investing, but being measured.
And when you say investing, is it incremental?
Welcome back. You're watching Business Lunch. Let's break you some update from the capital today. At least one person was killed and 6 were injured after a portion of the roof of the Delhi Airport's Terminal 1 collapsed on cars amid heavy rain this morning. Shivani, our colleague, is joining in to bring us more details on the latest over there. Shivani, tell us.
Well, Nisha, absolutely unfortunate incident that happened today at 5 a.m. in the morning. Well, a part of the roof of the Terminal 1 of Indira Gandhi International Airport collapsed, and not just the roof, the support beams also collapsed, and the collapse happened on the taxis that were parked in the departure area of the Delhi's Terminal 1, which has led to one person unfortunately losing his life and 5 people are injured. The injured are being treated at Gurugram's Medanta Hospital. Now, the Civil Aviation Minister Ram Mohan Naidu visited and met the injured people. The Delhi Airport Limited has also announced a compensation package of 20 lakh rupees for the family of the deceased and 3 lakh rupees each for the injured people. That's what we are getting to understand now. At the moment, behind me, the NDRF team, the Delhi Fire Services team, and the DGCA team, all of them are on location. Everybody is working together for the rehabilitation of the situation that we are seeing right now. We can't pan to the place, but there is the inundated roof in the background. Now, what is happening because of this is that all the flights that were to depart and arrive at the Terminal 1 of Delhi International Airport have been cancelled for the time being, at least till 2 p.m. is what we are understanding. And Indigo, which is one of the biggest airlines that ferries passengers from Delhi's Terminal 1, has said that today's all the flights that were scheduled to depart from Terminal 1 have been cancelled today. Other flight carriers like SpiceJet have said, the Delhi airport has said that the SpiceJet flights that were supposed to depart from Terminal 1 will now depart from Terminal 3. So a lot of things are having a cascading effect. Ram Mohan Naidu has also said that there will be an inquiry of the situation as to why this happened. So it is a developing story, Nisha. We'll keep bringing you more from the Delhi Airport's Terminal 1. Back to you.
The unfortunate incident over there. Thanks a lot for giving us an update on what's happening there. Let's also listen to what the Aviation Minister, Kinjarapu Ram Mohan Naidu, had to say about this incident.
Regarding the flights that are supposed to be operating from T1, we have informed the airlines people immediately that passengers are the first priority for us also. So passengers shouldn't face any inconvenience. So till 2 o'clock, the flights have been cancelled because an immediate alternative was not able to be established here. So till 2 o'clock, the flights have been cancelled, and whatever flights have been cancelled, the passengers have been told that there will be full refunds to them. And other than that, if they want to travel in an alternative route, that is also being provided. This structure has been built in 2009. And what we have asked the Delhi International Airport Limited also is to do a verification inspection from their side. But we are not just leaving it up to themselves. The ministry, from the ministry, we have DGCA also, which underlooks the safety aspect. So they will also be supervisioning this inspection, and they will also give us a report. Compensation has also been announced, 20 lakh for the deceased, and also for the injured, 3 lakhs.
All right, in global news today, the first presidential debate between US President Joe Biden and his Republic rival and predecessor Donald Trump ended with both the candidates sparring over their age and ability to lead the world's largest economy. While Biden tried to convince voters that he at 81 is capable of becoming the president again, 78-year-old Trump cited his cognitive tests performance to score a point over his Democratic successor. Now, Biden and Trump also had heated arguments over the state of the economy and foreign policy, with both rating their presidency very highly. Opinion polls are currently predicting a very tight race for the US election set to be held on the 5th of November this year.
Okay, and now let's shift focus to the T20 World Cup. India eased past England in the second semi-final of the T20 World Cup in a match that was repeatedly threatened by bad weather and rain. India lost the toss. They were put in to bat after the rain delayed the situation and managed to put up a total of 171 runs, led by a steady partnership between Rohit Sharma and Suryakumar Yadav. Chasing England England was picked apart by India's spin duo of Kuldeep Yadav and Akshar Patel, who picked up 6 wickets between themselves to bowl England out for 103 runs. Team India will now face South Africa in the World Cup final on Saturday night.
You know, Saturday night, I love sporting weekends, and especially when India is in the finals. So really cheering for Team India and our
Big
team there.
up ahead.
Yes, and you know, 2020 is one format where India has aced the world. It's a new format and we have got it right. So all the best to Indian team. With that, it's a wrap on this edition of Business Lunch. Thanks so much for tuning in.
Redeploying capital from one area to the next?
I would say the latter. So AI is very, very real, and you know, it's everyone wants to invest in that.
So where are they pulling money out of and putting it into AI?
And the AI has both an applicability on the growth side, but also on efficiency and cost side. So you know, at the near term, you can deploy the technology in business as usual activities and fund your innovation and growth cycles from there.
So pause for now, you believe at least through 2024 till the US elections are out of the way, which is November. So it pretty much takes care of this calendar year.
Yeah, I would say measured. We are going to see spending, but there's going to be a dislocation of spend. And it's going to be in certain ways self-funding, at least for now.
Service by way of hostel accommodation is presently not exempt, which are being provided for students if they are outside of educational institutions. Am I right? If they are within an educational institution, they are already exempt. Now, hostels which are for students but outside of an educational institutions are also getting exempt. The measure of relief for students and working professionals, Council has recommended to exempt accommodation services having a value of supply up to 20,000 per person per month. The condition, of course, is those provided these services are supplied for a minimum continuous period of 90 days.
The valuation is just the score, is the way we call it. So we are all about playing the game. And our game is accelerated computing and building a platform. So for us, generative...
Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me as always is Vivek Iyer. Markets, they have recovered again. The Nifty is in the green around 20 points. Midcaps are surging as well, but banks continue to see some underperformance. And it is turning out to be a day where there's a lot of volatility so far.
A lot of volatility, quite a few stocks seeing quite a bit of profit booking. And in fact, it's a fresh start to a new series. So, that'll also be an important trigger because the June series is packed with action, especially with earnings coming up. Quite a lot lined up on this particular edition of Midcap Radar. Let's start off with the top headlines. Stocks trade flat despite a strong start in early trade. Pharma, PSU banks and oil and gas lead the gains while private banks and financials drag. Midcaps outperform.
Sami Hotels gains on the back of a block deal where 1.3 crore shares of 4.7% equity change hands, while Polycab slumps after 40.5 lakh shares of 12.74% equity worth 2,716 crore rupees changes hands.
Aether Industries looms in trade after the company executes a strategic supply agreement with Baker Hughes for 6 products. The initial terms of agreement is for 5 years, extendable by an additional 1-year term.
Tire companies are buzzing in trade today. JK Tyre surges over 5% after MK issues a bullish call on the stock, citing healthy trucking industry fundamentals and sentiment as a positive trigger.
JSW Infra surges in trade after the company announces the acquisition of Navkar Corporation at a valuation of 1,644 crore rupees. 70% stake will be bought from the promoters, while an open offer will follow for an additional 26% stake.
Okay, all right, those are the top headlines. Let's take a quick look at what the markets are doing right now, especially on the Nifty, because there's been a lot of up and down in the last couple of trading minutes. Right now, above the 24,000 mark, as it continues to be in the green, up around 10 odd points, but it has come off sharply from the day's high, around 110 points. In the broader markets, things look good. Mid-caps up around 360 points. And some of these tire names, they're suddenly surging. You have CEAT, for instance, that is up 11%. That's a sudden sharp surge that we are seeing. So we'll figure out what's happening there. Maybe some price hikes coming through and other reasons as well. We'll discuss that in greater detail. But for now, again, it's all about broader markets.
You're right. Like you mentioned, so all of the tire companies are near the day's highest point. Look at Balkrishna Industries, look at Apollo Tyres, look at CEAT. So number one, natural rubber prices have cooled off quite significantly. A couple of months ago, JK Tyres took the lead and actually had a price hike announced. It'll be important to note whether any other price hikes or any further price hikes have been announced. But along with tire companies, a lot of other stocks are in focus. And in our special segment, Midcap Movers, Hormaz is here to take us through the midcaps that are moving around in the session.
Well, in the last couple of weeks that have been dominated by large cap stocks and heavyweights of the index, the broader markets have finally decided to put their hand up on the last trading day of the week and say, okay, we are here as well. Let's focus on us as well. So some movers in the broader market, starting off with CDSL, and that stock has surged and how? 15% higher now on the stock. The company is going to consider a bonus issue on the 2nd of July. So 15% higher on CDSL. Praj Industries is up 7%. Mahanagar Gas or the city gas distributors are having a good day today, 6% higher there as well, and Amber Enterprises also seeing gains of around 6%. You just mentioned about tire stocks and tire stocks. The one bullish note on one stock and the entire sector is buzzing in today's session. JK Tyre is the one where MK came out with a positive note, so almost 9% higher there. CEAT is now up 11%. Apollo Tyres and MRF also seeing healthy gains in today's trading session. There were a lot of block deals that have taken place all through the week. Some of them took place yesterday, some today as well. CSB Bank, after some big names bought into the block deal yesterday. Polycab is where the promoters are likely to have sold some stakes, 3% down here. And Solara Active, that saw a big block deal, almost 5.5% equity changed hands this morning. That stock is up 10% in today's session. Some volume buzzers in today. Chola Finance off the highs of the day and is still trading with gains of 11%. Aether Industries, some stock specific news there, 4.5% higher. Holding companies are back with Bombay Burma trading with gains of 7.5% and 361 WAM also trading with gains of close to 5.5%. And lastly, some underperformers in today's session, all of them are nearly at the lows of the day. Samvardhana Motherson is down 4%, as is GMR Airports down 3%, and Godfrey Phillips and Route Mobile also seeing some bit of profit booking today.
Okay, some interesting names there. Thank you, Hormaz, for joining us as always and taking us through that list. It's a good time to welcome Himeen Kapadia of KR Choksi Securities for a technical check on the market. Himeen, good afternoon. Thank you so much for joining us. Well, what are the technical indicators suggesting now? Will we continue to see volatility? Will mid-caps continue to outperform? What are the charts suggesting?
A very good afternoon, Sonal. Thank you for having me on the show. It's always a pleasure.
I think I'd go with what you said. The volatility is still there. Okay, it's not that much. The VIX continues to hover around 14. Markets have been posting fresh highs. Stocks are all over the place. Reliance has done phenomenally well. So in a situation like this, one would have thought maybe the VIX needs to simmer down a bit. That's not yet happened. And now we have a new series also. So I guess the volatility is going to be there. In terms of indices, Sonal, I think they are a bit tired. If you look at the Bank Nifty hourly chart over the last 20 hours, it's formed a rounding top, which is basically a bearish formation, suggesting a little bit of consolidation, cooling off, and maybe a little bit of a dip. Nifty has been insulated mainly because of Reliance. Reliance took 21 weeks to give this breakout, Sonal. So I think Reliance still has legs for a further upside. But except that, if the banks cool off and IT simmers down a bit, I don't think the Nifty can avoid walking into a small correction. I'm not saying anything big. Everything is hunky-dory as of now. But a little bit cool off, I guess, triggered by the Bank Nifty is probably on the anvil. I'm not saying a big one, but little bit, yes.
Thanks for that, Hemin. Which are the individual stocks that you're currently liking?
Hi, Vivek. First stock that I like is Tata Consumer. It's more of a contra buy call. Why contra buy call? Because it's been down for some 19 trading sessions or so, Vivek. Now getting oversold. Indicators on the intraday hourly charts are showing signs of life, crossover buys. So I'm playing a contra trade on that. One can buy Tata Consumer at 1095, stop loss 1075, target 1135. At supports set for a bounce. The second stock is, I'm assuming a little bit of a market consolidation. So I thought I'd go for a defensive way. I have a buy call on Hindustan Unilever. It's been down from a high of 2700 to almost 2430 way. We've been down for multiple trading sessions. It's formed a small rounding bottom. Things are beginning to look good. Oscillators are slowly turning positive. We're playing for a recovery. I wouldn't say a rally yet, but a bounce. Even if we correct or retrace the fall, I think we have upside. So buy on HUL at 2480, stop loss 2450, and a target of 2540.
Okay, all right. Thank you, Hemin, for joining us and giving us all those technical trades as well. Time to slip into a short break. When we return, we'll be joined by the management of Kabel Small Finance Bank to discuss the business outlook and more. Stay tuned for that.
Is the killer application among other applications for accelerated computing. And so, we've been doing deep learning since 2012. Jensen, presented to OpenAI the first DGX in 2016. So that's a very, very long and deep involvement with all of the ecosystem associated with generative AI.
So no overnight success, which is what people sort of suddenly, like, where did NVIDIA come from? To the layperson, I mean, it's just a phenomenal story that's taken shape in the public perception over the last few years. But there's a lot of work that's gone in over the past 2 decades in building it out to be what it is today.
Yeah, I mean, we've been working on this for many years. We always work with all of the developers and all the research laboratories and universities, all of the startups, small startups as well as mid-size and large startups, and all of the, global research centers, global capability centers, and major ISVs. It takes a long time to build a market.
It does take a long time to build a market. Umesh, let's talk about what is faster, leaner, better now at Uniphore, since we're talking about what generative AI can potentially do. I mean, how has life changed for you at Uniphore?
Well, first of all, great to have you back in Silicon Valley, Shireen. Much like you were talking to Shankar about these things are not overnight success. I founded the company, hard to believe, 16 years ago. We've been at this for 16 years, and sometimes I meet customers who think AI was born after the GPD moment.
Right. Welcome back. You're still tuned into Midcap Radar on CNBC-TV18. Let's focus on the financial space. The concerns around the health of rural and semi-urban lending have been on rise lately, with deposit growth also emerging as a challenge. To get more sense on these concerns and how is the business momentum shaping up for FY25, we are now joined by Sarvajit Singh Samra, the MD and CEO of Capital Small Finance Bank. Mr. Samra, good afternoon. Thank you so much for joining us. Well, we have been talking about how there's a lot of pain in the rural economy. There is semi-urban side also, which is showing some pain in the books of listed lenders. You do have some exposure in this area. Can you explain what's really happening here? What's your take?
Good afternoon, and thank you for this connect. Business outlook for us looks to be very positive, as we are also like our 76% of the branches and business is in semi and rural areas. We are like we are into the business model, which is we are into say secured lending. We and we target the middle income group in these areas as well. Where in these segments we don't see anything negative, and the business is going on a very positive note. That is how we feel about this. Yeah.
Mr. Samra, we're almost coming to the end of Q1. Even if you cannot share exact numbers, provisionally, could you give us a direction of how exactly loan growth panned out in Q1? How have you started FY25, and what is the on-ground business momentum like? What kind of advances you've seen?
Actually, for the current financial year, we kept a target of growth for advances from 22 to 24%. Since we are 177 branches after the IPO happening at the fag end of the last financial year, this growth momentum has picked up. So we are on a very positive note, and we'll definitely be meeting or crossing the targets which we have set for ourselves. So we are on the right track. And the key growth drivers which I see for this growth for us is MSME, trading, and mortgages.
Okay, I'll discuss that in greater detail, Mr. Singh. I just wanted to get back to my question. You said in the areas that you function in, or the regions, or the segments as well, you've not seen any pressure, and you will be able to achieve your growth guidance as well. I wanted to understand, because we've spoken to a lot of other listed lenders and they've continuously said that rural and semi-urban continues to be a pain point. What is your current split in terms of loan book? How much is coming from rural, how much from semi-urban, and how much from tier 1 cities or metros as well?
Yeah, if I break it, like 76% of the number of branches come from rural and semi-urban, and a similar number of liability book also come from rural and semi-urban, which is around 74 to 75%, similar to the count of branches. With regard to the loans, it is around 68% comes from rural and semi-urban, and rest is from urban and metropolitan branches. So this is a break for that.
Okay, Mr. Samra, talking about regional concentration, you're largely present in one state of India, that's Punjab. Do you have any plans to step out of Punjab? What are your plans to diversify a book geographically?
Actually, before this conversion, when we started as a small finance bank in 2016, we were a local area bank, and we were confined to very limited geography. Say in Punjab, in 5 districts, we were not even all over Punjab. The operations were just confined to 5 districts. So after that expansion, we started expanding to other parts of Punjab. But of course, we start onboarding the neighboring states as well. At present, our branch count of 177 is spread across 5 states of North India, along with the Union Territory of Chandigarh. Going ahead, the target is, of course, we'll keep on penetrating in the existing markets as well. But more than 50% of our new branches, which during the current financial year, the expansion target is 24 to 26 branches. More than 50% of it's going to be out of Punjab. And of course, we will be adding a new state also to our kitty in this expansion. And we have maintained a contiguity in our expansion because we are into a branch-led business model, and we'll maintain a contiguity in our expansion going ahead also. And we'll keep on expanding like this to the newer states in the time to come.
Okay. So, Mr. Singh, can you give us an idea of what is the timeline for this expansion, getting into the new state, getting into the new branches that you spoke about? Will it be in this fiscal, or will it spill over into the next financial year as well?
No, this fiscal we are 177 branches, and I'm pretty sure that we'll cross the 200 number in this fiscal itself.
And that will include the new state as well?
Yeah, new state as well. Yeah, we are in the process of onboarding Jammu, and where we are starting with 3 branches. Yeah.
Okay.
Mr. Samra, when you started off, you said that FY25 loan growth you've targeted in the range of 20 to 25%, and you said that looking at the current business momentum, you could achieve something higher. Could you quantify that? Second question, in terms of the net interest margin, where do you stand at currently, FY25? What is it that you're targeting? Do you expect to see any contraction because a lot of other lenders are seeing some contraction there?
So with regard to the growth, our projection is 22 to 24% for the loan book. With regard to the net interest margin, I don't see a contraction further into that, but a bit improvement on the other hand. The reason being, our 62 to 63% of the book is floating rate, and out of which 80% is MCLR. So during Q4 24, the cost of deposit remained the same as they were in Q3 24. So the benefit of the MCLR, which we increased by 20 bips during the last quarter, will start pouring in this Q1. So I don't see any contraction in the NIM, but it is expected that we will further improve.
Could you quantify to what range you expect?
I'll just do that. We closed last year at a NIM of 3.9, and definitely in the current quarter we will see improvement into that. It should be 4%.
Okay, 4% NIMs. That is something that you saw in FY23 as well. 4.2% was the NIMs in FY23. Yeah. So, two-part question. First, what would be the opportunity for a sustainable loan growth rate going forward in terms of growth prospects? And your provision coverage ratio, it is on the lower side. So, what are the plans here?
With regard to the loan growth, the target which is for the current year 22 to 24% is going to come from sweating of the existing branches. The branches which are opening, we are opening during the current financial year, the benefit from them will start pouring next year, but to some extent in maybe the last quarter of this year. So your other question was regarding
the provision coverage ratio.
The provision. Since we are into secured lending, if you see our consistent performance with regard to the asset quality, even during the COVID period, financial year 22 with a net NP of 1.4, again in 23 maintaining 1.4, and again in 24 maintaining 1.4, and we are a secured lender. And another strong pointers I want to share with you, that these numbers of gross and net NPA, these are all recovery based. Since we were a bank earlier, we were a local area bank, and we have a history of 24 years plus. If you see, we have never sold an NPA asset, and total write-off has been very negligible. You can say nearing to zero. If I share with you the write-off numbers for last 4 years, it's only 60 lakhs against the loan book of around 6,000 crores. So, if we look into the type of our performance on asset quality and the type of lending segment into which we are into secured lending, I feel that the PCR, which is 50% or slightly above 50% at present, of course, we are increasing it in the time, we'll keep on increasing it in the time to come. I think so for a business model like us, this is, we feel that it is suitably provided for. Yeah.
Mr. Samra, last quick couple of questions I want to squeeze in. I request you to keep your answer short. Number one, deposit growth for the overall banking system has been a bit of a challenge. What is it that you're targeting for FY25? How was Q1 of FY25? Second question, a quick comment. A lot of states have actually seen some loan waivers come by. While you may not be impacted to that extent, how does that go ahead and impact the kind of borrowing ability, number one? And number two, when it comes to repayments, do you see any impact over there historically?
So with regard to the deposit growth, we have never faced a challenge. We are still at a low CD ratio. Last year, average CD ratio, we closed at 79%. Of course, in the current year, we want to, we have targeted that we will take this average CD ratio to 82% plus. So whatever the loan growth targets we have kept for ourselves, to fuel it with the deposit, we are into a retail-centric branch-led business model, and the deposit also comes from there. So I don't see any challenge with regard to fueling our loan growth with the deposit growth which is required for the same. So of course, your second question with regard to the loan waivers and all, of course, say there have been some noise with regard to the agri loan waivers, like we are into agri lending, but we have ring fenced ourselves since we are not into small and marginal farmer lending. And for agri lending also, we are targeting the same segment which we are targeting for others, that is the middle income group and progressive farmers. So the loan waiver doesn't directly impact us, of course. It creates an unhealthy precedent. Yes,
Mr. Singh, and this is a conversation, a full-blown conversation for another day for sure, but we are completely out of time today. But thank you so much for joining us today and taking those answers so patiently. We'll slip into a short break. When we come back, we'll talk about markets and stock-specific action on the other side. Stay tuned for that.
Of us have been at this for a decade and a half and more. But what's truly shifted in the last couple of years, which has been truly profound, we today serve some of the biggest companies, not just in North America, but around the world. These are large banks, large telecom companies, large retail companies who've been using AI, but now with Gen AI, what's profound is AI is now a boardroom topic. It's being discussed in every board meeting in a publicly traded company. Wall Street is measuring companies on their AI strategy, and the stock prices are being shifted up or down, depending on what companies announce. And for that reason, CEOs and CIOs are now singularly responsible. A lot of the customers that we've been dealing with, prior to GPT, AI was being bought as part of a software as a service application. Something in marketing, something in contact center, something for sales. Now AI is an infrastructure that no company can ignore not having within itself. And for the last couple of years, we've seen tremendous traction. Matter of fact, we grew our top line a little over 60% last year, which was an acceleration from the previous year, and we're seeing the same trend continue now. So I'm seeing an insatiable desire at the C-suite around the world about how do we become AI natives? How do we keep our sovereignty when it comes to AI? How do we not share our data with somebody else? And what kind of internal tools and technologies do we need to make this all happen?
Speaking of startups and high tech, the Wall Street Journal has a front page today on comparing what you did with Cisco and what's happening at NVIDIA today.
Yes.
And Cisco was in 2000 the most valued company in the world on the back of the big transition that we saw then with the internet.
Welcome back. Well, we've been talking about how tire stocks are surging, and JK Tyre is one of them. It is surging on the back of a positive note coming in from MK. They did some channel checks, and it indicates that trucking industry fundamentals and sentiments are quite healthy, and that is something which is leading to the CV industry leading or entering an upcycle from FY26. And India Tyre Companies continues to close the gap with MNCs. Improving demand and premiumization is what is making them very positive on the tyre space. Generally, there are some channel checks suggesting there could have been a price hikes in rubber prices as well. We don't have a confirmation, but that is what the street is suggesting. There's a strong risk reward at 8 times FY26 P, so valuations are supportive. They reiterate a buy and target price at 700 rupees a share versus the current market price of 426 rupees a share. So demand growth and valuation support is something that MK likes.
Very interesting what you've actually mentioned. The entire tire pack is up today, and it's not just the tire pack. Even if you look at some of the CGDs, have a look at names like IGL, have a look at names like MGL. These are the stocks that are doing really well in the session today. It'll be important to see the news flow over there as well. But that's all the time we have on this edition of Midcap Radar. On the other side, our special program on Telecom, who have started their tariff hikes. That's on the other side.
We're seeing happen with NVIDIA becoming the most valued company. As people draw these comparisons, what's going through your mind?
Well, first of all, it shows you that technology moved from something that the techies did to impacting every one of our lives. So with the internet changing the way you work, live, learn, and play, when I said that in '93, most people said, no, it's techies talking. It clearly did. As you watch, there's new generations of leaders about every 10 or 20 years. And I think it's very healthy. So it's Cisco for the internet, then about 4 or 5 players for the cloud, and now NVIDIA is clearly leading in terms of AI. And they're kind of like the indication of the infrastructure of AI. If you want to know how AI is doing, look at how fast NVIDIA is growing. And it is growing great. What is it, 540% in the last 2 years. Today, if you're not into AI and if you haven't got a good AI strategy, well, implementation, investors won't invest in your company, even if you're a manufacturing company or a semiconductor company, etc. The pace of change, however, is different. It's about 10 times faster and can be 10 times bigger than what we saw just a few decades ago.
So, you've been a big champion and a big believer in the India story, but there's a long distance still to go to fully realize the potential of this partnership and this relationship. Where do you believe it's being constrained today?
As the largest democracy, watching your elections just occurred, and congratulations to Prime Minister Modi. It was a smooth election. There was no issues in the market, and I think that's a model for the rest of the world's democracy to follow. And now you're seeing the country lead in innovation. My challenge is don't be satisfied with just what we're doing. We've got to dream bigger in terms of the overall approach. So this is what I really think about in terms of where we are today. I think we've got to look at where we go. I do think it will be the century for India. I think it will be also the decade for India.
The latest challenge that you're up against is the US government looking at whether, again, there is a violation of policy and whether there are sort of fees that are being collected without consent or, explicit consent and so on and so forth. I mean, how do you deal with something like that?
Well, you first go back to the principles and the facts, and the reality is that it was the government's case is misguided, and so we will fight it and we'll refute it in court. I think if you take a step back and you think about what Adobe has pioneered, the subscription economy and the digital economy is everywhere. I think when I try and read your content, it's probably going to be available through a paywall as a subscription.
Yeah.
We have open and flexible policies where some people can pay for it up front and get a discount, and others pay for it on a month-to-month. So having flexibility makes sense. But, it's something that we will address, but we certainly believe that we have been flexible, We offer customer choice, and we're completely transparent about this. When you subscribe to the plan, it says annual bill monthly. And it's an annual plan. And so, but at the end of the day, for us, what really motivates us is the fact that we're impacting and innovating. And I think if people didn't feel like we were innovating, they wouldn't be subscribing to our services. And that's what we have to keep focusing on.
Hello and welcome to this special program. After a median 20% tariff revision announced by Reliance Jio, Bharti also has announced its revised tariff plans affecting a median increase of 15% in prepaid tariffs and an 18% increase in its postpaid tariff base. This is effective the 3rd of July 2024. Now, telecom tariff increases have been long awaited. Companies like Bharti, Vodafone Idea and others have on separate occasions said for a while that telecom tariffs in India are some of the lowest in the world and they need a readjustment higher. Are we at the beginning of a phase of tariff hikes? And does that mean that we are also at the beginning of a phase where earnings for these telecom companies will be on the up and up, will be on an upcycle? These are some of the questions, but not all of the questions we are planning to discuss on this program. I'm Prashant. With me, our telecom expert, Reema Tendulkar, is joining us now as well. Reema, hi. Something we've discussed for a while now and finally come through. So why don't you kick this off by putting these tariff hikes into context? Over to you.
Well, good news for companies, good news for investors, but not such good news for consumers. So get ready to pay more for your mobile bills. Now, yesterday, Reliance Jio took the lead, announced a tariff hike. This is the first tariff hike that we've seen in the last 2.5 years. And in the morning today, Bharti has followed it up with a tariff increase. Now, Jio's tariff increases range from about 12.5% going up to 25%. For Bharti Airtel, the tariff increase ranges from 10 to 20%. Broadly, you would say the tariff increase is on expected lines, much anticipated, but for Airtel at 10 to 20%, maybe slightly lower than street expectation. And guys, remember, you still have 5 days before this comes into effect. This is effective for both the companies from 3rd of July. Now, Reliance Jio, this time, taking the lead in raising tariffs is seen positively by the industry. And here I'm quoting a Kotak report where they say that the last two tariff hikes, December of 2019, it was affected by Vodafone Idea. They had taken the lead. And in December of 2021, that's 2.5 years ago, it was Bharti Airtel which hiked first. And Reliance Jio was actually the last one to raise the tariffs. And unlike Bharti Airtel and Vodafone Idea, who've been very vocal on the need for industry tariff repair, Reliance Jio has not been so upfront about the need for one for the industry in terms of wide tariff hikes. So therefore, Reliance Jio taking the lead in raising tariffs is a sentimental positive for the entire telecom industry, according to the Kotak note. Now let's get to the numbers, right? How much are you going to be paying? Now, the entry-level plan, this is the one which is for the most price-sensitive, the value-conscious. For Reliance Jio, the increase is approximately 22%, while for Bharti Airtel, the increase is about 11%. Reliance Jio minimum plan stands at about 189 rupees per month, while for Bharti Airtel, it now stands at 199 rupees. Let's move on to some of the other plans. And here, just for the purpose of illustration, because telcos have so many plans, right? We're just picking up this 1.5 GB of data plan per day. And here are how the numbers stack up. Now, for Reliance Jio, the increase for a 1.5 GB of data per day plan, for 1 month, the increase is 25%. For 3 months, the increase is 20%. Similarly, for Bharti Airtel, the increase ranges from about 16 to 20%. But despite Reliance Jio's, the increase appearing to be more than Bharti Airtel, Reliance Jio's plans are at a discount to Airtel. This is how the entry-level plans look. Bharti Airtel is at 199, a premium to Reliance Jio, and even for that same 1.5 GB of data plans that I was talking about, for Airtel, for 1 month, you will pay 349, and for Reliance Jio, you will pay 299, and similarly, for the 3-month plan, that's the 84-day plan, Bharti Airtel, you pay 859, similar plan for Jio is 799. So basically, in a nutshell, despite Reliance Jio's percentage increase in the tariff is more than that of Bharti Airtel, Airtel continues to remain at a premium.
Also this time, remember, there is an increase in the postpaid plans. The last hike that we had in December of 2021, there was no increase in the postpaid plans. Now, what does this mean, right? Directly expect an improvement in ARPU. The hike, if it's about 20% increase, expect the ARPUs to increase. But this ARPU increase plays out over the next 2 quarters because everyone's recharge cycle is different. Now, Reliance Jio's ARPUs have been stagnant for the last couple of quarters in the absence of a large tariff increase. While Airtel's tariffs have been slowly, steadily inching up because they did raise the minimum entry plan, there was some premiumization, their goal is to hit 300 rupees by way of ARPU, and they're still short of it. Their first goal was 200 rupees. They hit that 2 quarters back. They're at 209 in terms of their ARPUs as of the last quarter, but their goal is to hit 300 rupees to enable a financially healthy business model. Now, stocks have done very well in anticipation of this tariff hike. As we've been saying, we've all been talking about an impending tariff hike. Now, Bharti's practically up 45% so far. Reliance is up 20%. Vodafone Idea appears to be just a 15% hike in 2024, but look at the price increase from its FPO price, which was about 10-11 rupees. Now, Indus Stars has been a stark re-rating, and Bharti Hexacom has done super well from its issue price, and brokerages are still very bullish. Now, Jefferies further increased the target price on Reliance Industries to 35.80. Morgan Stanley has an overweight call. The question is, what next? Jio, done. Airtel, done, and now all eyes on Vodafone Idea for a potential tariff increase. And also another question is Jio setting the ground for a potential IPO? Is this something that we will be watching out for in the next 12 to 24 months?
All right, Rima, lovely. I mean, put it very, very comprehensively. And, I think we should take it straight to our experts who are joining us. Sanjay Kapoor is former CEO of Airtel. And we have Omkar Tanslake of Access Securities, he's joining us. He's, of course, a senior research analyst. Gentlemen, great to have you both here on CNBC-TV18. Thanks very much for your time. Sanjay, if I can start by asking you, sir, what is how do you read this? I mean, are we making too big a deal of it, or is this really the big one? And it kind of kicks off, as I said in the beginning, a process of tariff repair higher, which perhaps will last at least a couple of years from now.
Thank you for the question, Prashant, and a very good afternoon to all the viewers and all of you at the studio. I think a couple of months back on your program itself, we were debating that there's a long pending need to hike the tariffs, and we were all anticipating that it'll happen post-elections, which has come true. We were also anticipating that the lead has to be taken by either Airtel or Jio, because VIL doesn't have the capability of doing that given their network and catch up that they have to do. Now, before I really answer your question, it's a very enigmatic market, and let me bring in 3 exceptional features of this market. There is seldom a global player or a global market where the number 2 has a higher ARPU than the number 1. There's seldom a market where the number 2 has a premium on pricing compared to the number 1. And there's seldom a market where the price hikes historically have been done by the number 2 or number 3 rather than the number 1. So I think first and foremost, there are some changes that are happening this time, which are welcome changes, that the number 1 in the market has taken the move to up the tariffs. And not only up the prepaid tariffs, but up the postpaid tariffs, which knowingly, I mean, everybody knows that a postpaid tariff going up actually benefits Airtel and Voda more than it really benefits Jio, right? Now, the second thing, the number two still will continue, with the premium. The only attempt that I see that Airtel has made is, though percentages look smaller, what they've done is in absolute numbers, they've kept the gap that was there between them and Jio. I think they've maintained that. Therefore, the percentages on Airtel will always look lesser, but on absolute terms, they are covered. So I think when it comes to incremental revenues that they'll get, I think Airtel will also do equally well, and especially benefiting from their postpaid base, which they have an edge over Jio. Now, coming down to the price hike and its requirement, I think it's a foregone conclusion that in a market which is now consolidating to two top players who hold more than 80% of the market, and going forward will probably, try to even increase it further. Now, given that there is a pricing power that they have, and this was supposed to come. And secondly, in a market where capital cycles have shortened and you need to make investments behind technology very quickly, I think this is absolutely paramount. And while we say 300 could be, according to me, a medium-term mark, but in the long run, they'll have to go probably even beyond 500, right? They'll have to do that. And given where telecom is today on Maslow's hierarchy, I don't think it'll be a problem to extract that sort of a price of the market. We have to realize one thing: there are so many tariff plans, like rightly Rima said, that for a consumer to interpret this price hike is virtually impossible. They will only come to know the impact once they receive their bills or their decrements on prepaid. That's when they'll realize what really happened. Right now, to really decipher this and actually have a consumer reaction, I think will probably be very, very difficult for anybody. So I think it's a welcome change. I'm happy to see Jio has taken the lead this time, like a market leader should. And it is good for the industry. It is good for the consumer. I just want to add one more thing. When you look at consumer experience, I think we still have a long way to go. And those investments can only happen if we give the right price as consumers, because we can't expect government to subsidize these services. So I think consumer has to pay for these services. And where we stand and becoming globally competitive on our experience, we will have to bear this price hike going forward. Otherwise, the operators will not put as much behind the consumer experience as they should be doing.
So you're batting for sustained price hikes. Some two very important points. One, of course, that Jio has hiked postpaid tariffs, which benefit their competitors more than them. So that's a big positive. And it shows, the way the industry is now working together to improve the financial health. And secondly, you spoke about ARPUs potentially hitting 500 in the medium term. Omkar, come in. Just in the near term, for the benefit, for all those who, trade stocks and invest in stocks, about a 15-20% tariff hike. What does this mean in terms of revenues, margins, and ARPU? What's the EPS impact?
Definitely. I mean, there is a big positive thing that is coming up with the tariff hike because of the higher conversions. We can see from 2G to 4G every quarters, and they are we can see an customer stickiness in terms of data consumption, and data consumption far go beyond the expectation as from the COVID levels. So we can everybody was expecting the tariff hikes, and tariff hikes is meaningfully done for the increase of the ARPU that everybody is expecting to near term 300. We can expect some conversions from to benefit from the conversion of 2G to 4G on the EPS side, maybe around 10 to 12% in the near term. I mean, for the couple of quarters, and going ahead with a desirable ARPU for the Bharti at 300. So we can expect to see how the things getting shaping up, but definitely from the company's perspective, we should be very positive about the tariff hikes impact on the from the company's perspective.
Okay. What we'll do is, gentlemen, stay with us. We'll take a quick commercial break here. We want to just play out some of the sound bites, right? This is Sunil Mittal speaking in March earlier this year, calling for a tariff increase. And we also have Rima, who spoke with Vodafone Idea's CEO, Mr. Mundra, earlier in April. These are very recent conversations, again, on where ARPUs should head. Listen and take that break. We'll see you on the other side.
For several years, we spoke about that 200 rupee ARPU. You've got to that, and now, of course, looking at perhaps 300. What's the outlook as far as telecom is concerned? You've been on the premiumization side of things for a while now. Is a tariff hike possible, likely, on the cards? Take me through what the dynamic looks like at this point in time.
Gopal uses the word tariff repair, and I think that's the right word to say, because hike always looks pretty aggressive. Fact is, when I was in Barcelona just 2 days back for the Mobile World Congress, people are stunned at what level of ARPUs the Indian industry operates. $2.2 a month for almost unlimited bandwidth that is sold. 2 GB a day can't even be comprehended by the Western operators who operate at $30-40 a month with probably half a GB a day. So Indian industry, if it has to be viable, and these digital highways that have been built, especially by the two main operators, really need to be financially sustainable. For that, I have mentioned 300 rupees ARPU, which will still be just $3.50. Next pit stop is 250, then hopefully 300. And if you ask me, I hope it happens within the coming financial year.
So 300 within the coming financial year, or 250 within the coming financial year?
I hope they should be 250 and then 300 by the time we close the next financial year.
One is that the Indian ARPUs are the lowest, and I think lowest not by a small margin, by a big margin. So that is the important factor. The second thing to be kept in mind is that today none of the players are returning their cost of capital. And it has not been just a year or so, it has been 5 or 6 long years. And that was the scenario when 4G investments were made. 5G investments have added on to that. And 5G monetization is still not to be seen. So the imperative for tariff correction just to get to a return on cost of capital being there.
So what should the ARPU be for you to be able to return your cost of
Again,
capital?
I'm not at a liberty to say that, but there is enough commentary from our peers, and I would say that...
300? That's the commentary from your peers?
So that number appears to be right.
Okay. So ARPUs need to be at 300 for the industry to make a return on their investment?
Form and the current level of 5G investments, of course, anything is related to the size of investment. And as things stand today, that looks like.
Okay. So guide the market, right? The street is expecting today that we will see a tariff hike post-elections of a magnitude that we've seen in the past, which was 20%, right? The last 2 tariff hikes were 20%. So guide the market. Is this a fair assessment in your own mind?
So I would describe it like this, that I cannot say what would be the next price increase, when and how, but I would say that generally speaking, we have seen that this quantum of price increase is absorbed in the market without much of an implication. So I would say that the consumer at this level is willing to accept, and I think generally we've seen in India, you meet many consumers, they are happy to say that, okay, we are willing to pay a slightly higher price or slightly higher ARPU, but we want better services. So.
Really proud of what our team has done. When you think about the content authenticity initiative, something that we pioneered, over 3,000 companies have now signed up with it. While people understand that AI has all this power, I think it's fair to say there's some heightened sensitivity around what does this mean to me? And so, that I wouldn't call it a trust deficit as much as questions about what that is. And a company like Adobe has a leadership role that we need to play, not just for ourselves with our customers, but for the industry at large about our terms of use. I think there were some questions, and legally everybody who looked at that understood that the content belongs to them. We're not training our models based on that. But I think perhaps in English we could have done a simpler job of clarifying it. So, which we have. And so, we've rolled it out. We are creator friendly. I think the product innovation that we're delivering, Shireen, it always, warms your heart when you look at the amount of innovation that we're delivering. And I think we've talked about this in the past. AI is going to be this incredibly enabling technology that allows us to, target a broader set of customers. And so I guess it's the era of AI. Now we can create campaigns, we can create content, we can address the content supply chain. So I'm completely convinced that AI, while I acknowledge it'll be disruptive, at the end of the day, it's going to be a massive enabler and a tailwind.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2%
25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Telecom tariff hikes, the first in 2.5 years, is the big story. And the question is this the start of sustained tariff increases? Perhaps not every year, but at least once in 2 years, going forward. Sanjay, we are in conversation with Sanjay Kapoor and Omkar Tangsale. Sanjay, one interesting thing in this time's, tariff increases is on 5G. So Reliance Jio has announced unlimited 5G will be only available for 2 GB and above plans, which basically means 299 rupees monthly plans and above. And earlier, and I think it was about 239. So they appear to be taking the first step towards monetizing 5G, differentiating that we're giving you 5G, we're giving you unlimited 5G, but it's going to be available only if you're willing to pay out and shell out a little bit more. Would you read this as a start of 5G monetization, and will we see more of this?
So, Rima, my belief is that 5G monetization is not a function of charging a higher price. It's a function of use cases. And use cases are still depriving the industry of anything that can become sticky with a customer. And I think that has got rolled out in the current auctions that you saw, and the manifestations very clear there that it was a very somber auction, and that nobody was going, full throttle to go and bid for more spectrum. If you look at operators sitting out of GCC, other parts of the world, they all, even in the second rounds, went and bid for 100 megs of spectrum. But the Indian operators didn't do, and rightly so. I'm saying they probably realized that 5G from a use case perspective is still lagging. And if that is the case, then why pump in more money? I think Indian operators, one of the reasons why their stock prices have done well is the fact that they have been very conservative on 5G investments. I've always said, look at China, for example. If China has 3 million 5G sites and they are talking about doubling it in the next 2 years, 3 years, 4 years, whatever time frames, we are far, far, far away. And rightly so. If the customer is not going to be paying, if they're not use cases, then I might up my pricing. But how many people will see the value? The second thing that I want to bring to your notice is that the price hikes today are not apple-to-apple comparison with price hikes of the past. And let me explain that to you. Earlier, when price hikes used to happen, bulk of the revenues for operators were access revenues, which is connectivity, right? And there was very little content and there was very little applications. Today, when you do an ARPU roll-up, you have content rolled into it in many forms. And therefore, what a telco gets to keep with himself is much lesser than what a telco kept with himself 5 years back, right? So there's a lot of pass-through that happens as well. When you get free Netflix, when you get free Amazon Prime, when you get a lot of other content that's all bundled in that, then you're not retaining all the revenues, you're passing on a lot to somebody else. So I think that's why these price hikes are very good and they need to go up further, but they may not be an apple-to-apple comparison with the past. And like I've said, 5G, the jury is still out on use cases, and price hike is, it's neither here nor there.
Sanjay, as always with television, we run out of time, not conversation, and not points to discuss. So let me slip in, if I can ask you to, in a brief, concise way, tell me about Vodafone Idea. What does it do for Vodafone Idea's prospects now? Because investors have been pinning hopes on sort of a lot of repair for the sector, and tariffs is one part. What for Vodafone Idea from here?
Yeah, the investors always get excited with the prospects much ahead of the actual consumer experience and rollout on the ground. it's good that Voda Idea has been able to raise some capital. Will that capital be enough to challenge the top 2 operators in the market? I still have my doubts about it. I think they'll need lot more capital. And the second thing that you need to keep in mind is that whatever money that they are deploying today to become competitive in terms of customer experience, in terms of network, is a lagged effect. They are not going to see the benefits of that tomorrow. It'll take a while before they level up and start competing. So I think, according to me, they are at least 9, 10, 12 months away, where they can go and claim that now their networks are solid and they compete. And the last, which is a handicap, unfortunately, what I've seen in this market, and it's a global trend, once you lose your high-end customers, to just get them back by claiming that you have a network which is now contemporary, which competes, is not that easy. It's a very, very tall order. So I think they'll have to work hard, not only on the network, on the brand, on the perception, on the experience, which is not a 1 day, 2 day, 2 weeks, 10 weeks exercise. It's a longer exercise. I think they have to come back into the fray. And after coming back to the fray, will they be able to challenge the top 2 guys? I think the top 2 guys are so well funded and so well entrenched. I think to shake them up from their positions is going to be a very, very, very tall order.
Well put, Sanjay. It's always, we learn so much when we have you on the program and out of time, as I said, but not out of questions. Thank you very much for joining us, Sanjay. Thank you very much, Omkar, for being with us here on the program as well. Really appreciate your time on CNBC-TV18. I mean, it's not the last of tariff hikes, as both of you alluded to, and of course, it's going to be a continuing conversation. But Hormuz, my colleague, is here in the studio. Hormuz, you looked at what the top 4 brokers, sell-side research houses, are sort of how they're looking at this tariff hike and their view on the sector and stocks. Take it away.
Well, some important takeaways from this is the fact that Jio leading the tariff hikes is a positive. It's a sentiment positive for the industry. And the fact that there are more in the offing. That's the first thing. So now JP Morgan has come out with this and they're saying that the Jio leading the tariff hike is a statement of intent from them. And that is because their focus has now shifted from market share gains to maximizing or monetizing their investments is what they are saying. Now, the fact that Jio has straight up hiked their tariffs by 20% instead of doing it in tranches gives them more visibility on the revenue, EBITDA and the free cash flow going forward as well. But they are also saying that every time such a tariff hike has happened, there is a subscriber churn, there is some churn in the SIM additions as well. So you are expecting to see that this time around as well. And the trickle down, the impact, if at all Vodafone Idea also announces such a hike, will benefit Indus Towers as well. Now, Citi is saying that the magnitude of the Jio hike is impressive. What they say is that they are viewing this development not only as a positive for the sector for a short term, but also for a 1 to 2 year period. And they remain positive on the sector, with Bharti and Indus Towers being their top picks. Now, Goldman Sachs is now saying that with the tariff hike out of the way, the sector might have some lack of near-term triggers going forward, and the focus will now shift to earnings growth. And they are assuming that there is at least one more tariff hike that is coming in the next 2 years. And they are seeing that there is a limited reason for the stock multiples to correct from here on, because now the focus will shift to earnings growth, and the earnings profile for both Bharti and Jio is pretty strong. And lastly, Kotak Institutional Equities, where they say that the tariff hike is largely in line with expectations. The Jio leading the hike is also a sentiment positive, as I just said, because the focus has shifted to the ROIs, and the tariff hike that Jio has carried out is already built in to their estimates. So largely a positive commentary coming in from brokerages as well, a sentiment positive for the sector.
Thank you very much for that, and that's all the time we have for you on our special show. Stay tuned for Closing Bell to take you through the last hour of trade.
Earlier, we were net importers of steel.
From IT services to SaaS,
from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Today, Sensex and Nifty hit a record high.
The Nifty rallying to a record high. We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community.
Asian markets, they are largely mixed, but some of the gains they are because of what we are seeing in the Japanese markets.
Reliance Jio has taken the lead and hiked tariffs for the first time in 2.5 years.
It looks like we will, before anything else, get to the upper Bollinger bands. It's a level that we put up at least for the last 3 days. Bharti also has announced tariff hikes. There you go. We should put that out as breaking news.
Opening bell is indicating a positive start, so let's keep that on our radar. 30 points higher.
Our job is to worry, both in a bear market as well as in a bull market, and probably now more so in a raging bull market.
Today we had Stanley Lifestyles, which listed at a premium of around 32%.
The Nifty is now surpassed 24,000, comfortably above it with a 100-point gain.
A portion of the canopy roof in the departure area of Terminal 1 at the Indira Gandhi International Airport caved.
Right now above the 24,000 mark as it continues to be in the green.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, that was a day so far, and you're with us here on a fresh new edition of Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant, with me my colleague Reema Tendulkar. Reema, hi. Another pretty volatile day.
Oh, absolutely. But flat now as we speak with all the volatility. And we've had 4 good days on the trot. So today, pausing is not so bad.
Pausing is not so bad. My God, I mean, I just looked at the market 5 minutes back and we had 50 points. So it's a steep fall. Yeah, it's a very, very steep fall. Look at the Nifty. There you go. That's what I'm talking about. That's 40, 50 points worth, that turn that we've seen. Because we're at what, 234 right now? 230, we were at about 24,118. And we're at about 24,062. So, of course, it's nothing like what we had yesterday. Yesterday, we had 800 points worth of move on the Nifty. The down and the up, the down and the up. We had, 300-point moves intraday yesterday. So it's not that volatile, but it's quite volatile. So from the day's low, we are up not 100 points now because of this latest sell-off at about 50 points off. And from the day's high, it's not 70 points, it'll be more, about 110, 120 odd points from the day's high. So that kind of a session where I think, in terms of just sort of narrating what's going on, you've got to just be very, very current and very, very live with the volatility. Now, just a few points in terms of sectors, and I think that's not changed that much. Telecom stocks are seeing a little bit of profit booking, and we'll talk more about this. Private banks are seeing pressure, and the bank Nifty, largely because of what we're seeing in the private bank space, is pulling back. And on the other side, PSU banks are doing well. So PSU banks took a nice, clean, long break, and they started this morning in a positive note, names like PNB, etc., and that is continuing. The PSU bank index, in stark contrast to the private bank index, is up about 1.25%. Pharma names are higher, and CPSE, I mean, government stocks, outside of PSU, outside of the banks, are also doing well. And notably, small cap index is up 1%, or at least was up 1% when I looked at it about 5 minutes back. So we've got some action going on our hands for the next 60 minutes or so. Rima.
Well, Reliance Industries is the big mover. It's up nearly 3%. So yes, most of the other telecom names like Bharti, Vodafone, Idea have corrected, but Reliance Industries continues to move up. 2.8% now. For the week, it's seen a gain of about 8.2%, taking its year-to-date rally to 21%. So if it wasn't for Reliance Industries, I think the picture would have been a lot different. Also keep in mind, crude prices continue to inch up, and now they're at 86.9. Broadly, oil and gas is having an up day. So the Nifty Oil and Gas Index is the best performing sectoral index. Reliance is up. ONGC is moving up. Gas stocks like IGL are seeing buying. Mid-caps, which were trailing the frontliners for the last couple of days, have also tried to play a bit of a catch-up. So the mid-cap index is up close to about 0.5%, and there are pockets of strength. So for instance, Tire, that's where you are seeing big gains. JK Tire, 8.5%. Apollo Tires is up close to about 5%. So lots of activity, when it comes to the mid-cap end. Stocks which have been in the news like Star Health continue to attract a fair amount of interest. But flat now on the indices. Reliance is up, but on the way down, private sector banks are weighing in. So how should you position yourself on the last day, on the last hour of this trade? And this is the end of the week, the month, and even the first half of the year. Mitesh is now with us for a few closing comments and strategies. Mitesh.
So I would believe that, one, we have had some kind of an intraday dip which got immediately bought into, and we still therefore remain overbought. Now I think, I've been talking about trailing the stop to about 24,000 on this spot, maybe just 10 odd points below that. I think do that, keep a tight stop loss. I understand that, tighter stop loss have some chances of getting hit, but they will also protect the profit which you have been making for last few days, the opening which has happened. So just do that, and let's see how it goes. On the stock side, IGL, I think Nima was mentioning that's given a good breakout. So buy here at the stop at 494, 493 half, and look for a 525 kind of a first target on the upside. Eventually, we may look at high levels, and Jubilant Foods is a buy with a stop at about 557 for targets of 580.
Okay, all right, I got that. Thanks very much, Mitesh, for that. We'll come back to you for more. But Rima was talking about Reliance Industries, so let's take that forward. So it's a day that the market cap for the company has hit 21 lakh crores. Sonal is here with details on this one and what's going on. Sonal, over to you.
Well, yes, that's the big number, 21 lakh crore rupees. That is in terms of market capitalization for Reliance Industries. And it was just 4 months back in February that we saw the 20 lakh crore market capitalization mark. So it's been a swift move from those levels, 1 lakh crore rupees just in last 4 months. We've seen a lot of things happening in the sector, but specifically in the telecom space. And we've been talking about that since last evening. And a few brokerages which have upgraded the stock on the back of this. For instance, Jefferies has increased the target price to 3,580 rupees a share. They say Jio raising tariffs by 13 to 25% is a positive. However, they've gone ahead, cut the estimates by up to 3%, but they expect Jio to deliver 18% revenue growth and 26% PAT growth over the next 3 financial years. And they have tweaked Reliance Industries EBITDA by 0 to 1% to incorporate Jio's numbers as well. But overall, they call it a positive move. But this was something which most of the brokerages were expecting as well. Morgan Stanley has an overweight call with a target price of 3,046 rupees a share, and which is actually below the current market price now. They say this is in line with their base case expectation. The price hike that has come by. Monetization of investments remains in play, and next catalyst to watch will be startup of new energy cash flow streams by end of 2024. A lot of these new energy capex that will come on stream by end of 2024, starting 2025, and this is something that the street is betting on, and that's why this excitement in the stock right now.
Record gains for the third day in a row now for Reliance Industries. Prakash, what have you made of the up move, this breakout this week?
So, I think this move, of course, was, we were looking for a trigger to have something like this happen, and that's come from Telecom. But, mind you, the way the setup is for Reliance in terms of all its verticals, you'll probably see really sequentially have something or the other positively happening in each of those. I think the next, this thing would probably be also retail. Very clearly, retail is something which has grown phenomenally. It's in terms of expansion of reach and presence, but the revenue build-up and the profitability that needs to kind of come in will probably start happening post the monsoon. So that's the trigger that people definitely start penciling in terms of the expectations that are building. And of course, the O2C business also has been probably steady state for a while. Wasn't the best of quarters last quarter, but I think given the way things are today, it could also start surprising us, especially with the gas output. Now, these are things which may not look very phenomenal when they happen, but in the long term, for a company like Reliance, the kind of capital that's been invested, the moment these businesses start throwing a lot of return, the ratios start looking very impressive. And here you have an opportunity to possibly look at some sort of a demerger in the next 12 to 18 months, but probably begins with retail is my sense. But you have a lot of these things building, optionalities building up. And as you rightly said, the hydrogen business is the new energy business, something which everybody is waiting to kind of get some semblance on numbers. So, Reliance is set up in such a way that you'll probably see it continue doing well. And it's probably taking the Nifty along itself to these new highs. So I don't see there's any overbuying of sorts. Or, it's not getting into that overbought position as yet. So you'll probably still see the momentum with some more legs, maybe another 5% in the next month or so.
Right. Prakash, hi. Good afternoon. Two questions. One, is there anything happening on CDSL? 16-17% move today. It's the #1 volume trader. It's a huge volume traded name today. And the other is tires, CEAT and JK and Apollo. I mean, CEAT is up 10%. Yeah.
Yeah. So good afternoon, Prashant. So CDSL, of course, it's that bonus that's kind of coming through. This is a company which works on 70% plus EBITDA margin. The volumes have been phenomenal in the last many years, and it's actually accelerating more in terms of its growth. Though we started thinking that there could be some sort of a peaking out. But then, you have vectors like getting insurance policies to be dematerialized. You have some of the other potential, this thing. And remember, we are looking at the beginning of a very new bond market for India. Now, what happens is it will start with the institutional side. It'll probably stabilize there, reach some sort of an equilibrium. And of course, we're talking about AAA bonds and all, which are going to be most of the times making up for the bulk of the volumes. But eventually, the market will start kind of percolating to more retail kind of products as well. And CDSL is right there in that spot. I don't see any competition coming in the form of the NSDL, bandwagon kind of catching on yet till the NSE listing happens, and we have some very specific opportunities to participate through that. But I would believe CDSL will continue to do well. As a matter of disclosure, I have it since a long time in my portfolio. And people very clearly understand that, once the reserves are capitalized, of course, it's just a technicality in terms of the balance sheet, but at least the number of shares that you own ends up making it look very attractive for retail investors. And this is a retail-focused business as well. On tires, Prashant, my sense is, there's a lot of shift happening. And I spoke to a couple of vendors who supply raw material to tire manufacturers, where the demand is now actually coming in from global markets. It's India's started to look very formidable in terms of what it can do, supply to the global markets in a far bigger way. Earlier, it was just the Apollos of the world which are doing it. Today, you look at CEAT, that's kind of scaled up so much. Even some of the offshore, the off-road tires, manufacturers like BKT and all have kind of revamped themselves in terms of the capacity, the bottleneck, all of that. But I would play this from a picks and shovel kind of a angle. And you look at a company like Philips Carbon, supplies a lot of raw material, very critical raw material to tire manufacturers, all of them in fact. And its new plant has actually started giving it enough throughput to be able to scale up that. So if the demand goes up for tires, PCBL will probably benefit far more. And of course, it has some other optionalities in terms of the new Aquafarm business that they've acquired, but we'll talk about that separately someday. But I think the best way to play tires will be a approach with the PCBL kind of a play. You're more insulated and resilient irrespective of which company does it.
Okay, in fact, talking about Tire, there's also a bullish brokerage note which has come out on Tire, which perhaps explains the kind of up move. Vivek joins in with the details. Vivek.
Well, that's right. So MK today has come out with a note as far as the entire tire space is concerned. They're saying, especially for JK Tires, quite a few positive figures are in place. Number one, they're saying the trucking industry fundamentals and fundamentals currently are quite healthy. They're also saying that the CV industry is entering an upcycle from FY26 onwards. They're saying that Indian tire companies continue to close the gap as far as the competition with MNCs are concerned. They're saying improved demand and premiumization at 8 times FY26 price to earnings. They also believe valuations are quite supportive. And now what the other important development is that there's a sales note from Elara which says that Apollo Tyres has actually taken a price hike of close to 1.5%, and this is going to be effective from July 1st. They're saying that the move largely covers the raw material price inflation that has been seen from Q4 to Q1. In fact, they believe that there could be more price hikes on the annual in order to go ahead and mitigate the raw material price inflation in terms of natural rubber prices that has been seen. Overall, some price hikes coming in and some positive brokerage notes is something that is aiding the tire rally today.
Okay, thank you very much for that. Prakash, coming on Polycab, the stock has had a one-way up move. It's doubled so far this year. This promoter selling, it's not much, 2% stake, but would you read it negatively? Could this, or is this dip, buying opportunity?
So, Riman, this is now, of course, all of us know about the metrics of the business being best in breed of sorts. They've come post their IPO, they've come and redefined this entire business. And I believe there's enough secular headwinds ahead of us to kind of see growth happen the way real estate is kind of building up. But, from a valuation standpoint, things do tend to get expensive till you have to wait for the EPS growth to come in. And that is exactly at which spot or juncture this stock is at. My sense is there would be some profit booking, there would be some time correction in this, and then you'll probably see a lot of institutional interest come back, because it's not something which retail probably wants to buy at these levels, but the institutional money typically finds its way into these kind of names which have a very clear runway to growth for the next 3-4 years. And from a business standpoint, I think the next wave of growth for the likes of Polycab will probably be a lot of inorganic growth vectors. They'll probably scout for acquisitions given the comfortable position they are in, and that consolidation will probably see a little bit of that re-rating. But the distance between them and the number 2, number 3 is quite vast, and I think they'll continue to fetch that premium even after this correction. There'll definitely be some sort of buying. This is, of course, promoters know it best, and if the promoter is cashing out whatever percentage it is, people do tend to read a bit too much more into it than just the quantum of what is being sold.
Prakash, there is so much sort of stock-specific action, right? I'm looking at Nazara. We've got a story which we'll play out for our viewers in a bit. Star Health, that analyst day. There's a Solara, where I think there's a brokerage note. Bata is up about 5%. Praj is up 7%. These are all well-owned, liquid, large names where there is a tremendous amount of activity which is going on. We'll leave it. We'll leave our conversation for now here. Prakash, thank you very much for joining us this Friday. Great to have you with us here. Have a good weekend. We'll speak again soon. We take a break. We are back with Ajay Vora of Nuvama Asset Management on the other side. Stay tuned.
At 21, only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Milestones.
Welcome back. Once again, inching towards 24,100. It's a 50-point gain on the Nifty, 100 points on the Sensex. It's been a bit choppy, but the last 10 minutes, we've seen a positive tick up. IT started moving up. So Wipro's up 1%, LTI Mindtree is up 0.5%. In fact, these stocks have seen a return of about 5.5% this week itself. So ahead of earnings, which begin in 2 weeks, IT is seeing some buying. But let's get you a CNBC TV18 exclusive now. Sources tell us that Nazara Tech is likely to pick up the stake, the residual 49% stake in gamified learning app Kidopia. Rachna joins in with the details on this story. Rachna.
Right, what we're picking up is that Nazara is likely to buy 49% stake in Kidopia, which is a gamified learning app. For now, it already owns the 51% stake in the company, and this will be valued about 300 crore rupees. Now, currently, Nazara already has 51%, which it had bought in 2020 for about 80 crore rupees. And now this further 49% will be purchased from the promoters of Kidopia, that's Anusha and Anupam Dhanuka. Speaking of Kidopia, for FY24, it clocked in about 2.5 lakh subscribers and recorded a revenue of about 220 crore rupees with an EBITDA of 55 crore rupees. This, of course, comes in at a time when Nazara has been going big on M&A action. We wrote to Nazara asking for a confirmation, but we haven't received a response yet.
Okay, all right, Rachna, thanks very much for that. So, Kidopia, you know, it's a large asset for Nazara, and It's been struggling. I looked at the numbers for subscribers at about 2.5 lakhs. On a year-on-year basis, it's down about 18%.
So there was a change in the subscriber acquisition policy because of consent, etc. The personal data. And for the last many quarters, Kidopia's subscriber growth has been, either muted or negative. And
it's been flat. I mean, actually, I looked at the last many quarters, nothing, no growth at all. But yeah. As Narashna said, 80 crores for the first 51%, and I think, whatever, 300 crores now for...
But we know, right? Kids market is a big market. It's a very lucrative market. They just need to figure out this. But, parents are willing to shell out...
Gamified learning. I'm not used to it.
It's for 3 to 7. You're out of that age bracket for your kids.
Okay, all right. Well, Ajay Vora is with us, Head of Equities at Novama Asset Management. Ajay, great to have you with us here. Thank you very much for your time. So, Ajay, just a quick word on the sort of market itself, which is some have pointed out maybe getting a little overheated, positioning all one-sided, very extreme with the rally that we've seen. At least the futures data, etc., shows that. We've certainly broken out new highs, etc. Underperforming sectors have started to participate on odd days, not today. Private banks, for example, is a case in point. Telecom tariffs are through, the hikes are through. What next for the market in that sense, Ajay, from here?
So, hi Prashant, good afternoon and thanks for having me on the show. So, coincidentally, this is something what we all as, money managers have been hearing from, I think, every investor interaction. And with every 1,000-point rally, we would say that, now it's more or less getting overheated and now it's more or less getting done. Most of the positives are in the price. But actually, if you look at it, and maybe, I've also thought about it a lot, a couple of things which actually will lead to, I would say, a meaningful market correction. Either, so historically, this is proven that either there is a liquidity crisis or you have a major earnings downgrade. At least, both of the things are not visible as of now. Although, in pockets, you may find markets a little expensive, something on the capex side and maybe a couple of other sectors. But actually, if you look at the numbers, FY25, if you are looking at an EPS, Nifty EPS of somewhere close to 1250, 1280 rupees, and if you give around 20 times fair multiple to that, you should be ballpark somewhere around 25,000 odd. And this is something, we have been maintaining right from, I would say 18, 19, 20,000 or so. That 3 months down the line, meaning we are in July already right now. Maybe by October, December, you'll completely start discounting FY26. So I think I don't think it is overheated. Positioning wise, now it's definitely a thing, but that is more a short term kind of a thing. But overall, if you look at it, the kind of results which we are seeing from most of the companies and the sector rotation which is taking place, I think that is pretty healthy. So if you look at this month also, it has been a pretty broad based rally across all the sectors, right? Barring metals as a sector, you see, right from cement, banking, autos, pharma, all the large cap names have done pretty well. And just to give you one more perspective over here, it's been 6 months now, Jan to June, index is up close to 11% odd, whereas FI inflow is nil so far, right? And we got just $2 billion this month, and we saw, market movement of almost 5 to 6%. So I'm just saying that, I don't think markets are overheated as such. And last year we saw FI inflow of almost $20 billion. This year in the first 6 months, it has been flat. So hopefully, if you get some more money in next 6 months, there can be a decent upside as well.
Ajay, good to see you in a Friday mood, Friday dressing.
Yeah, just trying to be in line with market mood, Rima.
Chill today.
Yeah.
All right. So, talk about the, price, the way the stocks are reacting to the telecom tariff news. Bharti, Airtel, Vodafone, Idea, all of them are reacting negatively. Stocks are under pressure, but Reliance Industries is moving up. So what have you made of that?
So I think it is definitely a positive, and that is the reason why you saw these stocks doing well since, I would say pre-election and more so over last 1 week or so. It was long overdue. And as most of the promoters have been talking about, the ARPU in India has been at the lowest level. This kind of a hike, I think it can be easily absorbed on the consumer side. So I was just reading one of the reports, and it says that the overall shell out from the consumer wallet would be somewhere close to 50,000 crores. And if you look at, at least 60-70% of that flowing through to EBITDA level, it will be close to 30-35,000 crores to the entire sector. So my sense is that, it is a decent number. And this gives you a clear sense that, how these companies are planning to, shape up the ARPU going forward as well. And we all know, how cheap the data is available right now. So I don't think consumers will really mind paying a few percentage points higher, and which eventually helps these companies. And why maybe these stocks are doing well, because if you look at it, large part of the capex is behind them. Incrementally, you would see that, more profitability will help them deleverage the balance sheet, eventually resulting into higher market cap. So I think that, the sector has been doing well and can continue to do well from here on as well.
Ajay, the question was actually that the way the stocks have reacted, because Bharti, Vodafone Idea, they're all down after the news. So is all the good news in the price now? And it's only perhaps in Reliance Industries where maybe there is still some comfort and valuation, because Reliance has moved up. So wanted to get your thoughts in on that point.
No, so I don't think so. It will be definitely some sort of profit booking on news, because if you look at Bharti, it has moved almost 40%, I would say, over last few months. And similarly with the Vodafone Idea as well, which has moved almost 60-70% since the fundraise. But I think that, if you do the math on Bharti itself, they'll do somewhere close to maybe anywhere between 95,000 to 1 lakh crore of EBITDA. And current market cap is somewhere close to 9 lakh crores, and add to that the debt number. But my sense is that going forward, if you have a visibility of at least 15-20% growth, I think the compounding can continue even from current level. So I think it's just profit booking on news, but the story still looks attractive.
Yeah, got that. Pull up IIFL Finance if we can for a quick bit. Look at the move which is materializing on that one. 518, 519, it's a 8% pop. That's a very, very sharp move on IIFL Finance. Now, there's no news flow or anything. They released the fourth quarter full year numbers, etc. recently after a delay, because, the RBI restriction on gold loans and IIFL Finance is still in focus. And of course, the trigger for the stock, the audit got completed. We reported that. But of course, now it's up. It's the next trigger in that sense is going to be when if and when that ban is lifted on IIFL Finance in terms of gold loans. Company, of course, has been a super performing sort of stock. A company over the last many years now, but this, of course, was a bit of a problem. Remember, the high on IIFL Finance before the restriction came through was almost $700. The low that we saw was about 300. So, it's from the lows it's come up a little bit, but still off the highs by quite a bit. Ajay, some of these wealth management companies, if you want to sort of comment on. I think it's now very quickly, it's become a pretty well-covered space. You've got a couple of foreign guys who cover it, some local sell-side analysts as well. Do you like the space? Do you own anything here?
Yeah, so we own a couple of them. But the point is that, on this, Prashant, in India, if you look at it, any business which you want to build, which is a B2C business, I think the whole distribution channel is the most important piece in building that. We have seen that with mutual funds and even within the whole consumer space. If you look at any company like Asian Paint or a Lever or any consumer durable company as well, the distribution part is the most important thing. The more you can reach to the final consumer, that makes the company more valuable. So I think the same story is playing out in this space as well, which is the financial product distribution. A lot of wealth has been created in this country in the smaller towns, but I think that not much of education is there in terms of how to invest that wealth. And therefore, I think the distributors with the quality people which they have, I think is adding a lot of value at the ground level in terms of educating the investors how should they invest their money. And I think this space will keep getting better, because as more and more people are getting wealthier, they are looking at more and more sophisticated products and avenues to invest. And eventually, it is the financial product distribution platform which facilitates that. So I think that, this space, as you rightly said, it's very well covered now. People have started understanding. And I think that, still it is a very, nascent stage. I think the growth rates can get better from here.
Any big portfolio calls, bets that you've made in the last 2 months, Ajay?
So, Rima, we are incrementally getting more positive on the overall consumption side. I think that, on the CapEx side, we are looking at many ideas, but everything is a little more stretched in terms of valuation. But consumption is something what is looking very attractive, be it consumer durables or be it branded retail, or even for that matter, even the real estate space. I think although it has done really well over last 1.5 years, but I think the ground level demand is very robust and this can continue. So moving more from, CapEx kind of stories to consumption led stories. And on the other hand, the whole infra play, we like the cement sector now. We believe that the overall consolidation is picking pace. And as this gathers momentum, there will be significant price discipline. And therefore, the profitability also can improve over next 2 to 3 years. So I think that consumption and within infra, cement, these two spaces are looking very attractive.
Thank you very much, Ajay, for joining in. Let's get in a quick corporate conversation. Work Hard is in focus as the US body Clinical and Lab Standard Institute for CLSI gives WCK-5222 high susceptibility breakpoints after the successful use to treat a cancer patient in the US. Ekta caught up with Habil Khorakiwala, the chairman of the company, to know more about the potential of this particular drug. Listen in.
Zenic, which is 5222, it's a brand name. I believe it has, most importantly, it saves life. There is no antibiotic here today or likely to be there which will deal with resistance organism. And in India, the incidence of antibiotic resistance organism, which is very conservatively done, is about 750,000 patients. And this drug is likely to, it is being priced comparative drug in US market for a treatment about $15,000. And we intend to market this product in India at a heavy discount of 85 to 90%. And with that, our approach in Indian context is how do we make this drug accessible to larger number of patients in terms of affordability, in terms of its usage. So that is how we would be roughly pricing the product. And we believe there would be extensive market.
Can you tell us about, for example, when do you expect an India commercialization of the drug, and when do you expect a global commercialization of WCK-5222?
We expect India commercialization sometime early calendar year 25. That is FY26. More or less, we will have a full year commercialization. The emerging market commercialization would be another 12 to 18 months later on. In the Western commercialization, we expect sometime on later part of 26.
Out-licensing opportunities for this drug?
Yeah, we have thought through this, and what we thought that we should monetize the outsourced licensing for the Western market, where 90% of monetization value is available. So that is what we would do. We'll go to a global pharma companies and monetize it once phase 3 clinical trial is done. Whereas in India and emerging market, we intend to market ourselves for 2 reasons. One, that we have a whole portfolio of new drugs available. Second, our objective is to make drug accessible and affordable. And that is a kind of, you can say, social call along with what we have done. And I thought unless you can make drug accessible and save lives, that is a very important part of it.
You raised funds via QIP as well recently. What is it going to be utilized for? How much is going to go back into your R&D program? How much of it is going to be utilized for reduction of debt?
Let's put it differently. About 40 to 50% we will utilize this for the research program. Partly we will need for our operating working capital. And whatever debt is due as and when, we will pay on time.
When it comes to the US business, you're now only looking at contract manufacturing, or are you going to look at probably any kind of long-term remediation or, manufacturing and resupplying to the US?
See, US market, we have de-emphasized as a part of our long-term strategy. Mainly because we don't have a critical mass. We are doing out-licensing, that we will continue what we are doing. We are not going to invest significantly in research as far as US market is concerned. Our focus would, in addition to new drugs portfolio, would be in biologicals or insulins, new insulins, other diabetic product. That we would be focusing on it, and we would be available in all biosimilar space in next 3 to 4 years with whatever is getting off the patent in India and emerging market.
GLP-1?
GLP-1 is one of those areas, but we are also certainly looking at it. Technology is in a similar space.
Okay, well, that's an interesting chat. We'll take a quick commercial break here. The market's down, 30 points or so. Look at the volatility. So 24,015 is where we stand at. We're going to come back and tell you what's happening in dealing rooms. Nimish has been making those calls, and he'll get you a better sense of all of what's going on. Stay with us.
The large street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high. We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube.
Welcome back. As promised, D-Street chatter. Nimish, of course, is getting us the market intel in terms of what's going on right now. Nimish, afternoon.
Hi, Prashant. A bit of consolidation in today's market, but at least some of the lead indicators are suggesting a bit of caution as well. So maybe rightly so, a bit of sluggish market today. But again, the theme of this week was the leadership was back in the large cap names, and rightly so. Reliance has hit a market cap of over 21 lakh crore. ICICI Bank this week hit a market cap of over $100 billion. So clearly the leadership seems to be back in the large cap names, and you've seen some bit of underperformance in the broader market stocks. So it looks like a bit of shift towards the large cap stocks. The flow seems to be positive again in today's market. That's been the trend for this week, and looks like the FI momentum in terms of buying is back, and largely in the large cap names. But PSUs for a change has seen some bit of traction as well in today's market. The sector of the day is clearly the tire stocks. Big move on those names, in largely in anticipation of price hike. So that's been the key reason why all the tire stocks are buzzing in trade. A word on Telecom though, while Vodafone is down in today's market, so is Bharti. But from an institutional perspective, the feedback is there is buying interest overall in the telecom sector. Bharti is largely down in anticipation of a large block. We've been saying this for the last couple of days, that potentially one large block can come. And even in Vodafone Idea, the feedback is some large hedge funds have actually bought into today's weakness. So while the screen may say something, but from a flow perspective,
there is buying back in the telecom names as well.
Absolutely. What about individual names, Nimesh, on your list?
Well, Prashant, the first is, the theme which we've been talking every day, potentially large blocks. So I'll start with two large blocks which potentially can come. The first one is Havels. The stock has been a big outperformer in the last couple of months, almost at record highs. But now at these levels, the feedback is there could be a block from a large FI investor very soon. So Havels is first stock to watch. And the second is PNB Housing. We've already seen two large blocks in the last 15-20 days. But now the indication is there could be very large block from a private equity investor. So that's something to track in PNB Housing as well. The second stock is Tata Motors. After a bit of consolidation, some bit of buying seems to be back in Tata Motors in today's market. So expect high delivery volumes and a bit of FI interest as well in Tata Motors. The third stock is Manappuram Finance. We saw a big move in yesterday's trade. The volumes were on the high side. The stock has actually outperformed in the last couple of weeks. But now some bit of selling pressure has emerged. Potentially some bit of profit booking as well in Manappuram at these levels. And the last is Patanjali Foods. We keep talking about this anticipated move from the group quite often. Now the indication is that it can come very soon. So a potential merger of the non-food businesses is likely in Patanjali, and hence that stock has been buzzing off late.
Okay, thank you very much for that. I think CDSL is going to consider a bonus on 2nd of July. So that's also another reason. But Mitesh is now with us for a few BTST calls or reverse trades which can be played out over the weekend. Mitesh.
See, ONGC is on my radar. I think that's the BTST with a stop at about 271. And look for a target of around 278 here. And Maruti is on the sell side, STBT, with a stop at about 12,100. Look for a target of around 11,850 to about 11,800.
Okay, all right. Actually, so interesting Maruti on your list, Mitesh. Thanks for that. Auto sales numbers for the month of June are due on Monday when we come back. Yatin is standing by with what to expect. I mean, at least what the street is expecting. Yatin, good to have you here on the channel. Go on.
Prashant, when it comes to the auto sales numbers, expect a subdued month of June because usually it's the monsoon season and car sales generally lag. When it comes to the four-wheeler space, let's talk about the auto expectations for Mahindra and Mahindra. New models are doing well. The last year base is high, and despite that, expect a 15% kind of a jump in Mahindra's numbers. Numbers expected to be close to 17,500 units. When it comes to Tata Motors passenger vehicle segment, again a base effect playing the role. Numbers would be flat on a year-on-year basis at close to 46,000 units odd. Maruti Suzuki, watch out for this one. Numbers should be almost 1.5% lower to 2% higher. That's what the broker poll is, and probably 1.6 lakh units is where you can expect Maruti's numbers to be. When it comes to commercial vehicles, Tata Motors commercial vehicle sales expected to be flat. Ashok Leyland would show a probable growth of 3%. So that is one stock to watch out for. Two-wheelers, and this is an interesting space. Numbers will be mixed. Bajaj Auto exports are subdued. So probably the numbers would be close to 3.4 lakh units, almost a flat number year on year. TVS Motors, a 9% growth on higher scooter sales, and new models are doing well. When it comes to Eicher Motors and Hero MotoCorp, both will see a decline. The rural markets are lagging, and probably Hero MotoCorp and Eicher Motors will have to bear the brunt. And when it comes to tractor sales, start of the monsoon, so expect a month-on-month increase for both M&M tractor division as well as Escorts. But on a year-on-year basis, it would be slightly flat. So, on a month-on-month slight growth, year-on-year almost flat for the tractors business.
Thank you very much for that. Get into a break. We'll come back and get to the closing of today's trading session.
So markets will be looking forward to the budget in terms of policy making for next 5 years. And as you very correctly mentioned, now for Indian equity market, margin expansion story is over. Valuations, we are already trading at a premium to other countries, other peers. And hence, it will be all about governance and earnings growth.
Dr. Saneen, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness?
Welcome back. A bit of a correction is set in. The Nifty is very close to the 24,000 mark, in the red now, on the verge of, in fact, breaking that 24,000 mark. It's been a bit of a choppy session. Auto stocks are correcting, I think. Tata Motors, M&M, Maruti Suzuki. Pull up the intraday chart of some of these stocks. And even State Bank of India. State Bank of India is off about 2% from the session highs. So the last 30 minutes has seen some profit booking set in. We're still on course to wrap up the week with strength, a 2% gain. But looks like it's going to be a 24,000 handle on the Nifty by the close of this week. Sudeep Bandyopadhyay, the Group Chairman of IndiTrade Capital, is with us on the show now. Sudeep, afternoon. Thank you very much for joining in. Coming first on, the kind of mid-cap action, a vibrant screen today. You've got New India Assurance, Prestige Estates, so many stocks which are moving up in pretty large volumes, CDSL, IIFL Finance. Anything that you're recommending?
There are a lot of interesting ideas in mid-cap, of course, but we like in the pharma space, Mankind Pharma. I think that's one company which is very well positioned to take benefit of the, the growing in domestic market because they're fully focused on 95% plus of their business comes from domestic market, and they're not dependent on the vagaries of US generic pricing pressures and things like that. So that's one idea we like. Of course, CDSL continues to remain a favorite. The valuation has moved up quite a bit. Of course, the excitement today is on account of the bonus, which they are expected to announce soon. But otherwise, also with this, what's happening in the bond market, what's happening as far as insurance dematerialization is concerned. So long term, I think it's a fantastic story of Indian retail financial market participation. And definitely from a long-term investor's point of view, even now CDSL looks good. But as things stand today, I think it's little, fully priced. The other sectors and spaces include banking and financial services, where also a lot of mid-cap ideas. Let's say a Federal Bank. I think it's very well positioned, and the pricing-wise, it's definitely attractive if somebody is looking at long-term. So things like that, I think in the mid-cap space can definitely be looked at.
The Nifty Bank is now nudging towards a 1% fall now. 500 points gone on the Nifty Bank. It was flat through a greater part of the trading session, but the last 30 minutes has seen a correction set in. Maharashtra to see a petrol price cut by 65 paise and a diesel price cut of about 2 rupees per litre. Remember, the assembly elections are upon us in a couple of months, and there has been on petrol, it's a small price cut, 65 paise. On diesel, it's a cut of about 2 rupees per litre. Sudeep, oil marketing companies?
Well, I think, we have seen enough of these vagaries of, decision making based on the election season or not. But fundamentally, I think, oil marketing companies are strong. Just that you have to factor in all these, pre-election and post-election volatility. If somebody is a long-term investor, I think both PPCL and HPCL does merit attention. And I think they should do well from a one-year perspective.
And tire companies, where I think prices have been hiked, or there is an anticipation of a tariff, a price increase for tire. Anything which catches your attention?
Yeah, absolutely. I think tire companies are in a very good space. In spite of natural rubber prices going up, the price hike which these companies are taking should take care of the margins. Second, I think the export opportunities are emerging, and companies like CEAT have significantly enhanced the capacity. Off-road tire companies like BKT also have done the same thing, and the global opportunities are opening up for Indian tire companies, and that should help them. As things stand today, I think we do like JK Tyre and we don't like CEAT as well. So I think both these tire companies can look at. Apollo and MRF are good, but valuation-wise, we like JK and CEAT.
Yeah, no, absolutely. Throwing open the field wide for you, Sudeep. Hi, good afternoon. Anything you... by the way, it's turned out, I was just noticing, it's been a fantastic June. You know how much the Nifty is up in June? 6.5%. Bank Nifty is up 7%. These are some impressive gains, right? Not what we thought when we started the month of June. So even though, it's a 40-point downtick, but, it's been absolutely fabulous. Earnings will start, IT will start reporting first up, and then, of course, in the second half of July, you'll have the budget, etc. Sudeep, you think the budget is going to be the big one?
Well, a couple of things, Prashant. One, I think before the budget, we'll get to see corporate results. They will start coming from, I think, towards the end of next week. And of course, we'll get to know what's happening with the monsoon, the intensity of it, spread of it, distribution of it. I think both these factors will be very, very important from a market point of view. Then, of course, by the time we sit for the budget, I think by and large, the major corporate results will be out, as well as the fate of the monsoon will be out. So with this knowledge, we'll sit for the budget. And of course, I think things are looking good based on predictions, based on what we gather, both for corporate results as well as monsoon. Now, as far as sectors are concerned and liquidity is concerned, I would say that BFSI continues to remain attractive. So does the infrastructure. And in infrastructure, Larsen has been my favorite for a very long time, and it hasn't really moved the way some of the other companies have moved. So I still believe that there is significant opportunity in Larsen. As far as flows are concerned, I think we have hardly seen any FII net inflow. I think we are pretty much flat. And whatever the market has done is based on domestic inflows. And we believe that at some stage, FII inflows will start pouring in. And that should take the market to a newer highs post-budget.
Did you look at this acquisition of Navkar Corp by JSW Infra?
It's a very good acquisition from a JSW point of view. And they did at a slight discount. And I think this deal was in the making for quite some time. And the way the things are positioned, I think it's a very, very good acquisition, which should help JSW Infra in a big way.
I think well put. Thank you very much, Sudeep. Short conversation today, but good to have you with us here as always. Thank you very much for your time. We're going to end flattish, right? About 40 points lower, so it's neither here nor there, kind of a close. But for the week, we're up 2%. That's Friday to Friday. The Nifty Bank will end not 2% higher because today, because of private banks, there was a bit of a pullback, but we'll end up 1.25% in the green. And mid caps and small cap index will end about 1% higher. And the mid cap index, I think, will also end, in a flat kind of zone. So for the week, about a 0.5% gain in the mid cap index. So to that degree, if you want to nitpick, you can say that, well, it was a large cap week, but not really. Actually, the sector of the week, which I think went under the radar and I think will gain prominence is, of course, IT services. The Nifty IT index was up almost 3% Friday to Friday, and that'll be first off the block with earnings which will come, start early July. Rima.
I think the big difference today versus the prior four sessions is today we're ending at a day's low at 2400. In all, through Monday to Thursday, markets started off subdued, flat, slightly lower, and then ended up at the day's high. There was this intraday recovery. But today, in the last 30 minutes, there was a sell-off, and the Nifty is ending at 24,000 in the red, snapping a 4-day winning streak, though the mid-cap index did play a bit of a catch-up. The big winners of the day and the week, Dr. Reddy's 2.5% up, that's the top Nifty gainer, and even for the week, it's seen a 6.5% rally on the back of that Nicotinella news that came out 2 days back. Oil and gas had a good session. ONGC, Reliance Industries, a milestone of 21 lakh crore of market capitalization, and Reliance Industries gaining 7.5% this week. Autos was a mixed bag. Hero MotoCorp, Tata Motors closing up in the green. On the way down, Maruti, Eicher Motors saw some selling pressure, and private sector banks. They were the big laggards today. IndusInd Bank, Axis, ICICI Bank, and Bharti Airtel too came in for some amount of profit booking. Well, with that, it's a wrap on Closing Bell. But don't go anywhere, because after this very short break, we'll be back with our Friday special Editors Roundtable on the other side.
Or do you think it's also a cultural issue where, you know, one of the statistics that or reports that I was reading indicated that we just don't feel the need to brush more than once a day?
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth, and the biofilm contains bacteria, especially bacteria like strep mutans, which is what causes cavities. So, and of course, gum disease has different bacteria, but there is a whole bacterial biofilm that happens in the teeth. So if you don't remove that biofilm, then the bacteria will remain there and they will act on the gums and of course on the teeth. And so the gum disease and the dental caries both will be a factor if you don't remove the biofilm. So it's extremely important, especially at night, because when you've just eaten and then you go to sleep and it has time to act.
Is it more of a rural problem? Is it also as prevalent in the urban population?
So I would assume, looking at the stats, that the rural problem would be slightly more because also availability of toothbrushes, toothpastes, and other oral health aids is much less than in the urban areas. But awareness, and as Sunil said, awareness and knowledge has to be imparted so that people will be more, able to do what they have to do.
It's a lot of work, but it's been fun to understand what's going on, especially with AI. But I'll talk to you about that in just a second. You know, this is really the mother market for you, Amit, and you've been here over the last few years running the North American business. What's the sense that you get in terms of business confidence, in terms of a return of discretionary spending capacity, discretionary spending power? Is it looking any different today from the last time that you spoke at the end of the quarter?
I think the overall confidence is quite robust, I would say, Shireen. But in the short term, we're going through an election year. There is fair amount of tailwinds that we have from good employment rates, good consumer demand. But there are also sense of headwinds with government spending, with inflation, with interest rate environment. So I think while the demand is holding up and businesses' top line is quite strong, they are still taking a cautious approach, investing, but being measured.
And when you say investing, is it incremental investment or is it really redeploying capital from one area to the next?
I would say the latter. So AI is very, very real, and it's everyone wants to invest in that.
So where are they pulling money out of and putting it into AI?
And the AI has both an applicability on the growth side, but also on efficiency and cost side. So at the near term, you can deploy the technology in business as usual activities and fund your innovation and growth cycles from there.
So pause for now, you believe at least through 2024 till the US elections are out of the way, which is November. So it pretty much takes care of this calendar year.
Yeah, I would say measured. We are going to see spending, but there's going to be a dislocation of spend. And it's going to be in certain ways self-funding, at least for now.
The valuation is just the score, is the way we call it. So we are all about playing the game. And our game is accelerated computing and building a platform. So for us, generative AI is the killer application among other applications for accelerated computing. And so, we've been doing deep learning since...
The last Street gains for the fourth straight week, with the Nifty and the Sensex gaining 2%. Banks outperform while mid-caps underperform. On Editor's Roundtable, we decode the week on Dalal Street. We put the spotlight on the massive promoter stake sales that happened. We take stock of the telecom tariffs. I'm Reema Tendulkar. With me, Prashant, Anuj, Nimesh, and we've got N. Jayakumar, Group CEO and MD at Prime Securities. Hi guys.
Hi.
How are you feeling after this week?
Quite good actually, because I think the market this week was quite strong. All through this week, except today, when the market actually did reverse of what it's been doing for last 4 days. For last 4 days, it was giving you an opportunity in the first 15 minutes and then closing at the highs. Today, it gave you an opportunity to actually book profit in the first 15 minutes and close at the low. I think the only sort of sour point for me is the way the markets become extremely elevated now in terms of FI long positioning and the put call ratio. Otherwise, I think the market seems to be quite fine with sector rotation. So.
You know, it looked like a very eventful week, right, Rima? You're back from your holiday. Reliance hitting a market cap of 21 lakh crore.
Cement, telecom.
ICICI Bank entered $1 billion.
How you said it. Rima is back and Reliance.
And you saw what happened to Telecom as well. In fact, you know, even ICICI Bank entered the $100 billion market cap. So clearly, you know, this week was all about large caps, right? The mid caps took a bit of a breather. Leadership is back in the large cap frontline names. Reliance, Bharti, ICICI Bank, all have done well this week. So that was one big, you know, theme to watch out for. I guess, you know, Anuj will talk more about that, but I've been highlighting this. The promoter stake sale goes unabated, right? I mean, massive selling coming in from the promoters and private equity investors. But I think it was an eventful week from a sports point as well, where we entered the finals now, so that's something to watch out tomorrow.
For tomorrow.
It's quite an interesting week, so to speak.
I anchored like that, Rima, on Avaz, the last show. Because, you know, I anchored like this yesterday and we won, so I sort of thought that, you know, let it be the lucky charm. But Jakes, how are you feeling about the market?
So I think it's a slightly different take I have on this, which is that usually the frontliners move up when money flows in.
Yeah.
And then the mid caps and the small caps catch up. This rally, if you see the last 4 or 5 years, has been exactly the opposite. The frontliners, other than during COVID, actually, only during that time the frontliners were bought into. But after that has been the frontliners waiting because they were the over-owned space. So the retail public didn't go into the over-owned space. They went into the small and mid caps. So the rally has been kind of fueled by that. And now, as and when you sort of pause to take breath, people say, you know what, now the frontliners seem inexpensive compared to historical averages or, you know, traditional means, and therefore people step in. So since post the elections, new money has walked in, which is from overseas to some extent. I think that money is going into the traditionally overowned, and therefore the large caps paradoxically are playing catch up to with the front end with the small and mid caps. So that's
it's great that there's always something to rotate into. Right, I mean, because there's large caps, mid caps, small caps. I mean, it's like a rolling wave of money which goes from one thing to the other. Jakes, I'm going to come to you for more, but for our viewers, let me just sort of wrap out the week, but because it's also the end of the month, right? So it's been a great week. Nifty is up 2, Bank Nifty is up 1.2%, small cap index. You would have thought that small caps and mid caps, and we were saying, well, they did take a bit of a backseat, but it's all relative because the small cap index Friday to Friday is up 0.8%. Sectorally, it's interesting. I mean, one sector which has sort of received very little commentary is IT services. IT services index Friday to Friday is up 3%. And of course, they'll be first off the earnings block. Private bank index, 1%. PSU bank index, by the way, down about 0.5% for the week. Now, real estate, some of the sort of hot sectors, real estate and metals took a backseat, 2.5 lower on real estate, metals down 1.7, and PSU banks, which were lower as well. Now to the month, guess what? The Nifty is up 1,500 points in the month of June. That's about 6.5%, right? I mean, 1st of June when we began seems like a distant memory now, but we're up 1,500. Bank Nifty is up 3,000 points. That's 7%. And now, of course, we get into the earnings season, etc. This point that Anuj mentioned, and I've also been making on the FI positioning, I mean, it gives you a sense. It doesn't do very much. It doesn't pinpoint the top or the bottom. But the fact is, FII positioning in index futures on the 4th of June, going into that election verdict, they were short 3.5 lakh contracts, and now it's swung to the other extreme. As of Thursday's close, and we'll get the data for Friday as well, they're long 3.2 contracts. The graphics are on your screen. As I said, it's a pointer. You know, shorts in the system means that somebody covers as the market falls, and it's kind of one-sided right now. And I just want to, its budget is, of course, we don't even have the date of the budget, but it'll happen sometime in the second half of, July. But the point is, markets are assuming right now, and Jakes, correct me if I'm wrong, that everything is, they've assumed that it's continuity from we've not heard from, the leaders, the policy makers about what the next, their vision for the next 5 years, which I think we will hear in the budget. So I don't know if you should account for a little bit of that. What's your sense?
I think right now what's holding center stage is this old adage which I kind of follow, which is, if I were to ask you the difference between stocks and commodities, in commodities, as prices go up, demand goes down because people find it expensive to convert, and contrary wise, if prices fall, the demand goes up. In stocks, it's exactly the opposite. As prices go up, the greed kicks in, so the demand actually goes up with prices going up. So people are now feeling that they need to be in the market. There are enough and more small town stories of people having made significantly more than their salaries would have allowed them to do. And from that perspective, I think there's more money coming into the markets, which is a good long-term trend. But even today, we are a tad under 5% in terms of household savings into equity. So there's a long way to go. But there will be periods, and I'm kind of surprised that the market is going up the way it is, because there are enough and more of the quote-unquote smart guys, the PE funds, the venture capital guys, the promoters. On a daily basis, there are 3 or 4 blocks, and people are taking them at smaller and smaller discounts compared to the past.
Absolutely.
So that's a point of some worry.
Actually, that's what I was coming to now, because I was having this interview with Rhythm Desai, and I think I had this conversation with you also, that you have clearly DIs who are buying, the retail investor who's buying non-stop. In fact, the biggest buying came on the panic day, 21,000 crores. And now you have FIs also turning on the buy side. So who's selling finally? And it's the corporate, it's the insider who's selling now. And if you look at promoter selling in 2024 till now, we have reached 65,000 crores. And we are halfway through the year. Remember, the record so far has been 2020, when we had 78,000 crores of selling. 2023 was 48,000 crores. 2022 was pretty bad actually, 25,000 crores. Bad in terms of the number, good for the market in one way. But this year it's been 65,000 crores. Some of the major block deals, Indus Tower, and Indus Tower is the best example, a block deal which happened in a non-block window, and still the price refused to fall. And today, in fact, you saw stock actually hitting a fresh 52-week high. Emphasis saw 6,600 crores of block deal. Polycab this morning saw a big block deal. There's Inox Wind, Happiest Minds, where the promoter sold some stake, SBFC Finance, KFin Tech, Gujarat Fluoro, KNR Construction. Every day, Nimesh in D Street chatter is referring to some of the other block deal. I think for Monday, he's already alerted us about Havells block deal, for example.
But let me throw something there, which is the other side of this, which is that for family offices that are raising money through block deals, presumably they're going into private equity, presumably they're going into funds, presumably they're going to AIFs. It's not that people are selling and getting out. What they're doing is they're kind of encashing a certain portion of the family wealth and going back into a whole bunch of, which you don't get to see on a...
Diversification in that sense.
It's diversification, that's one. Number two, again very interestingly, that retail is for the first time seeing the joys of sort of having its feet wet in multiple stocks.
Absolutely, absolutely.
And I think that's a big you see when, for instance, a Vodafone 18% block
11 rupee FPO, you get, at 17 or 18 within 1 month. Or so.
No, Irida, for instance, I keep quoting this, people couldn't find a good reason to buy it at 50. It's trading close to 200. I don't even know the price, but it's like, it's like a huge hit on your so-called intelligence and intellectual arrogance that some of us boast of. But the point I wanted to make was, with every single promoter selling, there's also a free float increasing. So there is an MSCI readjustment. So what this Indus, for instance, is a classic case where 19% disappeared into the market, but 4% got added to MSCI.
Correct.
So there is this constant adjustment of free float, and India is becoming to that extent a far deeper market.
In that sense, this is also a unique bull market, right? Which is creating a scenario where something like a Vodafone Idea, has been a company which 2 or 3 years back looked like it was going to be dead, and all of a sudden now they are repaying government, repaying vendors through equity, and everyone's sort of happy in that.
So I might remind you that famous airline shut about 10 years ago, or maybe it was 12 years ago. Till 2 years ago, the stock was trading at 100 rupees. Jet. So equity is that optionality, right? But Vodafone is not exactly that kind of thing, because to the extent that there is government support and etc., I think equity is swamping the system. To my mind, it's the equivalent of the Yes Bank in the telecom space, where large amounts of equity. So nobody is bothering about ROE, etc. right now. People are talking about survival, which is a...
Jakes, other thing which I want to ask you, what do you make of this cement deal? RKD has sold out its entire 20% stake. They've raised 1,800 crores. I mean, not only RKD selling stake in India Cement, but in general, like look at an example of like Polycab. Promoters just sold 2% and they've raised 2,000 crores. That's the kind of money the promoters are saying by selling a small stake. And that's, as you rightly pointed out, coming back into the equity market largely.
In some form or shape.
In some form or the other. What's your take on the cement as a space now?
So the cement space, I think no analyst could actually find logic as to buying this, other than the fact that as the big boys are consolidating, the group that bought into it could not actually see any other group getting in and occupying the center space in the south. Right. So to an extent, it's a preemptive deal, which is why I think there's been some terminology used over financial investment, etc. Yeah. So at one level, it is financial. I guess over a period of time, given the age of the existing promoter in India Cements, maybe this will result in a controlled transaction, but it's not a cheap transaction. Yeah. And it actually flies in the face of logic of $70 and $80 a ton. So I think RKD is selling out. I mean, he's a smart investor. He's made his money. He's got out. But the preemptive nature of this deal is what is interesting. That this deal was not, it was as important for them not to see anybody else walk in. And to that extent, to spend 1,800, 2,000 crores and have a foothold there and prevent anybody else from coming in is a good step, what I would say.
Interesting corporate battle perhaps brewing over there. But Nimesh, over to you now. Some of the key events on Dalal Street that we saw this week.
We spoke as well, right? Briefly about this was a week of large caps coming back. Mid caps have taken a bit of a setback. So kind of a week when the big boys have participated and have taken the leadership now. The other big event was the cement consolidation. Prashant was bang on in putting out that news that there's going to be a large deal, and that's consumed, right? So again, this is going to be a big theme within the cement sector, as even Jakes pointed out. The large caps the larger players will just consolidate and eat out the smaller players. So again, the traction seems to be back, and people are now focusing which could be the next potential candidate in the cement space. So that's something to track. Telecom, you highlighted throughout the day, but again, it's a big event even for a telecom sector point of view. A 20% hike is something which, while the street was anticipating, it's something now it's a reality, right? So again, telecom to my mind would be a big event to watch going forward as well. And again, the whole point of promoters selling out, PE selling out, that's been a big talking point. It looks like it'll finally come to an end early next week, because then the cool-off will start for most of the promoters as well. So I guess next week onwards, we'll be back to reality of earnings and numbers.
Every day, 2:50 when Nimesh comes on these
he says, what else but
I say, well, let's start with blocks. I mean, it's just so incredible, right?
Incredible.
It also talks about the maturity of the market. Sorry to interrupt you, but that markets see promoters buying and selling as two sides of the same coin.
Absolutely.
In the past, promoters selling would be, my God, this would be
negative,
would trigger a panic. I mean, especially, but now small, large, big, all companies.
Yeah.
It's a logical thing, right? You want to diversify, you want to take some chips off the table. This could be for charitable purpose. This could be just for wealth conservation. It doesn't matter. Yeah. So I think that's also a sign of maturity of the markets.
Yes, in that point of the promoter selling out and PE selling out, how would you classify the MNC selling stake and the local promoter selling stake? Because we had someone from the mutual fund industry last week, and they said it's a great opportunity to buy into MNCs because normally they don't get that kind of liquidity. Is there a way to differentiate between?
I think if you look at some of the smaller MNCs which have been selling, stakes to go down to 51%. To my mind, equally about 15 years ago, people would say control at any cost. Yeah. And you'd have, even the Unilevers of the world buying 3-4% if possible. Today it's exactly the opposite, right? Because they're not getting these price earning multiples in their markets. So they think it's a perfectly logical thing to release some capital here. Vodafone's been doing it. Some of the smaller engineering companies have been doing it. And to my mind, that again is a sign of the rich domestic liquidity that exists here. That people are willing to say that it's good management, okay, buying it a little expensive, but take a 5-year view, it'll probably play out.
Whirlpool, Nimesh, I don't know the price. It was
Whirlpool sold 24%
It's double since then.
It's double since then.
It's double since then. So the parent sold at 1,200 rupees, 24% stake, and today it's 2,400. Yeah. So, and there is a big talking point in the market as well. How come they don't know that Bosch is looking to buy them out, and they sold the Indian parent at Indian company at 1,200. the
So
struggle has
much
been
for the
funded.
theory that the promoter is always,
Exactly.
I think it's quite incredible. Nimesh, I just want to ask you one thing. I mean, you on Telecom, what's the view from people that you've spoken with?
So,
was today just a profit booking, and
So
is
Prashant,
there more
I spoke to
interest?
a lot of investors as well, even in today's market. While Vodafone was down, Bharti was marginally down, but the overall sense is this is the big telecom tariff repair, and from here the numbers will start coming up. So a lot of actually larger investors, the FIs and all, seems to be very bullish on telecom as a space.
Okay, here's what we'll do. We'll slip into a very short break. We'll continue to talk about telecom and many other themes on Dalal Street, so stay with us.
Well, Jensen, presented to OpenAI the first DGX in 2016. So that's a very, very long and deep involvement with all of the ecosystem associated with generative AI.
So no overnight success, which is what people sort of suddenly, like where did NVIDIA come from? To the layperson, I mean, it's just a phenomenal story that's taken shape in the public perception over the last few years. But there's a lot of work that's gone in over the past 2 decades in building it out to be what it is today.
Yeah, I mean, we've been working on this for many years. We always work with all of the developers and all the research laboratories and universities, all of the startups, small startups as well as mid-size and large startups, and all of the, global research centers, global capabilities.
Well, the big story this week was also the tariff hikes. The first one after 2.5 years, much awaited. It started with Reliance Jio. They took the lead this time and they hiked tariffs between 12 to 25%. But immediately, Bharti Airtel followed with a 10 to 20% tariff hike. So on an average, you would say the blended tariff increase has been about 15 to 20% for the telecom operators, much anticipated and largely in line with expectations. But this time, what's also different is that unlike in the December 2021 tariff hike, postpaid tariffs have also been hiked, and Reliance Jio also looked to hike the postpaid tariffs, knowing very well that perhaps it's the competitors who benefit a lot more. We've spoken a lot about this telecom tariff hike, so there are just 3 quick questions about this. One, is Reliance Jio perhaps preparing for an IPO? Because this time they've taken the lead in hiking tariffs versus Vodafone Idea in 2019 and Bharti Airtel in 2021. And if you remember, in August of 2019, close to about 4.5 years ago, Reliance had said that they plan to take their consumer businesses public in the next 5 years. So the consumer business would be Jio and the retail. So I think the street is now questioning, is this perhaps one of the steps which will eventually lead to an IPO? The second thing is, are we now seeing some signs of 5G monetization? Because earlier, unlimited 5G was available for most of the plans, but now it's going to be available only for plans which offer 2 GB and more. So in a way, 5G monetization. But also, what next, right? Because the telecom tariff increase was seen as the big trigger. So from here on, are we going to see sustained tariff hikes? A Jio IPO could be a potential trigger. A dividend from Indus Towers, a resumption of a dividend now that the health of Vodafone Idea has also improved. And even on Vodafone Idea, a capex pickup and the 5G rollout. But how do the stocks perform, right? Week to date, we've already seen big moves in stocks, particularly Reliance Industries. Bharti Airtel corrected on Friday, but still ended with a gain of about 2.5%. But look at the way Bharti Airtel has reacted, 40% up this week. So we've seen some very, very large moves by the telecom companies, this week, this month, and even for the year. Jakes, I think this was the big trigger, right? The telecom tariff increase. That's played out. So what next? And can the street now assume sustained tariff increases, maybe once in 2 years? Is that something we can build into our estimates?
Actually, it's been well documented that tariffs were probably at global lows so there was space to move up. And to my mind, the fact that tariff hikes are now being accepted, or hopefully will get accepted, is the good thing. And as you know, almost 80-90% of the tariff hikes actually flow through to the EBITDA level. But what's actually interesting is that not just that, but future spectrum auctions, etc., will get taken up, because this is actually a cash flow business. And now that the players are well established, no new player coming in, to my mind, I think it's well-oiled industry. Which
Would you recommend buying any telecom companies? Or it's
I don't want to get into specifics, but essentially I think the infrastructure players in this are, to my mind, even more protected than the competitor, because the infrastructure is almost monopoly, if you will. So I think everything and the infrastructure companies can actually expand into towers, going to data centers, going to charging stations, for instance, co-located with towers and so on and so forth. So there's a lot of potential there. And as the consumption here moves up, I think you'll find the infra being taken up in a big way. So that's also a
capital in that sense, right? I mean, which without sort of getting into, but that's the infra.
People can figure that out, yeah. But I'm as I said, little concerned about talking specific stocks, given the entire orientation towards that. But I think if you look at it logically, without getting into the competitive B2C competition amongst the existing players, because difficult to say, where the switch takes place, etc. But the infra is like an annuity business. It's a leasing business.
Exactly. On a corollary basis, if you look at auto companies, OEMs, as compared to, say, an ancillary company, which supplies to everybody.
Even there is competition, but to the extent that they do, you're right. I mean, it's very similar. Here it's a lot more sticky.
Yeah.
Because for people to switch around from tower providers from one to the other, etc., is not that easy. So I think there's a lot more stickiness. It's a lot more assured thing. But as I said, there are opportunities. So in this market, you've got to keep sort of deep diving for. I think the easy multi-baggers are out of the way.
Sure. Jakes, a word on the metals and commodities. You've been tracking that space very closely. What's your sense now for the second half of this year? You think the momentum in the metals is going to continue?
Stocks have moved even before that. I think the story here will be that the dollar index is actually refusing to crack. That's been actually a hypothesis of mine that it will crack. But problem is, because of this asset rotation, somebody who's selling one asset is buying dollars, somebody who's selling dollars to buy some other asset. So the dollar index is not showing the weakness so it's kind of stuck in a very, very narrow range between 103 on excess to maybe 106 or thereabouts. So given that it is trendless, I can't see the dollar breaking out because interest rates are poised to at least peak out, if not come down. Given that, you would argue that no new capacities are coming up. People view this as not clean. So a lot of the materials are not able to create fresh capacities. So logically, as your consumption of steel, consumption of some of these moves up, it's going to be impossible recreating the kind of mineral companies that there are. So there should be a boom, but I think it's taking time. Stock prices, by the way, have started moving up, especially for the leveraged ones. Sure. Whereas prices move up, not only are you paying down debt, but you're adding healthily to your ROE. Okay. So.
Okay, we're going to wrap up this Friday, this week. Thank you very much, Jakes, for enjoying.
Thank you for having me over.
And all of you guys, enjoy the cricketing weekend, the sporting weekend.
Absolutely.
With that, it's a wrap on Editors Roundtable. We'll be back fresh on Monday morning with more market action. Thank you very much for watching.
And major ISVs, it takes a long time to build a market.
It does take a long time to build a market. Umesh, let's talk about what is faster, leaner, better now at Uniphore, since we're talking about what generative AI can potentially do. I mean, how has life changed for you at Uniphore?
Well, first of all, great to have you back in Silicon Valley, Shireen. Much like you were talking to Shankar about these things are not overnight success. I founded the company, hard to believe, 16 years ago. We've been at this for 16 years, and sometimes I meet customers who think AI was born after the GPD moment.
Right.
But some of us have been at this for a decade and a half and more. But what's truly shifted in the last couple of years, which has been truly profound, we today serve some of the biggest companies, not just in North America, but around the world. These are large banks, large telecom companies, large retail companies who've been using AI, but now with Gen AI, what's profound is AI is now a boardroom topic. It's being discussed in every board meeting in a publicly traded company.
Yeah.
Wall Street is measuring companies on their AI strategy, and the stock prices are being shifted up or down, depending on what companies announce. And for that reason, CEOs and CIOs are now singularly responsible. A lot of the customers that we've been dealing with, prior to GPT, AI was being bought as part of a software as a service application.
Right.
Something in marketing, something in contact center, something for sales. Now AI is an infrastructure that no company can ignore not having within itself.
And for the last couple of years, we've seen tremendous traction. Matter of fact, we grew our top line a little over 60% last year, which was an acceleration from the previous year, and we're seeing the same trend continue now. So I'm seeing an insatiable desire at the C-suite around the world about how do we become AI natives? How do we keep
Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening: the Sensex and the Nifty ending marginally in the red after led by energy and IT stocks. Indian government securities officially become a part of the JP Morgan bond index for emerging markets. It will have a 1% weightage initially and go all the way up to 10% by March next year. India is the 25th market to enter the index since its launch in June 2005. After Reliance Jio Bharti Airtel hikes tariffs by between 10 to 20%, brokerages expect the average revenue per user to increase by over 15% and improve cash flows and return ratios of all telecom companies. Block deal mania continues on Dalal Street as shares worth about 4,000 crore rupees change hands today. Kotak Investment Banking says block deals for the year already topped $13 billion. Foreign promoters have sold shares in excess of $6 billion. At least one person dead and many injured after a portion of the roof at Delhi's Airport Terminal 1 collapses. Flight operations temporarily suspended from Terminal 1. This on a day when Delhi received record rainfall, leading to waterlogging and traffic snarls. Parliament proceedings disrupted as the opposition demanded a discussion over NEET irregularities. Lok Sabha adjourned till Monday. The Congress alleges that the mics of Rahul Gandhi and Mallikarjun Kharge in both houses were switched off when they rose from their seats to speak on the NEET issue. With elections just 3 months away, Maharashtra government announces a direct cash transfer of 1,500 rupees per month to all women in its interim budget. Also promises 3 free gas cylinders per year, cuts the tax on petrol and diesel. In the Lok Sabha elections, the US Democratic Party leaders and fundraisers sound the alarm after Joe Biden's struggles in the first presidential debate. The moderators also face a backlash for failing to fact-check Donald Trump. Well, let's start with the day's market action. The Sensex and the Nifty ended the day with March losses after hitting record highs in early trade. Financial stocks saw profit taking today, with the Nifty Bank Index losing nearly 1%. For the week, though, the Sensex and the Nifty have gained 2%, and this is the 4th straight week of gains on Dalal Street that we've seen. But that's the story for today. A flat close coming in for the markets. Prashant is standing by now to take us through the market action. Prashant, it's been a pretty steady and solid week. Where do we go from here?
A good week. I think that's the way to sort of wrap up this Friday's market session, because, I mean, today there was volatility and the market did come off the high point and we ended lower. It was, I mean, yesterday was massively volatile. There was 800 points worth of move. It was nowhere close to that kind of volatility, but enough choppiness up and down many times over. 70, 80, 100 points given back and then gained back just like that. So the Nifty is up on your screen. The Nifty Bank, I mean, there was a clear distinction today because the PSU banks, which had taken a break for the last many weeks now, they came back into action. Private banks took a bit of a backseat. And by the way, for the week as well, it's the opposite, right? That tells you something. Private banks are up, PSU banks are down. I mean, as specific indices. Mid caps and small caps. Actually, for the week, it might seem like small cap index, for example, is down. It's not. I mean, I looked Friday to Friday, the small cap index is up about 0.82% or so. Now, coming to individual moves here, Dr. Reddy's was a decent mover on the upside. There was ONGC, which participated. Reliance has been a strong mover throughout the course of this particular week, and that continues. SBI Life, Tata Motors and Hero MotoCorp were some of the others which did well. On the downside, you basically had IndusInd Bank, Bharti Airtel, Axis Bank, ICICI Bank and Shriram Finance, throw in a Kotak as well. These were the between 1.5% and 2.75% kind of losers today. Remember, those telecom tariff hikes came through, but there was, of course, sell the buy the rumor, sell the fact. That kind of price action, at least for today, is what we saw. Lots of single stock action in the broader market. CDSL up 20%. Bonus announcement. Will consider a bonus. CET 8% higher. Tire stocks were doing very well. JK, Apollo are some of the others. There was MGL, which was up about 6%. Wealth management firms like 361, big gains. Kalyan Jewelers was up 7%. IIFL went up 7-8% or so. Amber Enterprises, Star Health, Gulf Oil Lubricants, Nazara Technologies, where there was a CNBC-TV18 exclusive. I could go on, but this is some of the heaviest volume-led activity that we really had today. On the downside, you had Polycab, which was lower, Idea, Motherson. There was something like a D-Mart, which sold off about 4% as well. All in all, a pretty good week, even though Friday there was a little bit of pullback day on day. Back to you.
All right, Prashant, many thanks for joining us. Well, it's a watershed moment for the Indian government bonds. They've now officially entered the JP Morgan Emerging Market Bond Index. The inclusion of the Indian G-Sex will be staggered over a 10-month period with 1% increment on its index weight every month till it reaches the maximum threshold of 10%. Lata is decoding what it means for Indian sovereign bonds. Lata, a big day for the Indian bond market today.
Yes, it's a big day for the Indian bond market because Indian bonds enter the global bond indexes. It was in 1994 that India entered the equity indexes and FIIs started investing. But after 30 years, it's like $800 billion that foreign investors hold in equities. For bonds, it's a slow start. The market value of the GBI-EM index into which India has been incorporated is about $300 billion of global bonds. Now, India enters with a 10% weightage, so about $30 billion of Indian bonds will be bought eventually, not all on day one. As of June itself, June 28th, only 1% weightage has been given to Indian bonds. With every passing month, 1% will be added. And by March 2025, the entire 10% weightage becomes effective. Immediately, there isn't much movement, nor was much movement expected in the bond yields or in the currency. That's also because some of the money had already entered, and then new FPIs who are not yet exposed to India are still struggling to go through the Sebi registration process. So this is going to be a medium-term impact, and ultimately bond yields will also look at how US bond yields are moving, the RBI policy, Fed policy, upcoming budget, etc. But there is, of course, a medium-term positive in that there is a big buyer of Indian bonds. So any up move in yields will be capped because the FPIs will come and buy. There's greater market discipline that is expected because there is a big buyer across the seas. The rupee also will see a lot of flows in, but Reserve Bank is there to quell any undue volatility or appreciation of the currency. The important point, of course, is that because the rupee is stable, it is seen as the Indian bond is seen as a very attractive instrument. We are going to see other indexes also include the Bloomberg index has already included India in one of its local currency indexes. Eventually, others will include. So it's a huge medium-term positive.
All right, Lata, many thanks for joining us. After Reliance, Jio Bharti Airtel has raised tariff rates in the range of 10 to 20%. Now, the new rates will be effective from the 3rd of July. Rima is standing by with more on the tariff hikes in the telecom industry that come after almost 2 years. Rima, it was expected that Bharti Airtel will follow suit, and it's only a matter of time before Vodafone announces its hikes as well. Take us through what this means now for the telecom sector.
The first one after 2.5 years, much awaited. It started with Reliance Jio. They took the lead this time and they hiked tariffs between 12 to 25%. But immediately, Bharti Airtel followed with a 10 to 20% tariff hike. So on an average, you would say the blended tariff increase has been about 15 to 20% for the telecom operators, much anticipated and largely in line with expectations. But this time, what's also different is that unlike in the December 2021 tariff hike, postpaid tariffs have also been hiked, and Reliance Jio also looked to hike the postpaid tariffs, knowing very well that perhaps it's the competitors who benefit a lot more. You know, we've spoken a lot about this telecom tariff hike, so there are just 3 quick questions about this. One, is Reliance Jio perhaps preparing for an IPO? Because this time they've taken the lead in hiking tariffs versus Vodafone Idea in 2019 and Bharti Airtel in 2021. And if you remember, in August of I think 2019, close to about 4.5 years ago, Reliance had said that they plan to take their consumer businesses public in the next 5 years. So the consumer business would be Jio and the retail So I think the street is now questioning, is this perhaps one of the steps which will eventually lead to an IPO? The second thing is, are we now seeing some signs of 5G monetization? Because earlier 5G, unlimited 5G was available for most of the plans, but now it's going to be available only for plans which offer 2 GB and more. So in a way, 5G monetization. But also, what next, right? Because the telecom tariff increase was seen as the big trigger. So from here on, are we going to see sustained tariff hikes? A Jio IPO could be a potential trigger. A dividend from Indus Stars, a resumption of a dividend now that the health of Vodafone Idea has also improved. And even on Vodafone Idea, a capex pickup and the 5G rollout. But how do the stocks perform, right? Week to date, we've already seen big moves in stocks, particularly Reliance Industries. Bharti Airtel corrected on Friday, but still ended with a gain of about 2.5%. But look at the way Bharti Airtel has reacted, 40% up this week.
All right, Rima, many thanks. The telecom sector dialing a re-rating. Now, JSW Infra rallied over 5% to trade at a 52-week high after the company announced that its subsidiary, JSW Port Logistics, will acquire over 70% stake in Navkar Corporation. Navkar Corporation is engaged in container freight station and inland container depot operations and related activities. JSW Infra said the proposed acquisition marks the first step in its long-term vision of creating a pan-India logistics network. Shares of Ather Industries jumping nearly 3.5% after it signed a strategic supply agreement with US-based energy company Baker Hughes. The specialty chemical manufacturer will supply 6 products to Baker Hughes. All 6 will be manufactured by Ather Industries for the first time in India and will be supplied to the global locations of Baker Hughes. The initial term of the agreement is 5 years, which is extendable by 3 one-year contracts. Now, it's block deal galore on D Street. Nearly 1.25 crore shares of HCL Tech changed hands on the bourses today. The deal, worth nearly 1,800 crore rupees, took place at 1,440 rupees a share. This is a 2% discount to the stock's closing price of Thursday. However, buyers and sellers of the stake are not known just yet. Polycab shares clocked losses after 2.74% equity changed hands in a large block deal. The estimated value of the transaction is a little over 2,700 crores. The buyer and the sellers not known either. However, CNBC-TV18 had reported earlier that the company's promoters are likely to have offloaded a little over 2% of their stake via a block deal. And staying with block deals, Vijay Shankar of Kotak Investment Banking says the value of block deals has already topped $13 billion for the first half of 2024, adding that foreign promoters have sold stake worth over $6 billion so far this year. Take a look.
I think the foreign promoters selling this current year is probably in excess of $6 billion. You also have Indian promoters selling. You had Mahindra & Mahindra, Cipla, Tata Sons selling their stakes. So the domestic promoters have also monetized. And the third category are your private equity investors, right? And there have been multiple blocks, for example, in Embassy REIT, in Mankind, and so on. Total blocks this calendar year has been 13 billion. I was telling you the figure just for the foreign promoters selling. The balance $6 to $7 billion are between the Indian promoters and the private equity investors.
Well, that's the latest as far as block deals are concerned. HDFC Life Insurance has received a tax demand of 1,500 crore rupees from the Income Tax Department for the assessment year 21-22. The order also includes a demand of 592 crore rupees as interest. However, the life insurer said it will file a rectification application as the tax demand has been calculated incorrectly. The company also claimed that the tax demand should be around 1,140 crore rupees. At least one person has died after a portion of the roof at Delhi Airport Terminal 1 collapsed early this morning following heavy rains. At least 4 people have sustained injuries. The incident disrupted flight operations for several hours. Civil Aviation Minister Ram Mohan Naidu visited the site to take stock of the situation. GMR run Delhi Airport announced a compensation of 20 lakh rupees to the family of the deceased and 3 lakh rupees each to those who have been injured.
We have asked the DIAL, Delhi International Airport Limited, also is to do a verification inspection from their side. But we are not just leaving it up to themselves. The ministry, from the ministry, we have DGCA also, which underlooks the safety aspect. So they will also be supervisioning this inspection. Compensation has also been announced, 20 lakh for the deceased, and also for the injured, 3 lakhs.
The collapse, triggered by heavy rains in the Delhi NCR region, caused significant damage, with several cars stuck by falling debris in the departure zone of Terminal 1. Now, a lot of questions being raised after the incident about the state of infrastructure, at least important buildings in the national capital. Remember, the Terminal 1 was under renovation and was inaugurated recently after renovation in March this year. But Civil Aviation Minister Ram Mohan Naidu clarified today that the portion of the building where today's incident has happened was not renovated recently. He mentioned that the part of the building was opened and inaugurated last in 2009. Many questions are still unanswered, like when was the last audit done and was the building not checked for monsoon readiness. But at the moment, all we know is that the Civil Aviation Ministry is looking into the matter. The ministry has also asked for all the airports in the country with added structures outside the airports to be inspected. Now, the Delhi airport has also announced compensation of rupees 20 lakhs for the family of the deceased in today's incident and rupees 3 lakh each for the injured. Consequently, flights to and from Terminal 1 have been cancelled until further notice. The Director General of Civil Aviation, DGCA, has advised airlines to accommodate affected passengers on alternate flights or provide full refunds. Back to you.
Shivani, many thanks for joining us. Now, Delhi residents woke up to a rain-battered city today as we received record rainfall along with thunderstorms and lightning in the early hours. Incessant rain leading to severe waterlogging and massive traffic congestion in the national capital region. Multiple parts of Noida has also seen waterlogging, forcing commuters and vehicles to navigate in knee-deep water. Waterlogging also led to massive traffic jams. The Delhi police issued an advisory of traffic congestion and has also said that citizens should plan their travel accordingly. As per the Met Department, Delhi received 228 millimeters of rainfall in the 24 hours up to 8:30 a.m. this morning. This is the highest 24-hour rainfall in 88 years. The Met Department has predicted varying intensities of rain over the next 7 days. Lieutenant Governor V.K. Saxena called an emergency meeting to take stock of the current situation. The big global story: U.S. President Joe Biden and his Republican challenger Donald Trump squared off in the first presidential debate moderated by CNN. Both leaders sparred on several issues, including immigration and abortion. Leaders in the Democratic Party and fundraisers have sounded an alarm after President Biden struggled to land his lines. The CNN moderators also faced a backlash for failing to fact-check Donald Trump. Here are highlights from the first debate.
The whole country is exploding because of you.
My son was not a loser, was not a sucker. You're the sucker. You're the loser. Excuse me, with dealing with everything we have to do with, look, if we finally beat Medicare.
Thank you, President Biden. President Trump?
Well, he's right. He did beat Medicare. He beat it to death. I wasn't really going to run until I saw the horrible job he did. He's destroying our country.
He's telling you is simply not true. The fact is that there was no effort on his part to stop what was going on up in Capitol Hill. And all those people, every one of those who are convicted, deserves to be convicted. You have the morals of an alley cat.
Give you a minute, sir.
I didn't have sex with a porn star.
Well, joining us live from Washington, D.C., Iman Hafez. Iman, how are the Democrats reacting to President Biden's performance? There are reports suggesting that he could even be replaced on the ticket.
Yeah, there's outright panic in the Democratic Party this morning here in Washington, D.C., as party leaders struggle to figure out what they're going to do about this disastrous debate performance by the president last night against Donald Trump. You just played the tape of the moment where Joe Biden seemingly froze and was unable to complete his thought, looking down at the podium, trying to compose himself. Finally coming back with a nonsensical answer: we just beat Medicare. Medicare, is something that is cherished and loved by many millions of Americans, not something the Democratic Party is trying to shut down at all. So his answer just didn't make sense. It was a meandering performance. It was an incoherent performance by the President of the United States at times, fueling concerns about the 81-year-old candidate's ability to do the job going forward 4 more years. The question now for Democrats is, what do they do about that? There's no clear answer. They don't have their convention until August, where they officially nominate a candidate to run for president of the United States in 2024. So in theory, they could nominate somebody other than Joe Biden. That said, practically, that is a very, very difficult thing to do, and politically, it's not clear who the alternate candidate would be. Any kind of a free-for-all in the Democratic Party for an up-for-grabs nomination could really divide the party over issues like Israel and Gaza, other issues that are touch points among liberals in the United States. It's not clear that any candidate would emerge successfully unscathed from that potentially ferocious debate. So for Democrats, it's an all-out panic. Republicans are feeling very good about their candidate this morning. Donald Trump, of course, his comments last night were studded with mistruths and untruths. Yet he emerged sort of unscathed because all of the focus this morning is really going to be on the President of the United States and whether he can continue his candidacy. We'll wait and see now as the Biden campaign digests what happened last night. We'll wait and see whether that indicates there's any change of course here in the Democratic Party. Not clear yet where all this is going to go. Back over to you.
Iman, many thanks for joining us. That is the latest there as far as the U.S. presidential race is concerned. It's been a debacle for Joe Biden there in the first debate up against Donald Trump, and panic, as Iman was pointing out, in the Democratic Party. On that note, it is time for us to head into a break, but elections just 3 months away. Maharashtra's government announces a direct cash transfer of 1,500 rupees a month to all women in its interim budget. That and more when we return.
When it comes to AI, how do we not share our data with somebody else? And what kind of internal tools and technologies do we need to make this all happen?
Speaking of startups and high tech, the Wall Street Journal has a front page today on comparing what you did with Cisco and what's happening at NVIDIA today.
Yes.
And Cisco was in 2000 the most valued company in the world on the back of the big transition that we saw then with the internet. And that's what we're seeing happen with NVIDIA becoming the most valued company. As people draw these comparisons, what's going through your mind?
Well, first of all, it shows you that technology moved from something that the techies did to impacting every one of our lives. So with the internet, changing the way you work, live, learn, and play, when I said that in '93, most people said, no, it's techies talking. It clearly did. As you watch, there's new generations of leaders about every 10 or 20 years. And I think it's very healthy. So it's Cisco for the internet, then about 4 or 5 players for the cloud, and now NVIDIA is clearly leading in terms of AI. And they're kind of like the indication of the infrastructure of AI. If you want to know how AI is doing, look at how fast NVIDIA is growing. And it is growing great. What is it, 540% in the last 2 years. Today, if you're not into AI, and if you haven't got a good AI strategy well in implementation, investors won't invest in your company, even if you're a manufacturing company or a semiconductor company, etc. The pace of change, however, is different. It's about 10 times faster and can be 10 times bigger than what we saw just a few decades ago.
So, you've been a big champion and a big believer in the India story, but there's a long distance still to go to fully realize the potential. The NEET paper leak controversy disrupted proceedings in both houses of parliament. Lok Sabha has been adjourned till the 1st of July as opposition MPs continue to demand a discussion on the NEET issue and irregularities in exams conducted by the National Testing Agency. The Congress party moved an adjournment motion in both houses. The Congress alleges that the mics of Rahul Gandhi and Mallikarjun Kharge were switched off when they rose from their seats to speak on the NEET issue. Congress leader Rahul Gandhi urged the Prime Minister to join the discussion on the matter as it concerns the youth of the country. Parliamentary Affairs Minister Kiran Rijiju said the government has made it clear it will give detailed information on the issue and that the government is always ready for discussion. Also slammed the Congress party for stalling parliament proceedings.
आज तो जब मैं लोकसभा में था, जब प्रतिपक्ष उस विषय पे अपने बातों पे रहे,
स्पीकर महोदय ने कहा कि तब आप चर्चा नहीं चाहते हो। हम तो आपको चर्चा करने के लिए अवसर दे रहे हैं। सरकार अपना पक्ष रखने के लिए प्रस्तुत है। जब आप चर्चा से भागते हो, सरकार अपना पक्ष रखने के लिए प्रस्तुत है, तो कन्फ्यूजन किस बात की है? आगे परीक्षा की संस्कार और सुधार के लिए एक विश्वसनीय उच्च स्तरीय समिति भी बनाई दी गई राधाकृष्णन जी के नेतृत्व में, इसरो की पूर्व चेयरमैन की अध्यक्षता में। जो परीक्षाओं की विसंगति आई है, जल्द ही उन लोगों की उस सारे परीक्षा की डेट भी एनटीए घोषित कर देगा।
हिंदुस्तान के जो स्टूडेंट्स हैं उनको हम जॉइंट मैसेज देना चाहते थे। हाँ दें, आप सुनिए जॉइंट मैसेज देना चाहते थे ऑपोजिशन और सरकार के साइड से कि इस मुद्दे को हम ज़रूरी मानते हैं और इसीलिए हमने सोचा था कि आज स्टूडेंट्स की रिस्पेक्ट करने के लिए हम नीट पर डिस्कशन करें। ठीक है, आप डेडिकेटेड डिस्कशन। अब बात यह है कि दो फोर्सेस हैं, एक तरफ
नहीं माने okay.
Well, that's the latest from Parliament. With elections just 3 months away, the Maharashtra government has announced a direct cash transfer of 1,500 rupees a month for all women. The state's finance minister Ajit Pawar tabled the interim budget today. The move comes after a disappointing performance by the ruling coalition in the Lok Sabha elections. Rachna Dhanrajani is here with the key highlights from the Maharashtra budget. Rachna.
Deputy Chief Minister Ajit Pawar, who also looks after the finance portfolio for the state, presented the interim budget in the State Assembly today. Interim because the state goes for election later this year. And that led to a slew of SOPs being announced. These include the Maazi Ladki Bahin scheme, whereby women aged between 21 and 60 will receive a monthly stipend of 1,500 rupees. This initiative alone is expected to cost 46,000 crore rupees annually. Along with this, a provision for 3 free gas cylinders per year has also been announced. Ajit Pawar also said that the Unity Mall project will help self-help groups with a goal to make 25 lakh women become lakhpatis. The budget also allocated funds to establish fast-track crime courts focused on crimes against women. Now, Maharashtra heavily relies on its farmers, and so for 44 lakh farmers, the budget includes an electricity bill waiver to an expenditure of 14,000 crore rupees. State government will also provide rupees 5,000 per hectare bonus to all farmers for their crops on cotton and soybean in Maharashtra. Along with this, a cut in taxes on fuel prices has also been announced, but it's only for the Mumbai region. Tax on diesel will be decreased from 24% to 21%, bringing the price effectively down by 2 rupees per litre. And for petrol, the tax will be down from 26% to 25%, bringing the price down by 65 paise in the total price.
All right, Rachna, many thanks for joining us. Now, ride-hailing app Ola is taking a third shot at grocery delivery services after its first 2 attempts did not lead to fruitful results. This time, however, Ola is banking on ONDC, the government's e-commerce network, for a smoother ride. Shilpa standing by now. Shilpa, third time a charm for Ola?
Well, that's the hope for Ola, which is set to enter the grocery delivery in the space in the next few years. But this time it's going to be via the Open Network Digital Commerce, or the ONDC. And in fact, it's not just grocery. We're given to understand that Ola is also eyeing other complementary categories like fashion, also a play that might come soon. Now, Ola, remember, joined the ONDC network late last year with the launch of food delivery. And it's also currently offering hyperlocal logistics services also, something which is doing well and it's looking at expanding significantly. Now, on the food delivery front too, it has been doing quite well. It's been processing about 15 to 20,000 orders each day. Now remember, like you said, this is not the first attempt for Ola at grocery. It first attempted to launch grocery delivery back in 2015 in Bengaluru, soon after it launched food delivery there, and it was to leverage its network of cabs. But this shut down within 9 months along with the food delivery service as well. It attempted a second time with Ola Dash in 2021 in Bengaluru and Bombay, but within a year that also shut down. Its launch now via ONDC comes at a time where grocery delivery via quick commerce has really taken off. But on ONDC too, grocery has been doing well. ONDC says that about 20% of the non-mobility orders that are captured on ONDC are grocery at the moment. And Ola will also now compete with certain existing players like MyStore, OTP, and also Paytm Chief's Pi platforms, which is also currently offering grocery on the buyer side. Now, without directly confirming the news, Ola in a statement said that its partnership with ONDC is growing strong and it has seen 10x growth in the last few months, and it is now looking to leverage ONDC to explore and unlock opportunities for the next phase of growth. Back to you.
All right, Shilpa, appreciate you joining us. With that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC-TV18. Stay tuned. We've got plenty more lined up for you. And this relationship, where do you believe it's being constrained today?
As the largest democracy, watching your elections just occurred, and congratulations to Prime Minister Modi. It was a smooth election. There was no issues in the market, and I think that's a model for the rest of the world's democracy to follow. And now you're seeing the country lead in innovation. My challenge is don't be satisfied with just what we're doing. We've got to dream bigger in terms of the overall approach. So this is what I really think about in terms of where we are today. I think we've got to look at where we go. I do think it will be the century for India. I think it will be also the decade for India.
The latest challenge that you're up against is the US government looking at whether, again, there is a violation of policy and whether there are sort of fees that are being collected without consent or, explicit consent and so on and so forth. I mean, how do you deal with something like that?
Well, you first go back to the principles and the facts, and the reality is that it was the government's case is misguided, and so we will fight it and we'll refute it in court. I think if you
focus, ideate, innovate, enable. The Policy Bazaar Insurance Show.
For someone who's been covering the insurance sector for the last many years, I can vouch that the emphasis on taking insurance to each individual, to each home, to each family, and to each business has never been more. The insurance regulator, with bringing principle-based regulations, has simplified various operational requirements. At the same time, insurance companies have responded positively. It is this collaboration which has made India the 9th largest life insurance and 14th largest general insurance market in the world. Also, a market which has one of the best and still improving claim settlement ratio. But the protection gap in India still stands at 97%. 65% of the health expenses in India still happen out of pocket. More than 50% of the vehicles on the road are still uninsured. Insurance penetration in India is just at 4% versus global average of 7%. Insurance density in India is still at about $98, whereas the global average is $853. Clearly, there's a long way to go, and the insurance regulator has introduced the industry with the destination at the end of this long way. Insurance for all by 2047. Hello and welcome everyone. I am Yash Jain, and together with Policy Bazaar, we at CNBC-TV18 bring you the Policy Bazaar Insurance Show. It is where we break down the complicated world of insurance for you, our policy holders. I am joined today by Sarabveer Singh, the Joint Group CEO at PB Fintech, Vibha Padalkar, the Managing Director and CEO at HDFC Life Insurance, and Nilesh Sathe, the former member Life Insurance at IRDAI. Nilesh sir, to start from the regulatory corner and see the industry through that lens, the regulator, of course, has spoken about insurance for all by 2047. What are some of the things which are low-hanging fruits for the industry to achieve this target? And since it's a very ambitious target, what outcome do you think, will the industry achieve?
The first thing is target is a must. Second is it possible? I think yes, it is possible. Why it is possible? GDP is going up. Per capita income is increasing. After the basic needs of roti, kapda, makan, as we say, they get satisfied. The next need is of insurance. And when do you buy insurance? Once you come up to that level, when you can save after spending on roti, kapda, makan. And when per capita income will increase, obviously everybody will think of insurance first. Second is the PMJJBY type of schemes, where at a very nominal premium of 436 rupees, you get a cover of 2 lakhs. More and more people, because everybody has got a bank account, and going forward, everybody will have a bank account. So insurance for all is not just something which is not possible. It is definitely possible, it is doable, and everybody in the sector, all stakeholders have to join hands, right from the government, to see that this is achieved.
But Saravir, exactly where these policies try to target. For someone like Policy Bazaar who has 8 crore registered customers, how do you take the idea of insurance to these people who are completely right now out of that financial literacy band? And more importantly, how do you introduce the right products to them? Because the start is going to be very important.
So I think there are 2 points. One is that amongst the people who are in the financially, let's say, literate band, there is a lot of opportunity to get them on board as well. So I think that is the part where awareness and more, understanding of insurance is needed, so that they can understand that this is something which is there to protect you. Because still there is a concern around whether I am sort of so-called wasting my money on something which may or may not be used, which is correct. But I think the first thing is that of the people who are financially literate and financially capable, we need to get them across the line first. The second thing is the next set of people that you said, where perhaps the financial literacy or income may be lower. There, I think the good news is that even they are now digitally, at least on digital platforms. So they are there. They are looking over there for information on various things. And if we can take these schemes which exist, and I believe there the government will always have a larger role to play than perhaps private industry, where we can take these schemes and popularize them and make sure that people are aware where to buy this scheme, how much does it cost, how will the claim be administered, etc.
One of the largest life insurance companies, multiple distribution channels. My question to you is, how do you convince people term insurance is the first thing that you should look at when it comes to life insurance?
The industry, the growth in term is faster in most years than growth in overall growth of the sector, which means that as a percentage, we're going up. 10 years ago, it was about 1%, if I was charitable. I think about 0.8% of APE. Today, it is comfortably 8-9%, just retail. And then if you add other forms, group and so on in terms of term and receive premium, it is as high as about 45% on receive premium basis. So we are moving the needle. Yes, it appears slow because if you look at premium, I have to sell maybe 2 or 2.5 policies of term to get one saving. So from NOP, number of policies basis, we have made significant inroads, and I think the acceleration will happen. Also, we haven't wasted a good pandemic, wherein no longer are people generally asking, why do I need term, which they used to ask earlier. Now coming to how much do I need, there are various methods of doing it. But I would tell people, let us not, over-intellectualize. Get something more than nothing. Get something more than 10 times cover that today only a savings policy will give you. Let's move beyond that. But I think we're some distance away from getting stuck in just the complexity of it. It's fairly simple. I think we should, more is better.
Saravir, according to you, do you think we need more standardized products?
As far as the standard products are concerned, I personally believe that the products that we have today are fairly straightforward, especially in term insurance, because as you know, it's a very, very simple contract that if you are not there, then your nominee will get paid that sum of money. So I think the product is very straightforward. It's very easily available. Again, as ma'am said, there is a return of premium variant, there is a no return of premium variant. So you can buy the product. The riders, etc., unfortunately, I think come into play only because sometimes the selling system is trying to increase the ticket size or whatever. So my suggestion to everyone would be that buy the standard product first. The riders also actually are relatively simple to understand if you really want to, but I think there's no need to engage with them. The basic product, if you buy, you are in great shape. And I personally feel that right now, all companies are offering a plain vanilla term product, and that is widely available. And of course, you can compare on Policy Bazaar and you can see which variants are there.
Satya sir, to speak about the testimony of it, the claims. As you see the industry, are you satisfied with the kind of claim mechanism which currently exists?
Claim is one thing for which a person buys insurance, maybe a maturity claim or a death claim. So one gets satisfied if it is a seamless journey.
Absolutely.
Till he gets a claim. And from that point of view, the existing mechanism that insurance companies have is fairly good. Of course, improvement can be there any number of times. A couple of things which insurance companies should do is, what happens when maturity comes, many of the policies are paid up and the claims remain outstanding in respect of these paid up policies, because there is no communication between the policyholders who have discontinued paying premiums further for the last 5, 6, 10 years. So intermittently, insurance companies should get in touch with them even if they have stopped premium. So this is one thing which, and with digitalization, more and more insurance companies are doing it, and they should do it.
Vibha, I want to understand from you something that all life insurance companies, all general insurance companies have been doing, targeting a state, talking to the authorities there and increasing penetration one state at a time. You've been doing it with some of the big states. What has been your experience?
In one line, I would say first you create awareness, you create accessibility, and you have affordability. If with these 3 A's, there is no doubt that people on both ends of the spectrum and of course the missing middle will have to be solutioned individually to be able to give bite-sized insurance, easy insurance, group insurance, so that we all get towards insurance for all by 2047. A partnership between insurers, the government and the regulator to see how we can penetrate it. So the idea is simple product through village level entrepreneur, go to a Gram Panchayat level. That's what has been charted out and all of us are working towards it.
Another model which everybody has a lot of expectations out of is the Bima Trinity. Bima Sugam, Bima Vahak and Bima Vistar. I want to understand from you, what does this model in a very short explanation intends to achieve?
Bima Sugam is a platform which is very much required, because you will be in a position to find products of all insurance companies in one place. But it's a digital platform. Now what happens, if it is not as robust as it is expected right from the beginning, then who are going to onboard that? Obviously the youngsters like you, not people of my age. And about the youngsters, I tell you, they have very low level of patience. If at all I log in and find, oh, the page is not moving forward, or there is some glitch, I will not only give up, I will not come back to that platform again at all in my life. So initially, when you come out with that platform, it has to be properly built, there should not be any glitch, and it should be seamless transaction for the youngsters, because mainly youngsters are going to use that platform.
Correct.
Just think of, the digital platform was made available as direct by mutual fund industry almost 12 years before. Even today, there are only less than 10% of the people who buy insurance on that digital platform. So there is nothing to worry about. The other 2 initiatives of IRDA, really good, but time will tell to what extent they have been successful. Because Gram Panchayat, now not many are still aware that what is their role, what compensation they will get, who will be in a position. Now women have been asked to be involved in this.
Correct.
To what extent? IRDA wants minimum SSC for getting IRDA license for selling insurance. Now in small villages, whether there are women today who are qualified to that and who are interested in doing this. So a lot of questions, but let it stabilize. See, let us not keep on criticizing the new initiatives. Let us try to find out if they are useful, they can be implemented. If you are going to get benefit out of it, well and good. If you find maybe after 5 years or so, no, this initiative has failed, withdraw it. What is wrong in that? But the ultimate aim has to be, by 2047, everybody should have insurance.
One big section which remains to be a challenge for the industry, for the ecosystem, is the missing middle. There is one section which gets covered through the employers. There's one section which can afford insurance on its own. In this entire tussle, the missing middle misses out. I want to understand from you, how do we place this piece of puzzle at its right place? And what will be the role of insurance companies like yours in addressing the missing middle, which is a large section in that sense?
It's a misnomer that these people are very different. They are very similar in terms of their needs. The challenge has been, first of all, on distribution, how to get to them in an economic way. Now there are many vehicles in terms of small finance banks, MFIs, RRBs, many others, state level cooperative banks. Most of us are tied up with several of them because that way you can piggyback on their distribution muscle, cut your teeth, learn a little bit and then open your own branches. We have already been there and done it and we started opening branches. For example, out of our branches we opened last year, 90% of the branches were in tier 2 and 3. If I were to look at our parent HDFC Bank and largest distributor for us, out of their branches, 4,000 branches are catering to the same geographies, the tier 2 and 3 or the missing middle.
Correct.
If I were to look at the agents we added last year, about 85,000 agents, 75% of the agents we added are in tier 2 and 3. You can't just lift and shift. So it has to be customized to various things, their desires, what will work there, what kind of underwriting you're expecting, and so on.
Well, those are some words of wisdom, not from years, but decades of experience together on this panel. On that note, we'll take a very short break, but stay tuned because on the other side, we discuss the all-important topic of health insurance for India.
The Policy Bazaar Insurance Show.
When you think about what Adobe has pioneered, the subscription economy and the digital economy is everywhere. I think when I try and read your content, it's probably going to be available through a paywall as a subscription. We have open and flexible policies where some people can pay for it up front and get a discount and others pay for it on a month-to-month. So having flexibility makes sense. But, you know, it's something that we will address, but we certainly believe that we have been flexible. You know, we offer customer choice and we're completely transparent about this. You know, when you subscribe to the plan, it says annual bill monthly. And it's an annual plan. And so, but at the end of the day, for us, what really motivates us is the fact that we're impacting and innovating. And I think if people didn't feel like we were innovating, they wouldn't be subscribing to our services. And that's what we have to keep focusing on. Well, first, I'm really proud of what our team has done. When you think about the content authenticity initiative, something that we pioneered, over 3,000 companies have now signed up with it. While people understand that AI has all this power, I think it's fair to say there's some heightened sensitivity around what does this mean to me? And so, you know, that I wouldn't call it a trust deficit as much as questions about what that is. And a company like Adobe has a leadership role that we need to play, not just for ourselves with our customers, but for the industry at large about our terms of use. I think there were some questions, and legally everybody who looked at that understood that, you know, the content belongs to them. We're not training our models based on that. But I think perhaps in English we could have done a simpler job of clarifying it. So, which we have. And so, you know, we've rolled it out. We are creator friendly. I think the product innovation that we're delivering, Shireen, it always, you know, warms your heart when you look at the amount of innovation that we're delivering. And I think we've talked about this in the past. AI is going to be this incredibly enabling technology that allows us to, you know, target a broader set of customers. And so I guess it's the era of AI. Now we can create campaigns, we can create content, we can address the content supply chain. So I'm completely convinced that AI, while I acknowledge it'll be disruptive, at the end of the day, it's going to be a massive enabler and a tailwind.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's farm.
The Policy Bazaar Insurance Show.
Welcome back to the Policy Bazaar Insurance Show. A health crisis in the family is one of the most overwhelming challenges that a person can face. What's worst, if that person does not have a sufficient health insurance cover or does not have a health insurance cover at all. Despite this, 65% of health expenses in India still happen out of pocket. For people who don't have a health cover, what are you waiting for? And for people who have one, are you sufficiently covered? To discuss this space, we continue our conversation with Sarabveer Singh, the Joint Group CEO at PB Fintech, and we are also joined by Anuj Tyagi, the Managing Director at HDFC Ergo. Anuj, to start with you, there is this growing mentality of people, assuming or thinking that if I buy a health insurance policy, it is as good as anticipating something will go wrong with my health. Or there is another equally damaging mentality where people think that I have enough resources that I've made in my life to take care of all my health expenses. To start with, please break this myth for our viewers, why health insurance, despite anything that you have in your hands, is the most important thing.
There is a larger myth across the insurance products. Most of the insurance products are seen as an expense item. These are not seen as a risk mitigation tool. So most of us think that either I don't need it or I'll buy it when I need it. Right. Now, both the approaches are extremely faulty. And before I try and bust the myth, let me just give you some data points. And it would seem like a fear appeal, but we are discussing a larger topic which affects the society today. India is unfortunately the diabetes capital of the country. 1 in 4 cardiovascular deaths in the world are happening in India. We've seen COVID, and God forbid the COVID, I wish it doesn't happen to the humanity, but something else will come. So we today live in extremely uncertain times. We do spend on our gym, we do spend on our diets, we do spend on ensuring that we stay healthy. Why? Because as human beings, we are trying to minimize the uncertainty, we are trying to minimize the ambiguity. Insurance exactly does this. So even if I think that I have the sufficient financial wherewithal to handle any eventuality, first of all, that anybody who makes this statement keeping today in perspective.
Correct.
I am 50. Even if everything goes right with me, can I say I'll never see hospitalization? The chances are I will see in hospitalization. There is a higher probability of me seeing in hospitalization when I turn 80. Do I have the financial means to take care of my medical needs when I turn 80? So people need to keep in perspective, A, insurance and specifically health insurance minimizes the uncertainty. It keeps us it brings us the cocoon where we are certain that in case something happens, there is an insurance product that I have with me. And it brings in more certainty if you buy appropriately. As you said, even if we buy it, are we buying appropriate? So that's the angle through which I look at insurance, health insurance specifically. If we want financial certainty, if we want to minimize ambiguity in our life, I think health insurance is a must.
What can a platform like Policybazaar do to ensure that the trust remains important and it strengthens further at the time of claims?
Hospitalized, the insurance company should pay money for that hospitalization. It's a very simple promise from their perspective. Now, unfortunately, real life is a little bit more complicated. You have to ensure that you have declared all your pre-existing diseases, any procedures that have happened to you, any medicines that you are taking, etc. So I think one of the first things that we do is to make sure that we understand what is the position of the person, what diseases, what medicines, etc., if any they have, make sure those are declared, make sure that the right product offered to them and finally sold to them. Now, minute you do that, the good news is that if you have bought the right product, you have declared everything, then the chances of getting a claim, especially if you buy from any, I would say, of the insurance companies in India, is very, very high. Because actually there is no insurance company, if you think about it logically, there is no insurance company which is actually set out to say that I don't want to pay claims. Now, the second thing is, if unfortunately something were to happen, let's say there is some confusion, the insurance company is not, is not clear about what the case is, we intervene on behalf of the customer and we explain. We try to explain, getting all three sides together, and we try to explain what is the perspective of both sides, what has happened, why we should, how we should look at it.
Having an insurance outside your workplace, how big of a risk do you think this can be for any individual, and what should be the right way to look at this particular approach?
People can buy policies with deductible as long as they're working in, as long as they are in employment. Once they leave employment, you can bring the deductible down to 0 and that becomes your base cover. The other thing people forget is that new policies will typically have a pre-existing disease exclusion, 2 years, 3 years, depending on the policy. So the earlier you buy, the better it is. If I buy my policy at 45, for 3 years I'll have a pre-existing diseases exclusion. So I think this is a topic which is a burning topic.
Saravir, I want to come to you for the last word, and I hope this is a positive one. You've come out with a report which gives a ground check, a reality check on what has been happening in the country with respect to claims, the kind of responses. Tell us something, some key takeaways out of that report.
So Yash, we spoke to over 2,000 consumers who have taken health claims or who were eligible for a health claim across the country. And what we found was that 94% of them got their health claim and they were very happy with the whole thing. So yes, while there is sometimes, there is a lot of discourse, especially on social media, where a few instances get blown out of proportion, but here 94% people were happy. The second finding from this report is that actually people, if they get a cashless claim, then their happiness quotient or their happiness goes to 97-98%. And then of course, it's a little lower on the reimbursement side. And I think that's where the regulator and the industry, as you know, are moving to cashless everywhere. So this is one of the initiatives that is going on in the industry to have cashless claims everywhere. And I think that is borne out by the data as well, that more you can make cashless, the better off you'll be. So I'll come back to the same point that I started with, that from a customer's or a consumer's perspective, insurance is actually very simple. I pay a premium. If there is a problem, I get a claim. And the closer that we can get to it, I think the better off we'll be. The good news is that we are actually quite close to it. I think it is incumbent upon us and the industry to talk more about this. I think this statistic of 94, 97, I think these are the kind of numbers which need to be discussed far more and positive use cases brought out. And I think that will really help increase awareness. All of us need health insurance, and hopefully all of you who are listening will go out and buy health insurance if you already don't have it.
Well, on that positive note, we come to an end of today's episode. Thank you so much, Saravir. Thank you so much, Anuj, for quite literally, literating our people, our target audience on something which is so important. But with that, it's an end to the first episode of the Policy Bazaar Insurance Show. The success of insurance for all by 2047, lies on, of course, the regulators' policies, but also on the initiatives that life insurance companies will take and your awareness. Remember, the right time to buy insurance was always yesterday. See you in our next episode, and till then, stay insured, stay protected.
The Policy Bazaar Insurance Show. Focus, ideate, innovate, enable.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global
team.
country is exploding because of you.
My son was not a loser, was not a sucker. You're the sucker. You're the loser. Excuse me, with dealing with everything we have to do with, look, if we finally beat Medicare.
Thank you, President Biden. President Trump?
Well, he's right. He did beat Medicare. He beat it to death. I wasn't really going to run until I saw the horrible job he did. He's destroying our country.
You have the morals of an alley cat.
Give you a minute, sir.
I didn't have sex with a porn star.
Hello and welcome to Global Eye. I'm Parikshit Luthra. The big global story: US President Joe Biden and his Republican challenger Donald Trump squared off in the first presidential debate moderated by CNN. Both leaders sparred on several issues, including immigration and abortion. Leaders in the Democratic Party and fundraisers have sounded the alarm after President Biden struggled to land his lines. The CNN moderators also faced a backlash for failing to fact-check Donald Trump. In the lead-up to the debate, polls showed Trump and Biden in a tight race, though the Republican appeared to be edging ahead. We're now joined by Ambassador Navteej Sarna, former Indian envoy to the United States, and Sean Trent, senior elections analyst for Real Clear Politics. Thank you very much, gentlemen, for joining us right now. Ambassador Sarna, if I were to ask you, clearly President Biden was struggling there. Many have described his performance as disastrous. Do you think there will be some sort of hard thinking within the Democrat camp now with regard to their prospects in the election?
Well, thank you, Parikshit. I think you're definitely right. It was a very tough night out for President Biden, and he has come out second best, honestly speaking. I think if some hard thinking may take time to evolve, but certainly there is increased anxiety, almost panic in the Democratic ranks, that can he really be the president for another 4 years? Is he the right candidate? I mean, this debate was President Biden's idea, frankly, and he wanted it to be, and his campaign wanted it to be, a critical moment in which they could take up President Trump on substantive issues and make very clear to their audience that here is a clear choice of who you want. And their target was really the undecided voter or the Democrat who is still struggling to make up his mind about President Biden, or to simply get people off the couch, as they say. Now, I doubt that this debate has done anything to do that. So there is going to be some amount of soul searching, some amount of thinking amongst the top ranks of the Dems, and as well as past presidents, I would say people like President Obama and President Clinton, to see, is this the right man? It may be too late to change, but certainly this is going to be a thought.
Right. Sean, if we look at all the polls from yesterday, the latest polls after the presidential debate, they all show almost a 4 to 7 to 10 point lead for Donald Trump. How much of an impact does the first presidential debate have on a candidate's campaign?
Well, I think you have to look at it two ways. The first is, what kind of an impact does it have in terms of what President Biden needed? President Biden needed a reset in this debate. He, as you say, he's trailing in most of the polls. He's trailing in the polls in the Electoral College. And so what he needed was to kind of hit the reset button, say, okay, the campaign starts today. Everything you've heard about me is wrong. I'm tanned, rested, and ready, as the saying in the States goes, and I can be your president for the next 4 years. And that just didn't happen last night. And I feel comfortable saying that because Republicans and Democrats agree, which almost never happens these days in America, that didn't happen. The big question now is, do things go in reverse? Do things actually get worse for the president, which is not something he can afford right now? Time, we'll have to see over time, but this was not a reassuring performance for swing state voters. Now, I will say, and this is something you heard come out of Democrats' mouths yesterday, and I think it's valuable, is that in a Senate campaign in America last cycle, John Fetterman, who had suffered a stroke, had a similarly disastrous debate performance in the swing state of Pennsylvania and ended up winning by 5 points. There was some sympathy for him among voters for how he performed. It's possible that President Biden will gain some of that sympathy, or people won't like the way that President Trump came off. But that is not what the thinking is among professionals today. I think it's a bit of wishful thinking, but it's a possibility we have to keep in mind over the next few days.
Right. That indeed is an important point. You have to see the sympathy vote as well. Ambassador Sarna, if I were to come to you, now, when it comes to Democrats changing heart, it's very difficult, we believe, and it can only take place if President Biden decides to step aside himself and say that somebody else should be the Democrat nominee. Is that correct? And what could possibly lead to that? Do you think senior Democrats would have to nudge President Biden?
Well, you're right that it is difficult to go into reverse gear at this moment in terms of choice of candidate. And essentially, it can only happen if Joe Biden himself decides that, no, it's wrong to carry on as the presidential candidate and withdraws. And then, of course, there will be a lot of chaos, the Democratic convention. But until then, until he says so, I think it's not more than anything but wishful thinking and anxiety attacks. He did say immediately after the debate yesterday that let's go on and see you at the next one, which means that he had already rejected, for the moment at least, the idea of giving up. It's quite possible that you might see senior Democrats going up to him and passing the messages that, don't you really think so? But if he does, as I said, there would have to be, it would have to be possibly before the Democratic convention, through the roll call when it happens, or at the Democratic convention, because the state primaries have already been completed. And the candidates who are committed to Mr. Biden are committed to support him at the Democratic convention in Chicago. So it is going to be difficult. And it won't even get off the ground unless he decides that he doesn't want to go ahead.
Right. Sean, when we speak about Trump's performance, President Biden said that if Trump gets elected, this would be the first time when a convicted felon would be taking office. How do you think Donald Trump performed as a presidential candidate during the debate? There were a lot of falsehoods. Where all did you think he scored? And does he have a strong chance to continue being the Republican nominee right up till November?
Well, I'll take your second question first, which is that Donald Trump is going to be the Republican nominee. He has an overwhelmingly high approval rating within the Republican Party. The Republican Party is convinced that the convictions against him are politically motivated. And so there's just no taste in the Republican Party for abandoning him as a candidate. Now, as to his performance last night, I thought on the substance he wasn't particularly good, particularly as the night wore on. He had some good answers at the beginning of the debate, but you could see him get tired. Donald Trump is not the candidate he was 4 or 8 years ago. He has, again, in American parlance, lost a few steps as well. The issue is, though, that he just exudes energy. And for most casual voters, it's not so much about the substance. Most voters were watching that debate maybe in the background. They were talking to friends. They were cleaning up dinner. If you just watch that debate with the sound off, which is the equivalent of how a lot of voters interpret these debates, Biden was standing there at times with his mouth open. He just looked old and tired, and Trump looked full of energy. He's not. He's 78 years old, and he has missteps and everything else. But he just looked fully in control of himself, and that is the main thing he had going for him. Yes, Donald Trump lied a lot, but Donald Trump has been lying a lot in presidential runs for almost a decade now. That's built into voters' perceptions of him. It's not something that I particularly understand or approve of, but for whatever reason, you have to be honest with yourself. Among most voters right now, it doesn't seem to be affecting how they interpret his presidential run.
Right. Ambassador Sarna, if I were to come back to you, in terms of changes in key policy, vis-a-vis Russia, vis-a-vis Israel, vis-a-vis the global economy and relations with countries like India, how much could this drastically change with the Trump Republican presidency?
Well, I think the foreign policy aspect of it was more than one would have expected, but still it did not dominate the debate. I think the one area on which there is a distinct difference is, of course, Russia, NATO, Europe. With Biden being in favor of a more, pushing America's global standing, of working with allies, of being a very strong supporter for Ukraine. And Donald Trump, if he were to be president, expected to be, again, isolationist, bringing NATO to book in terms of payments, etc. And he has already said it, that, he would settle the war while he was president designate. That means before he was inaugurated on January 20 next year. Now, with what magic wand he is going to do that, he has not yet revealed. As far as Israel-Gaza conflict is concerned, I think the two people have differed less. He, in fact, was critical of Biden being a bit soft, in terms of, support to Israel and sort of stopping some of the ammunitions. And he at one stage, he called him a Palestinian and a bad Palestinian at that. Now, this shows that, the fundamentals of Middle East policy are going to remain confused, are going to remain transactional. I don't think he didn't come out straight in favor of a Palestinian state or even a two-state solution. So I wouldn't hold out much hope for a sudden, very bright, visionary policy on the Middle East. And surprisingly, China did not come out much in the debate, except almost in passing. Again, perhaps because on China, there is very little daylight between Biden and Donald Trump. In fact, Biden has carried on what Trump started on China and ratcheted it up in some aspects, particularly in high-tech trade and so on. So let's see. I think foreign policy will evolve as the campaigns go on, as the debate goes on, as the situations on the ground go on. But I think one thing that will suffer if Trump would come would be the transatlantic relationships, with the support to Ukraine, and he will certainly have a more friendly attitude towards President Putin, with all the implications that carries.
Right. Important points there, Ambassador Sarna. Now, coming to you, Sean, as someone who has been looking and analyzing election surveys, polls over many years now, what are the issues which are critical to voters in this run-up to the election in November? In the last 3 to 4 months, which are the issues which really matter? Is it the personality of the candidate? Is it inflation? Is it jobs, the state of the economy, immigration?
It's interesting, and I'm going to sound like I'm giving all kinds of bad news for Joe Biden here, and I kind of am, because the situation was not good to start with. But if you ask Democrats what the most important issues are to them, they will list off abortion rights. Our Supreme Court made it possible for states to make abortion illegal last 2 years ago, and that's been a big campaign issue. But they also will list democracy, and those are the themes that President Biden has been pounding. If you ask Republicans what's important to them, they will list immigration, inflation. Our inflation rate has come down, and in an international context is quite good, but prices are still quite a bit higher here than they were at the beginning of President Biden's terms. And they will list the economy. The big thing, the problem Joe Biden has at an issue level is that independents as well list immigration, inflation, and the economy. So you have a situation where the voters who decide this election going into this debate were already open to Republican messaging on what the issues of the day were. And that's why it was so important for Joe Biden to hit the reset button. Again, this is something that astounds me, but it has come up in multiple surveys. If you ask people whether President Joe Biden's presidency has been a success, somewhere around 40% of Americans will say yes. If you ask Americans now whether President Trump's first term was a success, that number is up above 50%. These are just the cold numbers that we are getting. And so it just shows that President Biden was in a tough spot going into this debate. He needs to change the dynamic and change what the conversations in American households were. He'll have other opportunities. There'll be a second debate. There'll be the convention. So, hope for him is not lost. But this debate really was a huge missed opportunity on a campaign playing field that right now clearly favors former President Donald Trump.
All right, we've run out of time, but Ambassador Sarna, Sean Trent, thank you very much for joining us on the program. Interesting times ahead as far as the election in America goes, and we'll keep out for all the big developments. Time for a short break here on Global Eye, but don't go anywhere. The UN is holding a two-day conference of global envoys in Afghanistan in Doha. This will be the first time the Taliban will be attending the conference. We will discuss the possibility of Taliban's recognition, impact on India with Anju Gupta, security analyst and former DGP of Uttar Pradesh on the other side.
Milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high. We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBCTV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour.
Welcome back. You are watching Global Eye. The United Nations is holding a 2-day conference of global envoys in Afghanistan in Doha. Taliban government is sending its officials to Qatar to meet top UN officials and envoys from up to 25 countries. This will be the first time Taliban will be participating in the talks since it took charge of the country in August 2021, following the United States' withdrawal of its troops after 20 years of war. The UN Political Affairs Chief, Rosemary DiCarlo, has clarified that the meeting is not about recognition of Taliban, but about engaging with them. The meeting will be focusing on the way forward for Afghanistan and will also have sessions on private sector business and counter-narcotics. The meeting will also have an impact on India's equation with Afghanistan and how it will impact its security structure. The United Nations is being widely criticized for engaging with Taliban to discuss the future of the country without a single Afghan woman representative. The UN president responded to the criticism saying, and I quote, "I would hope we could get to that someday, but we're not there yet." End of quote. The Taliban are reportedly demanding that no Afghan women be allowed to participate in the UN meeting in Doha. Now, joining us to take this forward is Anju Gupta, security analyst and former DGP of Uttar Pradesh. Ms. Gupta, thank you very much for joining us on the program. Give us a background of the UN-led Doha meetings on Afghanistan.
Thank you, Parikshit. As you know, with the withdrawal of US troops from Afghanistan, Taliban became de facto rulers. And it raised the manner in which Taliban took over raised huge fears about instability in Afghanistan and across the region and beyond, as we've seen the impact of instability in Afghanistan on the global community. As it is, Afghanistan was witnessing huge humanitarian crisis, which has become worse since then. Within less than a year, Al-Qaeda chief Zawahiri was killed in a UN drone strike in Kabul, which raised further fears about the presence of terror groups in Afghanistan. There were already concerns about production of narcotics, and the human rights violation was becoming a big issue under the Taliban, especially because of the ban on the employment of women and ban on girls above 12 going to school. The inclusivity was not there, something that Afghans can't live without. I think it's a must. The engagement of the world was there on different issues. This time around, the world community, the global community, led by US, I would say, through the system of United Nations, continue to provide humanitarian assistance to Afghanistan even after Taliban takeover. But because of these variety of issues, public flogging, etc., many countries became very restless as to whether it was really prudent to continue to engage with Afghanistan or not, or whether the engagement was actually strengthening the hands of Taliban and not of common Afghan. So in the background of this, United Nations took initiative. The Secretary General took an initiative of creating this Doha format. The first meeting was held in May 2023, in which the United Nations invited the envoys and special representatives of key countries, over a dozen countries, and of international organizations. So this is the background of the Doha format.
Right. When it comes to the outcome of the first and second meetings, have they really led anywhere in terms of Afghanistan, its progress, its governance is concerned?
The first Doha meeting was actually called to deliberate informally with the key countries whether, in what manner, if at all, the engagement with Afghanistan should continue. Because engagement with Afghanistan in a way meant engagement with Taliban also, because they are the de facto ruler, even if not recognized. So in the first Doha meeting, there was unanimity that the world could not afford instability in Afghanistan, and that is why the engagement with Afghanistan must continue in any manner, which was already in the pipeline, bilateral, multilateral, humanitarian assistance, etc., etc. So this was the outcome of the first meeting, that engagement with Taliban, with Afghanistan was a must for making it more stable. And in the second meeting, which was held in this meeting, the United Nations did not invite either Taliban or other groups, as we call them, Afghan civil society, including women's group. But in the second Doha meeting, which was held in Doha in February 2024, both Taliban and civil society, including women group, were invited. But Taliban refused to come, saying that they wanted to be the sole representative of Afghans. So Taliban did not take part in that meeting, in the second Doha meeting, while the civil society and women group did take part in that, in some of the sessions with the global community. Taliban, of course, had a separate meeting after this big meeting with UN. The central message of Doha second was that somehow this format should try and get Taliban on board. They all felt that it is very important to get Taliban to become part of the Doha format, to take all these issues forward. And the United Nations has been saying this, and they're still saying it, that is part of the process. To expect that something will happen overnight is not possible. And we've seen, Afghanistan has been, involved in conflict for the last 4 decades. So this is largely what has happened in Doha 1 and 2.
Right. Now, Taliban is not recognized by any country as the government in Afghanistan. Now, what is the significance of them joining the third meeting?
So if we look at the Taliban's engagement with the world, many countries have opened up their offices, if not embassies. Many international organizations have set up their offices in Kabul. And about over a dozen countries have handed over their embassies to Taliban for their nominees to run those embassies. But this is without giving recognition, right? This includes China, where President himself received the ambassador. And Taliban is also flying its flag on its own embassy in China. Taliban have been part of many bilateral. You should see the kind, the frantic diplomatic activity Taliban undertake. Doha is kind of becoming a hub from where they operate. So they meet a lot of other ambassadors. They meet World Bank. They meet IMF. They meet UN representatives, and what have you. So Taliban have already been involved with the global community in one way or the other, even without recognition. Taliban are seeking economic support because this country cannot stand on its feet and they want recognition. So I think the big, big outcome of this could be that Taliban is now developing a stake in the global deliberations on Afghanistan. So I see that as a significance of Taliban taking part in Doha 3.
Right. My final question, as we're running out of time, Ms. Gupta, could you see some concrete outcomes from this meeting? And what has been India's level of engagement with Afghanistan since the Taliban took over?
Okay, I'll answer your second question first. India has largely gone with the international community in terms of supporting the multilateral, engagement with Afghanistan for the sake of Afghans, giving humanitarian assistance, opening a small technical office, and pitching in wherever the international community wanted India to pitch in. So to that extent, I think India's position, it appears, is one with the global community in terms of, on any of these issues. This is one. Second, the point that you raised was that what is the outcome expected? Well, Taliban has already scaled down its level of participation. The spokesperson is going to be leading the delegation. Pakistan has already started leveling allegations afresh against Taliban supporting TTP. And the civil society and women's group have been extremely critical of UN even holding this meeting. So I would say these three are going to be big obstacles. But nevertheless, I think one thing that this Doha 3 can achieve is if there could be some consensus with Taliban, for UN appointing an envoy. Because appointment of a UN envoy is directly linked to starting the process of intra-Afghan dialogue. So that could be maybe an outcome, but we don't know. Expectation from Doha 3 is not that high, in the face of three obstacles I've just listed. But it's a step forward.
As you said, be it 1, 2, or 3, it is a step forward, and it shows that Taliban has a growing stake in governance and also in the international arena, and people want to engage with them. But the framework is yet to be decided. Thank you very much, Ms. Gupta, for joining us on the program. Let's look at our final story on Global Eye. Iranians are voting to elect their next president following the death of their former president, Ibrahim Raisi, in a helicopter crash. It's a four-way battle between conservative Mohammad Bagher Ghalibaf, hardliner Saeed Jalili, moderate Masoud Pezeshkian, and conservative Mustafa Porham Madi. 69-year-old Masoud Pezeshkian is hoping for a breakthrough win against a divided conservative camp. The election in sanctions-hit Iran comes at a time of high regional tensions between the Islamic Republic and its arch enemies, Israel and the United States, as the Gaza war rages on. And with that, it's a wrap on this edition of Global Eye. Thank you for watching. Stay tuned to CNBC TV18. News and updates continue on the other side.
On YouTube. So get the first access to the most influential architects of policies and politics the key news makers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer.
Hello and welcome to this special program. After a median 20% tariff revision announced by Reliance Jio, Bharti also has announced its revised tariff plans affecting a median increase of 15% in prepaid tariffs and an 18% increase in its postpaid tariff base. This is effective the 3rd of July 2024. Now, telecom tariff increases have been long awaited. Companies like Bharti, Vodafone Idea and others have on separate